So very good morning everyone. So today we are going to start with the revision on the advanced financial management for the coming CA final examinations with regard to the paper AFM. So many chapters have been there, new chapters are added, and certain new chapters are given more importance in the exam. The trends have been changed. In the view of the latest trends that are going on, let us have the session on par with the examination. And first, very important thing before we start, last attempt question paper was very easy. When I have to say, from the student point of view, questions came from the past exam questions like that. This attempt definitely it will be tricky. It will be going to be challenged this time. So take reasonable care with the answer papers. Point number 1. Chapters that need to be given extreme care in the examination from the point of view of the last attempt. First, let me tell you that. First, care should be taken on mergers and acquisition, because the last attempt questions didn't come properly from that chapter. So today, we will be clearing that chapter as well. Please be very, very careful with the chapter mergers and acquisition. This time you can expect a 16 marks to 20 marks in that chapter. Chance is there. I'm not telling I didn't prepare question paper. I'm telling you from the point of view of the last question paper, I'm giving this answer. Did you get my point or not? Very, very important. First one, mergers and acquisition. Okay. Second one, very important is the second area. Very important after that will be the bond valuation. Bond valuation. Mergers and acquisition, bond valuation. Next one is a share valuation. Next one, share valuation. Okay. Next one, risk management. Market, confirm this time 8 marks question will be there. Risk management chapter. If my prediction goes right, if that doesn't come, okay, no problem. But if it comes, students are leaving the chapter. Did you get my point or not? They're leaving the chapter altogether. So if a question comes, you will be very happy. If doesn't come, the knowledge will come at least. If you totally leave the chapter, gone. So that is the chapter, risk management. Okay. Next one will be the portfolios. This is the first set we have to complete in priority to anything. Did you get my point or not? So anyway, derivatives we will cover. Everyone will cover, you will cover, I will cover, everyone will cover that. Problem is with these chapters. How many chapters came? 5. 5 chapters, yes. Those 5 chapters, please take reasonable care. Did you get my point or not, everyone? Let us begin. So, before we start with this session, let me first show you the overview of whatever is the syllabus we are going to cover first. Actually, the first day I reserved for risk management, but so many students messaged me that, sir, we are joining live from tomorrow onwards, we paid. So please take that risk management. We don't even know what is risk management chapter. So please take in the tomorrow session. Today you cover remaining, they said. So considering their request, first let us cover 2-3 other chapters. Tomorrow we will take the risk management. Listening? Latest I made one video in that I said, now first we will start with risk management. Seeing that many students message me, sir, we will join from tomorrow onwards. So we paid and we are joining. So please consider those 2 chapters in the next day. So second day we will consider, instead of the first day we will cover remaining topics. Clear to the point? Please see there, from the point of view of a practical point of view, there are chapters like okay, see here, securities analysis will be there. We will cover this chapter also. Security valuation, simply called as a share valuation, and bond valuation. Both will be there in the single chapter, share valuation and bond valuation. This chapter generally account for 12 marks to 20 marks in exam. Okay, it will come for 12 marks to 20 marks. 3 questions will be there from this chapter. Okay, security valuation, very, very important for exam. Security analysis, last attempt question came for 8 marks. Efficient market hypothesis. Okay, this time there is a chance to come one more time, but this time they can ask a question on run test. Okay, I will discuss about that. So next one, we need to concentrate more on this one. What is this? Derivative analysis and valuation. Anyway, we will consider that very, very important chapter. Mainly, please concentrate on mergers, acquisition, and corporate restructuring. Generally, this chapter will come for 8 marks minimum, and it may soar even up to 20 marks in the examination. Anything can happen in this chapter. Miraculous chapter, which we should never leave. So before we start with it, let us directly go into the chapter, mergers, acquisition, please. Whatever the book you are following, you can follow that. Need not be my book or some other's book. Whatever you are following, please open that. So whatever you are following, please open that. So the first chapter, we are going to start mergers and acquisition. First, let me give you overview of what they will ask in exam. On that basis, we'll start doing the problems and complete it. Okay, time given for this chapter is 2 hours. 2 hours we have to complete. So many areas which are applicable for exam. Let me first tell you what are all applicable. Number 1, first one they will ask about swap ratios. They will ask us about swap ratios. Please start going on writing. First one is a swap ratio. Swap ratio will be calculated using 3 things. Number 1, you can calculate using NAV basis. You can calculate using EPS as a base. You can calculate using MPS as a base. If you are using NAV as a base, NAV per share of selling company by NAV per share of purchasing company. Same, EPS of selling company by EPS of purchasing company. MPS of selling company by MPS of purchasing company. This will give you swap ratio. Make it very clear, this will give you swap ratio. Swap ratio is also called as a share exchange ratio, also called as compensation ratio. When they ask in examination, needless to say, they need not always use the word swap ratio. Sometimes in question they may ask calculate compensation ratio. At that time, don't tell sir, didn't teach in class. It doesn't mean calculation of swap ratio only. Clear? So this is a swap ratios concept. Second one. Shall we? Listen from here, please listen carefully. They will ask a question like undiluted EPS calculation. Which EPS? Undiluted EPS. Very careful question. See here, how question will come first, let me tell you. They will ask a question. AB is going for a merger. AB is going for merger. In that merger decision, A Limited, EPS is 6 rupees. Say for example, EPS means earnings per share is how much? 6 rupees. They will tell after merger, earnings of E Limited, the earnings of A Limited should not be diluted, should not be reduced, should not be diminished. Like that points will come. I repeat one more time. They will give 2 companies on acquisition, A and B. They will clearly mention there, after the acquisition, EPS of A Limited should not be diminished, should not be diluted. Then always remember, what should not be diluted? Remember always, swap ratio should be calculated on that basis. What you don't want it to get diluted, on that basis if you calculate swap ratio, dilution doesn't happen. Clear everyone? Question came, after merger, EPS of the company should not be diluted. Means what basis we need to take? EPS basis should come. If they ask undiluted MPS, what basis should come? MPS basically you should calculate. This is a model of the story. Everyone understood the concept clearly? Next. So this is undiluted EPS and undiluted MPS. So same logic is calculate swap ratio on the basis of that which should not be diminished or diluted. Number 3. So swap ratio on the basis of that which do not diminish after merger. Next one. Very, very important. Equivalent EPS or MPS. Where we will use all these, I will show you questions. 8 mark, 6 mark questions are there. I will show you there. Just write down first. Equivalent MPS. Shall we? Post-merger EPS or MPS into swap ratio. Post-merger EPS or MPS into swap ratio. Number 4. So equivalent EPS, equivalent MPS, post-merger EPS or MPS into what ratio? Swap ratio. Next one. Synergy. Most important for this attempt. Question 90% will come this time. No doubt in that. Because last 2 attempts the synergy question didn't come. Okay. There is every chance this time synergy question can come. For this I will show you the format when we come to the concept. Listening? Let's not waste even a single minute time. With these basic things that we know, let us start doing the problems on the study material directly. Listening? Okay, let us start. So mergers and acquisitions is a chapter we are going to take. For each model we will do one question. Okay. See there. Come to question number 1. Mergers and acquisitions study material. Everyone had the study material with you? Study material. Sir, why I am taking study material means I can also take my material, but everyone may not have my book. Commonly everyone will have study material. You got my point? Okay. Sir, if you don't have also, no worry. See there. Okay, nothing will happen. Read the question first. Sir, listen. Every model, one problem I am going to do. Do you understand me? Every model I will do one problem. Means each and every concept we will do one problem and we'll go to the next one. Let's read the question. B Limited is highly successful company, wishes to expand by acquiring other firms. Its high growth in earnings and dividends are reflected in its PE ratio of 17. Board of Directors of B Limited has advised that if it were to take over the firms with lower PE ratio than its own, using a share for share exchange, then it could increase its reported earnings per share. C Limited has been suggested as a possible target for takeover, which has a PE ratio of 10, 1 lakh shares in issue, share price is 15. B Limited has 5 lakh shares in issue and share price of 12. Listen what he asked. Calculate the change in earnings per share of B Limited if it acquires the whole of C Limited by issuing its shares at 12 rupees. Assume the price of B Limited shares remains constant. Read the question first before we start with the solution. Second question is synergy. So model 1 question we will start doing and complete it. Please read the question, sir. Don't waste even a single minute time. We'll start doing. Done. Enough time taken for the reading the question. First answer my question now. Please see here. Point is, B Limited is a highly successful company wishes to expand. First thing, answer my question. How many companies are there? Sir, please don't sit idle in the class. We have little time only. Okay. So please complete as soon as possible. If possible, if you cooperate, I will extend the class also by half an hour, 45 minutes, and I will complete all the points, whatever I wanted to take. Clear, everyone? So please answer my question. How many companies are there in the picture? 2 companies are there. Who is the acquiring company? Who is the selling company? If you make mistake in this corner, who is the acquiring company here? Second? First thing in mergers acquisitions chapter, step number 1, even before you start, first thing you prepare a schedule, putting the numbers for respect to companies in a proper way. Shall we start? Give the heading. Illustration number 1. First, particulars, make it very fast, don't give more importance for presentation now. B Limited, C Limited. Now, one by one I will ask question, C and answer, that's all. First tell me, whatever information is available, first to put the numbers there. What is the PE ratio of B Limited? Write down, PE, 17. Next information available. What is the PE ratio of the other company? 10. Okay. Next information also combined. Next, how many shares are there with C Limited and with B Limited? 5 lakh and 1 lakh. Have you seen? I'm talking with you. Have you seen there? Next, after that, what is the share price of B? What is the share price of C? MPS we call. What is the MPS of B? 12. What is the MPS of C? 15. Okay. Is there any other information available? No. Now listen carefully. 1 minute, listen. This is the information he asked. With this information he is asking, listening, with this information he is asking, calculate the change in EPS. Calculate the change in EPS. I will ask a question first. Tell me, what is the swap ratio? What basis we need to use? Listen again. See, other problem with the mergers chapter. Answers once you have on hand easy. But if a question comes difficult, I repeat one more time. Don't see the answers. This is not a time to see the answer. This is a time to learn about the concept and complete the concept fastly. Now this is the information they have given. Correct or not? Tell me, what is the base? Problem shall I tell you? You might have already done this problem when you are preparing. So already something is registered in mind. Please don't tell that way. Because if a new question comes in exam also, you should be able to do. So tell me now, answer. What is the base? Are the MPS base, EPS base, NAV base? One thing is clear, it's not NAV. So over, ruled out. Only 2 options are available for you. Tell me, what is that? EPS, MPS. Tell me now. EPS, MPS? MPS. Shall I tell you why? I will ask you a question. Listen. When base is taken as EPS, there is no change. Then why to calculate the change? Just now I told you before we start. If you want anything not to get diluted or changed after merger, calculate the swap ratio on that basis only. Do you remember just now I said undiluted EPS? For example, I don't want EPS to change. Base should be EPS. Here he is asking change you calculate. Did you get the point or not? That is hint number 1. Shall I tell you the greatest hint he has given? This is not the main hint. 1 second, see there. I wanted to acquire at what price? Read, what price? Market prices. Simply they are telling that acquisition will be on the basis of what price? Market price. By giving how much per share? 12 rupees per share. So see there now, I will ask you a question. First answer. Who is acquiring whom? B is acquiring C. Lastly, see here. Calculate the changing EPS of B Limited. If it acquires C Limited by market price. Which base? market price baseline, if it pay and take, what will happen? This is how questions will come in exam in mergers chapter. At that time in exam, you should not get confusion. Listen again. Sometimes question directly they will tell calculate on the basis of EPS, MPS, like that they will tell. Sometimes indirectly they will tell this way. These questions are more dangerous in examination. Nothing they will tell. From the information you should understand what is the base for calculation of swap ratio. Did you get my point? For example, by mistake you have taken EPS. What will happen? Change 0 0 will come. Then you will write there is no change. Then they will write no marks. So, calculation time easy. Understand the question properly first. Who is acquiring whom and on what basis they are acquiring? B is acquiring C on the basis of market price of 12. C limited, what is the market price? See there in tell ya? 15. What is my market price? 12. On that basis only I will acquire you, he is saying. So market price is the basis of acquisition. Shall we do the problem together? Start. Just 2 minutes so we can complete the answer. Write down. Step 1. Fast. Calculation of swap ratio on the basis of MPS. Formula please. MPS of C limited by MPS of B limited. What is the MPS of C limited? 15 divided by 12. Answer please. 1.25:1. Sir, can you please explain what is the meaning of 1.25:1? For every 1 share of C limited, 1.25 shares of B limited will be issued. Listening everyone in the class? For? Answer sir. For every 1 share of C limited, 1.25 shares of B limited will be issued. One second. Problem solving, I don't have problem with any of the students, we will do. I'm asking on logic, tell me, what is the meaning of that? Ratio meaning illa. What is the meaning of that 1.25? No. Shall I tell you the meaning of that 1.25? Listen. Problem in these questions are, they will ask sometimes to comment on the deal. So at that time you should understand properly. 1.25, that you need to keep in mind. Who is acquiring? Who is getting acquired? What is the value of C? A 15 rupee company was acquired by a 12 rupee company means I am going down, I am going up. Did you understand my point? From the market price point of view, a company whose market price is how much? 15 is acquired by a person who is giving 12. I am going down or going up? Going down. Therefore, I should not go down. In a deal, no one should be worse off. Both should be in advantage. Therefore, give 1.25 of your 12 rupee shares, which will be equal to 15. Do you understand the point or not? 1.25 into 12, how much? Don't calculate, you can believe me. 1.25 into 12, how much? Tell me, what is my price? 15. What is your price? 12. You are giving your 12 rupee for 15 rupee. What is this deal? Saddest deal. It should not be like that. There should not be worse off in any of the deals. Therefore, you do one thing. For 1 share of mine, you give 1.25 shares of your 12 rupee share, such that I will be compensated equally. That's the meaning of this. Start doing. Step 2. Step 2. I will ask a question. First tell me. EPS given or not given in the question? But we can calculate through MPS and PE ratio. Calculate through MPS and PE ratio. Tell me, what is the formula for EPS? What is the formula for EPS? Sir, simple logic, see here. P by E equal to 17 they have given, correct? Answer sir. Price is available. 12 by earnings equal to 17. So earnings equal to how much? 12 by 17. Tell the EPS calculation. MPS by PE ratio. Step 2, write down. Calculation of EPS of B and C limited. B limited, C limited. MPS P ratio. So please tell me what is the MPS? 12, 15. P ratio 17, 10. EPS please tell 0.705. Next one, rupees 1.5. Don't copy, sir. What is the formula for EPS? MPS by P ratio. MPS by P ratio. What is MPS by P ratio formula? What is the answer? MPS by P ratio equal to EPS. Because MPS equal to EPS into P ratio. There is a formula. MPS equal to EPS into P ratio. If you want EPS, what will happen? MPS by P ratio will become EPS. Shall we continue? Next one. Step number 3. Step number 3. Write down. Number of shares after merger. Number of shares after merger. Sir, please answer. Please answer. How many shares are there with B limited already? How many shares are there with B limited already? How many new shares we are going to issue to C limited? We are issuing 1 on 1, 1.25 to 1. Answer. Tell me. After acquisition, B limited shares will be standing at how much? Sorry. B limited shares will be standing at how much? 5 lakh. C limited shares will be 1 lakh into 1.25. So tell me how much? 1 lakh 25,000. So totally how much? 6 lakh 25,000. Right down. Calculated? Done? 6 lakh 25,000. Step number 4. Calculation of EPS post merger. Calculation of EPS post merger. Calculation of EPS post merger. First, please tell me one answer. Shall we? If sir, what is the EPS answers we got? Can you please tell me here? 0.705, 1.5. Please tell me. So please concentrate. If B limited is independent company, B limited is a independent company without acquisition, earnings will be 5 lakh into 0.705. Correct? If C limited is independent company, 1 lakh into 1.5, 1.5 lakh is the earnings of C limited. Correct? Now both the companies are merged, means earnings also will get added. But that earnings are shared by 5 lakh shares, 1 lakh shares, 6 lakh shares, 6.25 lakh shares. Ade EPS post merger. Did you understand what I said? Start doing, sir. EPS post merger. Write down the formula that such that you will remember. Earnings post merger divided by number of shares post merger. Earnings post merger. Earnings post merger. You should see and tell, sir. Don't copy the answers, please. Support me. Tell me what is the earnings of B limited? 5 lakh into 0.705. Tell the answer. Please, 3 lakh. 52 500 plus 1 lakh 50,000. Whole divided by how many shares are there after merger? 6 lakh 25. Please total them and tell the answer. 0.804. Can you please tell me what is this 0.804? 1 second. This is the EPS of, this is the EPS of whom? B limited, C limited, after merger B limited, after merger B limited, after merger B limited. Shall we continue? Next, step 5. calculation of change in EPS. For this only he has all those things. Calculation of change in EPS. Shall we? Okay. Now, see here. How many companies are there? Two companies. What are the two companies? B Limited and C Limited. First, listen carefully. What is the EPS pre-merger? See there and tell everyone. Write down 0.705, 0.1.5, 0.1.5. Next, EPS post-merger. Tell me, what is the EPS post-merger? 0.804. And C Limited, what is the EPS? C Limited, 0.804 should not be taken. It should be 0.80. Sir, first, one second. I will tell you the logic. Don't mug up the concept. Read out this. Expand. Earnings per share. Of which company? B Limited after merger. B Limited. Now tell me, I being C Limited, I am C Limited, okay? I have 1 share to 1 share in this company. I have 1.25 shares. Therefore, EPS, I should not take 1 share. I should take for my 1.25. Are they equivalent EPS formula? Did you understand the point or not? First, I make you to write one formula. Equivalent EPS. That is this only. Equivalent EPS means post-merger EPS into swap ratio. Listening or not, everyone? Logic, did you understand? Let's start. Mine is not 0.804. Mine is 0.804 into 1.5. Tell the value. 1.005. Okay. Now, finally write down gain or loss. Brackets loss, gain means in positive number you need to write. Tell me, what is the first gain? 0.099. What is the loss? 0.495. Sir, everyone understood the concept clearly or not? Sir, everyone in the class understood? Okay, see here. One second. Okay, see here once. Sir, please, I just want you to answer. See here. We have taken how many digits, sir? Can you please tell me? We have taken how many digits? 3. We have taken 705. Instead of that, institute has taken how much? 71. We have taken 805. Institute has taken 80. Is a problem with inconsistency in the answers. Steady material answers, the problem is in one point they will do in one way, in another point they will do in another way. See, it is 0.805. They should take 0.81. Next one is 0.705. They have taken 71. So this will only confuse us because these are all answers taken in Excel. You get the point or not? Excel, zeros addition will be there. In that they will close sometimes, in that they don't close sometimes. That's a problem with all these things. So don't take the number so seriously, because anyway this is not the key given to the institute when you write exam. First page of the book they will write answers given in this book are not discussed with the examination council of ICAI. This is not the key. Don't be under wrong impression that these answers will be there in the key which will be used for valuation. Never it will happen. This is prepared by BOS. Answers are given by the council of examination ICAI. Those answers no one know. Are you understanding or not? See, I'm not joking. First page they will write. Study material beginning first page they will write the disclaimer. These answers are not right answers. Don't. Are you mugging up the answers? 0.71, 0.80. Gone. Gaya. Goodbye. Follow your concept. Follow the heart. That's all. These answers don't follow so seriously. Lot of nonsense will be there. So therefore, point is, Sir, exam la you do with 3 digits always. Did you get my point or not? Then accuracy also will be there in your answer. Listening? Okay. So first tell me, everyone understood all the calculations clearly or not? Okay. So we completed one question from the first way where we calculated so many new things that we have to learn. Those are completed. Next, let us come to one very popular question. Question number 17. 17th question in the study material. This question came for around 9 to 10 times in exam. Extremely popular question. So let us read the question. Time given for this is 10 minutes. Reading ki 2 minutes, doing ki 8 to 10 minutes. Maximum 10 to 12 minutes. Read the question first. Start. The following information is provided relating to the acquiring company E Limited, target company H Limited. Okay, next. Number of shares 10 is 7.5. Market capitalization, PE ratio, reserves and surplus, promoters holding. Board of directors of both the company have decided to give a fair deal to the shareholders, and accordingly for swap ratio, the weights are decided as 40%, 25% and 35% respectively for the earnings, book value and the market price. Calculate swap ratio and also calculate promoters holding percentage after acquisition. What is the EPS of Efficient Limited after acquisition of Healthy Limited? What is the expected market price per share, market capitalization after acquisition, assuming PE ratio remain unchanged? Calculate the free float market capitalization of merged firm. See here, once see the screen, just for your kind confirmation. 17th question, 18th question same, 19th question also same. So like this, repeated questions are there. Let's do one question out of them. Listening, sir, everyone. After that, we go to synergy area. Okay. Like the, after that, we will go for corporate restructuring. Then after we will go for internal restructuring. Then after we go for mergers. Different RTP questions also I have. Let us do all those. We'll get confidence on mergers chapter. Okay. Please see the screen. Take 2 minutes time. Read the question properly. What all we need to solve. First question he is asking is calculation of swap ratio. First tell me, in this question, swap ratio is calculated on MPSI, EPSI, NAV, all the three. Answer. And all the three mean 3 times we will pay, na? No. We are going to take an average of all the three. We are going to take what? Average. When you take average, take weighted average, not the simple average. What average? Weighted average, not simple average. Then what are the weights? They there. 40, 25, 35. But careful. 40 given for EPS, 25 given for NAV, and 35 given for MPS. Book value per share is also called as a NAV per share. Book value per share is also called as a NAV per share. Shall we start doing the answers, everyone in the class? Let's do. Start. One by one, let us start. Maximum 8 minutes if you complete. Exam also you will do in the same fast. Question number 17. Let us start. First one. Swap ratio. First, sir. Swap ratio, please fastly let us calculate. MPS basis you do first. MPS of H Limited by MPS of E Limited. Please tell me what is the MPS of H Limited? Had he given or not given a? See here once. See here. 500 lakhs is the total value. 750 lakhs is the total value. If we divide them, we will get the MPS or not. So tell me, 500, 750 are MPS or market value? Divided by number of shares means what you will get? Market price per share. 500 by 10. 50. Next, H Limited. 750 by 7.5. 100. How much? 2:1. 2:1 over. B. EPS. See the question and tell EPS given or not given? Just now I told you in the last question, when MPS PE ratio available, but EPS is not given. What is the formula? Please tell me. EPS equal to MPS by PE ratio. Directly you do. EPS of H limited by EPS of E limited. Please everyone answer. Take calculators. What is the MPS of H limited? 100 divided by the PE ratio 10. How much? Divided by? The 5. H limited and 5. Answer sir, how much? 20. Divided by EPS of E limited. 100 divided by 10. How much? 100. One second. What is the MPS of E limited? 50. 50 divided by 5. How much totally? 5. How much? 4:1. So tell me, what is 2:1? What is 4:1? We will pay 2 shares, we will pay 4 shares. No. 2:1 is one of the base. 4:1 is another base. Now we will calculate the third one. What is the third one? NAV. See. Book value also called as NAV. Be careful about this. 1 minute. Let me explain one point. After that you do start. Listen. Whenever question is given on book value, book value is also called as a NAV. NAV is also called as a net worth. NAV is also called as what? Net worth. Net worth is a concept where equity share capital plus resource and surplus. Everyone please repeat what it is. See the screen once. When you take equity share capital, take book value, not market value. Tell me, how many shares are there? 10 rupee share, 10 lakh. Means how many lakh shares are there? 1 lakh. Here how many lakh shares are there? 0.75 lakh. Correct or not everyone? Now answer. Number of shares are there. Totally the book value is 10 lakh and 7.5 lakh. Correct or not everyone? See here. This is number of shares. This is per share. Clear everyone? 1 minute. We'll do this way. Number of shares. How many lakh shares are there? 10 lakh. How many lakh shares are there? 7.5 lakh. What is the face value per share? 10 rupee. So total book value is how many lakhs? 100 lakhs. Here how many lakhs? 75 lakhs. Okay. So totally 100 lakhs and 75 lakhs. What is 175? Market value or book value? What is the resource and surplus given in the question? 300, 165. So 300, 165. Please make the total here. How many lakhs? 400 lakhs. Here what is the total? 240 lakhs. What is 400? What is 240? 400 is the book value of E limited. 240 is the book value of H limited. We want book value per share. Per share we calculate and we will do the NAV basis. Shall we all do that together? Please do that, sir. Keep the heading clearly. Write down E limited, H limited. Workings you do. Complete everything in the class itself. Start. What is the equity share capital book value? Directly you do. Calculator you do. How much it is? 10 lakh into 10, 100 lakhs. Next one, 7.5 into 10, 75 lakhs. Reserves and surplus, 300, 165. Book value, 400, 240. Number of shares, 10 lakh, 7.5 lakh. Book value per share also called as NAV per share. Rupees 40, rupees 32. Swap ratio equal to rupees 32 by rupees 40. Value please. 0.8:1. 0.8:1. Have you completed, sir, everyone? Done? Shall we go to the next step? Next one. So now we need to calculate. Keep the heading. Step number 1 lane debit. Weighted average swap ratio. Weighted average swap ratio. Sir, please carefully you see there. Weight given of 40% is for EPSI, MPSI, NAV. So 40% apply for EPS. 0.4 into, see there EPS, what is answer? 4. Plus, next 0.25 is given for what? Book value. Next one is 0.35. 0.35 is given for what? Market value. How much? 2. Please, everyone calculate. 0.4 into 4, 0.25 into 8, 0.8. 2.25, yeah? 2.5. Okay, 2.5:1. Sir, can you please tell me what is 2.5:1? For every 1 share of H Limited, 2.5 shares of E Limited will be issued. Okay, that's it. Next, second step. Step number 2. Promoters holding pre-merger. If you see, they asked in the question. See here, sir. Calculate the swap ratio and promoters holding. Oh, after acquisition. Oh, okay. Post acquisition. Promoters holding post acquisition. Okay. Sir, please answer to my question. Please, everyone, listen. How many number of shares are there in the company before? 10 lakhs and 7.5 lakhs respectively for both the companies. Correct? After acquisition, please tell me, can we calculate the number of shares or not? Write down, sir. A. Number of shares post merger. Number of shares post merger. Number of shares post merger. Please help me. How many shares are already there in the E Limited before merger? Write down 10 lakh plus for 7.5 lakh shares other company. Sir, I am talking with you, sir. 7.5 lakhs. For 7.5 lakh shares, we are going to give 7.5 lakh shares. So we are giving 2.5 times of 7.5 lakh shares. Right down. How much? 10 lakh plus 7.5 into 2.5. 18.75. So totally how much? 28.75 lakhs. 28.75 lakhs. Okay. Can you please tell me what is this 28.75 lakh? Shares of E Limited pre-merger, shares of E Limited post-merger. After merger, this will be the number of shares of that particular company. Which company? E Limited after the merger. Okay. Now he is asking a question. We didn't even complete the first bit. What he is asking here? Promoters holding percentage before acquisition, after acquisition. Please see that. Sir, please concentrate. What is the promoters holding in E Limited before merger? Loudly, sir. That will change or will not change? Will not change. How much promoters are holding in H Limited? These 5 lakh will receive 5, will receive 5 into 2.5. That means we can know the amount of shares of promoters after acquisition or not. That we need to take as a percentage on 28.75 lakhs. Did you understand what I said? Let's start. B. Promoters holding percentage post. Please tell me, how many promoter shares are there with E Limited before merger? 7.5 lakh. Plus, very, very important is, how many number of promoter shares are there in that other company? 5 lakh. 5 ki 5 we will give, or 5 into 2.5 we will give? 5 into 2.5. Tell me how much? How much? 12.5 lakh. This 12.5 is obtained as 5 into 2.5. Tell the total value, sir, please. 17.25 lakh. C. Promoters holding percentage on 28.75 lakh. Yours is 17.25 lakh. 17.25 lakh divided by 28.75 into 100. 60%. 60%. Tell me, 100% promoters are holding how much? 60. A 40 is called as a free float. 40 is called as what? Free float. Remember again, 40 is called as what? Free float. 60 promoters, 40 free float. Understood? Main bit we completed here. Next come to the second bit. First bit over. Second bit. EPS of Efficient Limited after acquisition of Healthy Limited. Sir, please don't just copy here. Answer and tell how to calculate. Just one problem we have done now. How to calculate EPS post-merger? Earnings post-merger divided by number of shares post-merger. Loudly everyone. Earnings post-merger divided by number of shares post-merger. First question for you. See the question and tell. Can we know the earnings of this company or not? You calculated EPS. EPS into number of shares pre-merger will give you the total earnings or not? Divided by how many shares? 28.75 lakh shares will give you EPS of this particular company post-merger. Am I right? Tell me. Step 2, write down. Step 3, calculation of EPS post-merger. Earnings post-merger divided by number of shares post-merger. Tell me. This is your work now. I will put the EPS numbers before you. Please calculate. H limited is 20, E limited is 5. Number of shares, the multiply and tell the value. Tell me, rupees 5 into how many lakh shares are there in first company? 10 lakh. Rupees 20 into 7.5 divided by 28.75 lakhs. 6.956 then 6.96. Sir, please don't copy. It is hurting me. No need. Here no need. They normally ask to calculate EPS after merger, that's all. Calculate up to here. What is the answer? 6.96. So first tell me, 5 into 10 lakhs. What is that 5 rupees into 10 lakh? Can you explain? Sir, two companies, one second. Independently, if E is there, my earnings are 50 lakh. Independently, if H is there, my earnings will be 150 lakh. We are now combined. Combined means both earnings will combine. Both earnings will. Tell me. Two problems we have done on the same way. What is the assumption of all the two questions? Synergy is not there. If synergy is there, what will happen? We will see in the next part. Did you get my point or not? Synergy not there is, this is the answer. If synergy is there, we will see that. No synergy cases, this will be taken. Clear everyone? Tell me, how much is the earnings of me? 50. Your earnings 150. Both together 250. Divided, when I combine both, you should combine also the shares. Therefore, post-merger 28.75, sir, you got 6.96. Ma'am, now you can ask the doubt. You ask something? No. Earning, promoters ki one earnings, free float ki other earnings will not be there. Earnings will be there for every share equally. Sir, anyway, sir, everyone up to here, everyone understood clearly? 6.96, done. Next, step number 2 also completed. Now, I will ask you a question, tell me. Step number 3, he is asking us to calculate expected MPS and expected market value after acquisition. Keep the heading. Step number 4. Step number 4. MPS post merger. Step number 4. MPS post merger and market value post merger. Market value post merger. This is your time to tell the answer. Everyone, answer to my question first. Tell me. MPS post merger, he asked. Tell me, what is the formula for MPS? EPS into PE ratio. Loudly, everyone. EPS into PE ratio. You are asking pre-merger or post-merger? So every number should be post-merger only. EPS post-merger, you have the value already. Answer, sir. MPS, sorry, PE ratio already he said that it will be constant. Now tell me, who is acquiring? That PE ratio you need to take. What is the PE ratio of E? 10. What is the EPS of post-merger? Both if you multiply, that will be called as the market value post-merger. Write down. MPS equal to EPS into PE ratio. Okay. What is the EPS post-merger? 6.96 into PE ratio 10. How much? 69.6 lakhs. 69.6 lakhs. What is that 69.6 lakh? MPS per share after merger. Okay, below. MV. One share ki 69.6. We are having how many shares? 28.75 lakh shares. 6.96 into 28.75. 28.25 or 75? 75. Multiply that. 2001. Almost 2000 lakhs. 2000 lakhs. Now tell me, what is the last question? Last question. Another bit is there. How many bits we completed? 3. Fourth one. Tell me now. One second. In the 2000, 2 branches you make directly. Tell me. In the 2000, how much belongs to promoters, how much belongs to free float? Tell me. 60% belong to the promoters and 40% belongs to the free float. Values. 1200, 800. He is asking promoters value or free float value? Free float value. Clear, everyone? Done. Now please tell the answer, sir, everyone. Check the answers. You need not open the material. I will only show you the question. Just confirm the answers, that's all. One by one, all the points I will show you. Okay? Now, tell me. First point. Had we got the answer as 2.5 or not? First bit. 28.75. 2000 lakhs. So they got how much? 1999.85. Almost equal to how many lakhs? 2000. Next one, 799. Almost we got 800. Correct or not, everyone? That's it. Answer is completed. With this, we completed 2 types of questions on. One is on normal calculation. One is on a weighted average swap ratio calculation. Shall we go to the third one now? Okay. Next. Good questions only. Let us take and complete. These all questions we will do, no worry. Okay. Now, I will ask you one question. Take question number 3. Take question number 3. Study material, take question number 3. See the question. MK Limited is considering acquiring NN Limited. Following information is available. See the question there. See the question there. If you don't have book also, no problem. Similar questions are there also in my textbook, but no problem. You can see the study material directly first. MK Limited, NN Limited. Earnings after tax, number of shares, market value per share. Exchange of equity shares for acquisition is based on current market value as above. There are no synergy advantage available. Find out the EPS for MK Limited after merger. Find out exchange ratio so that shareholders of NN Limited would not be at loss. Did you understand what I asked? I will ask you a question clearly. First tell me. Answer. One second, tell me. Earnings after tax of both the companies are given or not? Answer, sir. Can we calculate the EPS on the basis of number of shares and earnings after tax? Next, market price per share also given. First question is asking is, find earnings per share of MK Limited after merger. Now tell me, basis is what? 1 second. What he asked to calculate? EPS. Based on what? Current market value and current market price. Tell me now. I want 2 questions from you. Basis is NAV, EPSI, MPSI. Loudly? Very loudly? MPS. You will get one answer. When you do that, EPS will be diluted or not diluted? Definitely it will dilute. If you don't want it to get diluted, what you need to do? Swap ratio should be on the basis of EPS. Did you now understand how the questions will come? Answer, sir. Tell me what you need to do for this first. EPS. Will you do this question now? Start doing very fast. 4 minutes only, because this is a 5 marks question. Start doing, sir, everyone. Don't see the answers anywhere. Just try to do that. But question is different. Don't write selling company, purchasing company in exam. Write the names of companies. First tell me, what is the swap ratio? Answer. EPS by EPSI, MPS on MPSI. MPS on MPS. 160 divided by 200. Value please. 0.1. Number of shares issued, please tell me. 1 share ki 1.8 shares means 3 lakh ki how much they have to issue? 2,40,000. Already how many shares are there with them? 12 lakh. Total it will become how much? 14,40,000. 14,40,000. On this basis he is asking earnings. 78 lakhs divided by 14,40,000. Value please. 5.42. 42 exactly, yeah? Then 42. 5.42. What is 5.42? Can you please tell me? EPS post merger. Okay, done. One question completed. Now he is asking, find out exchange ratio so that shareholders would not be at loss. Tell me. Shall we? I will ask one question. Will you please tell me? Tell me. EPS post merger is how much? 5.42. Calculate the loss for the shareholders of NN Limited now. Calculate the loss caused to the shareholders of NN Limited. He didn't ask. I am asking you to do. Calculate the loss. Sir, already, 1 second, sir, please answer. 18 divided by 3, how much? 6. Now it became how much? 5.42. Means they are having a loss or not? That loss he is asking, it should not happen. Did you understand or not, everyone? Tell me. 6 minus 5.5, 5.42. Point. Is it gain or loss? Loss. 6 became 5.42 for me. This loss should not happen, means basis should be MPS, basis should be EPS. So that's all. So tell me, what is the EPS base answer? Swap ratio on the base of EPS. What is the EPS, sir? 5 divided by 6. Sorry, 6 divided by 5. How much it is? 1.20. See here. What is the question number? We completed now question number 3. See here. What is the answer? 5.42. Next one. How much? See here. They have done this calculation and they have shown the final answer here. So the point is, if you wanted, see, exchange ratio on what basis is recommended? Earnings per share. So simple answer for all your questions. In examination, if a question come, EPS should not be diluted. Basis should be on the basis of EPS. MPS should not be diluted. Basis should be on the basis of MPS. Come to the next synergy questions. I have one very important question for you to ask, which was asked in examination already. These are all small questions. I am not going to do and waste your time. Directly come to one good quality question. Okay, take question number 2 once. Synergy basic question. Question number 2. Question on synergy. See here. Elrond Limited plans to acquire Doom Limited. Relevant financial details of two firms prior to the merger announcement are as follows. MPS and number of shares. 50 and 25, number of shares 20 lakh and 10 lakh. Merger is expected to generate gains which have a present value of 200 lakhs and exchange ratio is 0.5. What is the true cost of the merger from the point of view of Elrond Limited? How to do synergy questions? Can anyone tell? First we will start with that. So whenever question comes normally without a synergy, to earnings we will add, correct or not? Now to earnings just will not be added. Along with earnings, what also will be added? Answer? This is a wrong assumption. First thing, no. Always in synergy, market values will be added, not the earnings. What will be added? Market values will be added, not the earnings. That's why they don't even give you earnings here. Listening everyone, what will be added? Market values will be added, not the earnings. Okay? So listen carefully. That's the first point. Synergy always should benefit the stock markets. EPS will not be quoted in stock market. What will be quoted in stock market? Market values will be traded on stocks. Therefore, that should have the synergy. Synergy to the investors. Listening or not everyone? Please see the question once. How this particular answer has to be given? See here. See here once. Whenever a question comes on synergy, I will tell you one format. Follow that format. I really promise you, any question that can come in examination, worst case or best case, take for your granted. You will be able to answer. I mean any question. I will give you one format. Put the numbers in that format. Answer will automatically come. Okay? You need not do any extra effort for that. Just to put the numbers in the format. But that format has a logic as well. What is the logic? I will tell you. Shall we write? Please write down, sir. Copy down the format. At least you will remember up to exams. No hopes after that. That's why. Even if you forget, no problem. To write the exam, you should have a clarity. Step number 1. Write down. Calculation of post-merger MPS. Calculation of post-merger MPS. MPS of purchasing company pre-merger. MPS of selling company pre-merger. Okay? MPS of selling. MPS or MV, anything you can write. Market value also you can write, no problem. So market value of merged company pre-merger plus synergy that will be the market value of merged firm post merger. Market value of merged firm post merger. Up to here understood everyone? Tell me what we calculated, can you please explain? First, what we calculated, can you please explain? Market value of what we calculated? Total company's market value we calculated and we kept the numbers here. Hello, everyone understood? Now, what is the thing you need to do? Put the problem and the numbers here. Question number 2 directly. What is the market value of Elrond Limited before merger? 50. Market price 50. How many number of shares are there? 20. 50 into 20 is how much? 1000. Put there. So we are doing only revision. Don't give importance to neatness and all now. Do the problems, more number of problems, that's all. Okay. How many lakhs are everyone? 1000 lakhs. Tell me. Yes company, selling company, Doom Limited, 25 into 50. How much? 250 lakh. Independently they are having a value of how much? 1250. Question lone they have clearly given that there is a synergic benefit of how much? 200 lakh. Tell me what is the total market value? 1450. Okay, why everyone? This is step number 1. Now tell me, this will be, so please listen, this will be having a number of shares post merger or not? Tell me, number of shares post merger. See there and tell. Already I am having 20 lakh shares. For them, I am going to give an exchange ratio of how much? 0.5. Under 10 lakh into 0.5. Means how many shares will come? 5 lakh. Totally 20 plus 5. How many lakhs? 25 lakhs. MPS post merger. Please tell me the value. How much, sir? 58. So this is the answer. So 58 is the market price per share post merger. First question, everyone understood the answer clearly? Okay. Next. Number 2, what is the second question he asked? What is the true cost of the merger? What is the true cost of the merger? Please answer to my question first. Please. How many shares are there in Doom Limited? For that we are giving how many? Answer. At what price we are going to give? 5 lakh will be given at a price of how much? 58. 5 lakh will be given at a price of how much? 58. Please tell me. 5 lakh into 58. 5 into 58. 290. What is the 290? Cost paid by Elron Limited. To which company? Doom Limited. How much we are going to pay them? 290 lakhs. Right on. Calculation of cost of merger. Calculation of cost of merger. Calculation of cost of merger. Okay. Now listen carefully. Calculation of cost of merger. You can do along with me. First tell me. MPS of merged company. How much is the MPS of merged company? 58. Number of shares to selling company. How many number of shares we are going to give? 5 lakh. Cost of merger equal to how much, sir? Cost of merger will be 290 lakhs. Okay, how much it is? 290 lakhs. Sir, listen. This question they asked in examination for 5 marks. Therefore, we did answer also up to whatever is required and we left. Please see the screen once. See here. Tell me. How much is the first value he calculated here? Please tell me, sir, everyone. How much is the value calculated? 1450. Next one, how much he calculated? 290. Correct or not, everyone? Okay. See here now. I will give you one example. This is the cost of merger. This is what? Cost of merger. Step 3. Write down. Step 3. Calculation of net cost. Calculation of net cost. See the question. Please don't sit idle, sir. Please the question once. Please see the question. I will ask a question. Tell me. How much you are paying for this company? I repeat. How much we are paying for this company? Loudly. Wrong, sir. Shall I tell you why? The company which is coming to you is coming with open hand, free hand, sir. It is coming with a value. I repeat one more time. Which company is coming to us? D Limited. D Limited is having how many shares already? How much is the price per share? And what is the value already there? Until you are not acquiring a zero value at 290. And Sunyam value you are paying them 290. Yeah? Already it is coming with how much with you? Answer, sir. I am coming with 250. Pay something because of that synergy. Listening or not, everyone? So already I have 250. I am not coming with bare hand. I am having 250 with me. With the 250 lakhs I am coming to you. Because of me coming to you, you are getting some synergy or not? In that synergy I should get a share. Did you get the point or not? So net cost is how much? Tell me. How to write? Do you know net cost? Write down. Write down, sir. Purchase consideration minus pre-merger market value of selling company. Pre-merger market value of selling company. This format. Purchase consideration minus. Sir, the second step calculation of merger is also called as calculation of purchase consideration. 290 lakhs we are paying. Purchase consideration 295. That does not mean entire thing is your cost. Listening? In that it is already coming with a value of how much? 250. So your net cost of merger will be 40 lakhs only. Listening, everyone? Okay, na? Now, see here, this is the answer given by the study material also. What is the answer, sir? 40 lakhs. Did you understand the answer clearly? Sir, I will ask one question, tell me. How much is the synergy? Is synergy. Answer. Now question. If I add another question in exam, distribute the synergic benefits to purchasing and selling company means what you will do? Distribute the synergic benefit to which and which company? Purchasing and selling means what you will do? Do you know what you should answer? 40 will be given to the selling company, 160 will be given to the purchasing company. That's the meaning of that 40. Are you understanding or not? In the total 200, the 200 came because of you or because of me or because of both? Both. My share is 40 in that, your share is 160 in that. That's the meaning. Listening? Okay. They didn't ask, just write down there share of benefits. Share of benefits. Branch it into two parts. Fast. Share of benefits. Share of benefits. Branch it into two parts. First one. Share to purchasing company. Share to purchasing company. 200 minus 40. 200 minus 40. 160. Share to selling company. 40. Understood the point or not, everyone? Understood or not, everyone? Now tell me, accounts la how you will show this? So okay, just chumma say answer. Perfect. Ade goodwill. Selling company books la you will show the goodwill or not? This is how it will be calculated. Understood the point or not? ICSI you are going to pay. Got the logic, everyone? Okay, next. Next. Let us do another one. Quality question. Take question number 5. 8 marks question. For 2-3 times it was tested. The CEO of the company thinks that shareholders always look for EPS. Therefore, he considers maximization of EPS as his company's objective. Company current net profits are 80 lakhs, PE multiple 10.5. He wants to buy another firm which has a current income of 15.75 lakh, PE multiple 10. What is the maximum exchange ratio which CEO should offer so that he could keep the EPS at the current level, given that the current market price of both acquired and target company are 42 and 105 respectively? If CEO borrow funds at 15% and buys out a target company by paying cash, how much cash should he offer to maintain his EPS? Assume the tax rate of 30%. 8 marks question given in exam for 3-4 times. Chance is there it can get repeated again. Read the question first. So please don't waste time. So please, I request you to see the questions. Try. Meanwhile, I will show you 1 or 2 RTP questions also. Sir, are you trying the question or not? First tell me, how many companies are there in this? Two companies are there. One is a acquiring company, another one is a target company. Two companies are there. Okay, sir, I searched for one RTP questions also. I will also show once we complete this. Clear? Now, see there. CEO of the company thinks that shareholders always look for EPS. He considers maximization of EPS as his company's objective. Company net profits 80 lakh PE multiple, and he has given some information. He is asking, what is the maximum exchange ratio CEO should offer so that he could keep EPS at the current level, given that the current market price of both the acquirer and the target company are 42 and 105 respectively. This is the question that he is asking. Okay, first always I told you, whenever question comes, compile the information and put it. Understood or not? So compile the information and first put it there. Write down, sir. Two companies are there. What is the question number in the study material? Question number 5. Write down. Acquiring company, target company, because they did not give the names. One by one, first tell me, sir. He considers maximization. His company's current net profits are 80, PE multiple 10.5. He has given MPS some market value, net profits. Okay, means EAT. PE ratio is also given. Sir, please tell me what is the EAT value given? 80, 15 point. What is 15.75? Net profit of target company. Okay, 15.75. What is the PE ratio of our company? 10.5. Other company? Okay. So tell me, EAT given, PE ratio given, number of shares are given or not given? See there. Can we calculate or not? Yes, we can calculate. Sorry, before going into that, they have given the market price of both the companies or not? Tell me, what is the MPS? Sir, everyone do along with me. What is MPS? Who is 42? Acquiring company 42. Next one? 105. Okay, this is the information. Sir, with this available information, PE ratio is there, MPS is there. Can we calculate the EPS or not? Write down below. EPS. Example, you write down step by step, but here let us fastly do. Formula for EPS, MPS by PE ratio. Calculate. 4, 10.5. Sir, EPS is there, PE ratio is there. EPS is there, PE ratio is also there with us, MPS is also available, EAT is also there. Can we calculate? Tell me, EAT 80, EPS is 4. Can we calculate the number of shares available or not? Right down. Number of shares equal to, how many lakh shares are in the first case? 20. $1.5. So everyone understood up to here clearly? Yeah. Now tell me what he is asking. Let us see. First see there what he is asking. What is the maximum exchange ratio which CEO should offer so that he could keep EPS at the current level? Sir, please reply. He wanted to keep what at a current level? And he wanted to dilute, not to dilute. Not to dilute what? Therefore, what should be the base? EPSA should be the swap ratio base. Now, do you understand how to do? Right on. Swap ratio, EPS basis. Please tell the answer, sir, everyone. What is the formula? EPS of target company by EPS of acquiring company. Please tell me what is the EPS of target company? 10.5 divided by 4. 2.625 is to 1. What is this? What is this 2.625 is to 1? 1 share of target company, 2.625 shares of acquiring company has to be issued. Understood? Now I will ask one question, sir. Please use and tell. How much is the EPS? How much is the EPS of target company here? 10.5. And this company 4. Now answer my question clearly. How many shares I am giving? 2.625. Means for one share I am giving 2.65 shares, 625 shares, because my EPS is 2.625 times bigger than yours. Correct or not? Until you are compensating me completely for the EPS, therefore EPS will not change. Are you understanding or not? You are compensating me completely for EPS. How much EPS I have? 10.5. How much you have? 4. Means how much bigger I am? 2.625. That much bigger you compensated me in the form of shares. Means my EPS is compensated. Therefore EPS will not change. Understood the point or not, everyone? That's all, sir. So one bit completed. But next bit is danger. See here. If CEO borrow funds at 15%, buys out the target company by paying cash, how much he should offer to maintain his EPS? Again, target is to maintain EPS. Listening, but he wanted to maintain EPS of his company. He wanted to maintain the EPS of his company. What is his company EPS? That he wanted to maintain. Okay. Then he is asking us to calculate. First answer my question. 2.625 is to 1 is a cash to share, share to share, share to share. For one share you are giving 2.625 share. That's called as a share acquisition, share to share. This is called as a cash to share acquisition. This is answer, sir. This will be share to share acquisition. 2.625 is to 1 means for one share 2.625 shares. Now for one share I will not give you shares at all. I will pay you cash and throw you out of the company. Like a buyback. Like a buyback. It is buyback type. Means I am not going to give any ownership in the new company. Number of shares of this other company will be vanished after merger. Understand the point or not, everyone? Now answer, sir. Please listen. I will do. If you have any doubts, you can ask later. What he wanted to maintain after merger? First tell me. From that hint only we should start. Tell me what he wanted to maintain. EPS pre-merger or post-merger? He wanted to maintain as how much? 4. Please see the screen. Don't mug up the procedures. See and answer. How to calculate EPS post-merger? Earnings post-merger divided by number of shares post-merger should be equal to how much? 4. Hint number 1. Denominator la number of shares will be same means how much? How many shares are there with the purchasing company? Please tell me. 20. Plus how many are there in target company? 1.5. Totally how much it will become? 21.5. Wrong answer. 21.5 should not come in denominator. How many only should come? 20. Because for this 1.5 lakh shares, what I am paying? Cash I will pay. I am not pay the shares. Therefore, one thing is very clear. Yeah. What is that one thing that is clear? Number of shares are 20 lakh. Adi clarity. Are you understanding the point? Answer, sir. Before going into that, I will ask another question for you. Numerator law, what is there? Numerator law, what is there? Earnings. Please tell me earnings. What is the earnings after tax of A Limited? Earnings after tax of T Company? Totally how much? 95 point. But there is an interest cost after acquisition because I am borrowing at 15%. I am borrowing it. See the screen. Please see the screen first. Tell me. I am borrowing X amount. I don't know how much I need to borrow. I am borrowing how much? X. Now you please tell me. I borrow X amount. I pay interest on this X amount. Okay, na? How much percent I will pay? 0.15. So tell me what is my interest cost? 0.15x. On this there is a tax. Correct? Tell me how much is a tax saving I will get? 0.15 into 30%. Tax is how much percent? 30%. Tell the value. 0.045x. Tell me what is the net interest cost? 0.105 or 0.105x. Listening, sir, everyone. What is this 0.105x? Net interest cost. Net interest cost. Pre-merger or post-merger? Post-merger. Tell me. CEO is using the company's money. CEO is using the borrowed funds. Borrowed funds. At what rate he borrowed? Answer, sir. How much he borrowed? Don't know. But on that interest will be paid 0.045x. That means that will become the tax saving. Become the tax saving. So net interest cost is how much? 0.105x. I will ask you one question. Tell me. In the question he is asking EPSI, MPSI amount to be borrowed. How much cash he should offer? Means first we need to know how much amount we need to borrow. That's the question. Okay. See the screen now. I will ask one question. Honestly tell this, sir. Did you understand this? How much we are borrowing? X amount. On that what we need to pay? Interest. After tax, what is the net cost of interest? 0.105. If we borrow 100 rupees into 0.105. Understanding the point? See here, sir, everyone. Please see here. What is the earnings before merger of acquiring company? Answer, sir. 80 lakhs. Plus, what is the earnings of that other company? 15.75 lakhs. I am writing fully for your understanding sake. Minus, what will happen now? Minus 0.105. Okay, sir, I will write like this. Tell me. 80 lakhs plus 15.75 lakhs minus 0.105x divided by 20 lakhs equal to 4. Tell me. 95.75 lakh minus 0.105x equal to how many lakhs? 80 lakhs. 0.105x equal to 15.75 lakh. X equal to, please tell me the value. 150 lakhs. What is this 150 lakhs? Can you please tell me? Sir, answer, sir. What is this 150 lakhs? Amount to be borrowed. Who will borrow this? CEO. Company will borrow. This borrowed amount, what we will do? Make the payment. With this borrowed amount, what we will do? Make the payment. Tell me. Make the payment for how many lakh shares? 1.5 lakh shares. So tell me, what is the price offered for each of them? Answer, sir. This is the answer. This is the price offered in cash. Sir, understood everyone in the class? See, what is the question we completed? Question number 5. I will show you the answer, how the institute presented. First final answer for your satisfaction. Tell me how much lakhs? 150 lakhs. Okay. So how much they will pay? 150 lakhs they have to pay to that particular person in order to maintain that particular amount. Sir, first one 2.625. Did you understand the answer clearly? Yeah. Next one is how many lakhs we need to offer? 150. Each share ke how much he has given? 1.5 means how much? 100 rupees they offered for each share. Understood the point or not clearly? Okay. Sir, if you want, you see this answer. Understood the calculations clearly or not, everyone? Tell me, what is a new point you learned in this question? CEO has a, this is a share on share, cash on share. Cash on share, that's a new point we are going to learn in this area. Exam ki very important concept as well. Okay, na? Next. Shall we move on to the next one? Shall we move to the next question? Okay. See here. Next question. If there is anything good and important, I will take it. Yes, see here. Take question number 16. Take question number 16. Very important type of model again. Take question number 16. Another model question. Similar model, let's not do, sir. You can practice also. One model, each question I will tell and I will move on to the next one. S Limited wants to acquire No Limited. And the cash flows of S Limited and merged entity are given as follows. S Limited 175, 200, 320, 340, 350, 400, 450, 525, 590 and 620. Earnings would have witnessed, okay, 5% constant growth rate without merger, 6% with merger on accounts of economies and operations after 5 years in each case. Cost of capital 15%. The number of shares outstanding in both the companies before merger is same, and the companies agree to exchange 0.5 shares of S Limited for each share of No Limited. PV factors are given respectively. You are required to compute value of S Limited before and after merger, value of acquisition and the gain to the shareholders of S Limited. 8 marks. Read the question, sir. Take 2 minutes time. Read question properly. Examiner ditto question can also come with a change in numbers. Please don't waste time, sir. Read the question, continue, do it. After this question, we'll take a short break. I can understand your problem. You're seeing me very seriously. Just take a 15 minutes break after this question. Sir, read the question. If that question comes in examination, how will you react? Like that, feel and start doing. Don't sit idle. Start. First tell and do what we need to do in this question. Can you please explain me? Something we should do, huh? What is that something? Sir, okay. I will help you to do that. First listen. See here. How many companies are given, sir? Answer. 2 companies are given or not? Okay. I will tell you how to do. Start doing it. Keep the heading calculation of value of S Limited. Calculate the value of S Limited. Calculate the value of S Limited. Year cash flow PV at the rate of 15% PVCF. 4 columns. Start everyone. Year cash flow PV at the rate of 15% PVCF. He has given the information already, cash flow information there. 175, 200, 320, 340 and 350. Take that information. Illa. Tappu. Like this we should. This is correct. Last one only wrong. I will tell you how to do. Do you know how to do for 5th year terminal cash flow? You know how to do for terminal cash flow? I will tell the logic here, don't mug up. I constantly see various students always, sir, we need to take this denominator, this will come. Like this we will mug up. No, there is no need to do that. I will explain you how to do. See here, just give me the information. You have already done now. Fastly you can tell me. Question number 16. Okay. Now listen. Year S Limited I am doing. Year cash flow PV at the rate of 15% PVCF. Year 1, 2, 3, 4, 5 and 5. Okay. What do you mean by 5? I will tell you, sir. Everything has a logic. At least once you listen, after that no doubt will come in exams. Tell me, what is the cash flow value? 175, 200, 320, 340, 350. This is the terminal value. 5th value is called as what value? Terminal value. Okay. See there. PV at the rate of how much percent we have taken? 15. Can you please tell the values? Point? Okay, 1 minute. 0.870, 756, 658, 572, 0.497. Here also again 0.497 because fifth year only. Listen. Meaning I will tell you first. Listen carefully, sir. See here. Earnings have witnessed a 5% constant growth without merger, 6% growth rate with merger. Cost of capital is how much percent? 15%. Number of shares outstanding, everything they will be giving 0.5 shares of S Limited for each share of No Limited. He is asking, compute the value before and after merger. Before and after merger. Next one, value of acquisition. Lastly, the gain to the shareholders of S Limited. This is a question which was asked on full chapter. Normal calculation we should do, synergy calculation we should do, exchange ratios we should do, everything we have to do in complete. One question if you do on this, after that you need not again do this particular area. Shall we do? First point number 1. Tell me, how many years information was given? Always remember, any valuation done, we can gauge the market for certain number of years. I will explain. So please listen. Last year pass percentage of CA, some percent is there. Last 3 attempts I have taken. Say example, I didn't even remember the percentages actually. Like this first group is 20%, 22%, 24%, like that I said. Okay. I said predict the future. On the basis of the past, if I have to predict the future, my answer will not be 70, 80. My answer will not be 1%, 2%. Somewhere around 15 to 25% it will run. Correct or not, everyone? That means always you should remember, we can gauge the market only for certain period of time. 2 years you can gauge, 3 years you can gauge. After 4th year, what will happen? Who will know? 10 years after, what my company will do? How would I know? My company will be there or not, also doubtful. Are you understanding? Therefore, listen carefully. These 175, 200, 320, 340, 350 are existing cash flows, sir, expected cash flows, sir. Sir, everyone, sir. We don't have time to repeat, please, everyone. These are all expected cash flows and already happened, expected to happen. I expected how many years? After 5th year, namaste, I don't know what will happen to this company. After 5th year. Now answer my question. What is this 175? Okay, cash flow means what? Technically, it is like earnings, correct or not? Earnings is how much? 175. Now my question to you. 175 is the earnings. Listening, huh? Now tell me. Earnings means, earnings before tax or after tax? Answer, sir. So, go to the income statement down to top. Okay, na? First, what is the bottom? Earnings after tax. Above. Earnings before tax. Next, EBIT. Contribution. Sales. Other question. Sales will happen on the first day of the year, last day of the year, or it will happen uniformly throughout the year? Answer, sir. Therefore, 6th beginning onwards it will start. Which beginning onwards? 6th beginning onwards till infinity. Since 6th beginning can be called as a 5th ending, we will take 5th year only PV factor here. Are you understanding the point or not, everyone? Why we will take mean? Don't mug up. Last 2 years must be same. Don't mug up the answer. Logic is very simple. Did you understand my point or not? How much is the EAT for the first year? That EAT is because of last day sale, first day sale, uniform throughout the year. But starts from which day? Day number 1 itself it will start or not? Therefore, the earnings is not as a result of one day, it is a result of every day starting from the first day. Clear or not? Tell me, how many years we gauged the market? 5 years. After 5th year, I cannot. So, from the 6th beginning onwards, since the 6th beginning PV factor will not be there, 5th ending we will take. Clear or not, everyone? Now understood the logic clearly? Okay. Now I will ask a question. Please. Shall we? There is another meaning also for the mind-blowing reason. Why they will do like that? Okay. See here. See the screen once. How much is the earnings I am expecting in the first year? Answer, sir. Second year. Third year. Fourth year. Fifth year. After 5 years, I wanted to sell this company. After 5 years, I wanted to sell this company. Over. Cream over. Nothing is there. Are you understanding or not? So full company extracted. Done. My work over. 5 years is a work with this company. I wanted to join this company and merge with it. Use the benefits for 5 years. Close the company. Over. Done. I will sell my company to some other person. Listening or not? That's why business valuation chapter private equity, one new concept was added. In that concept, these are only the things. Always you remember startups, what people are doing today, starting the company, developing it, boosting it, give a huge value, sell the company and come out. Listening or not, everyone? Very, very popular in education industry. Education industry, do you know what is the fashion today? Start a education company. Not just CSEMA, anything. Start it. Start branches everywhere in India. Open them. Are you understanding or not? Open them. Create a brand. Everywhere your name should be heard. Valuation will come. Sell that and come out. Over. Done. Are you understanding the point or not? So the logic is very simple. When branches are open, a pakka intention is only to sell them in future. Are you understanding or not? Intent is to sell that in future. Because always branch creates a presence there. Clear or not? Branch creates a presence. I am present in one state. Say for example in Hyderabad I am present. I start in Mumbai. Means what? My presence is now in Mumbai also. My brand is adding the value. After some number of years, what will happen? Slowly the name will come. They will get a valuation. They will sell. Over. Done. Game over. Like that we should understand all this. Now you tell me, I will ask. Okay? Please. Listen. Just 5 minutes you can take break. Don't crave for breaks now. Just answer my question. Point number 1. How many years is my acquisition? Yes limited acquiring, no limited or not? Once acquired, it's a merged company, right? Everyone? I will sell the company after how many years? 5 years after I will sell. I don't have interest to continue also. Okay? So now listen. Company ki how much is the earnings I am expecting? First year, 175. Second year, 200, 320, 340, 350. I will sell this company at the end of which year? Loudly, sir, everyone. Everyone. Very good. If I sell at the end of 5th year, I want P0, P1, P2, P3, P4, P5. Loudly. Tell the formula. P0 equal to D1 by KE minus G. In this D place, we will put the cash flow. So tell me, P0 equal to CF1 divided by KO minus G. KO minus G. I want P0, P1, P2, P3, P4, P5. Why P5? I am selling this company today after 5 years. So I want price of P1, P2, P3, P4, P5, everyone. P5 will be dependent on C6 divided by KO minus G. C6 will be called as CF5 into 1 plus G divided by KO minus G. That's how you got those answers. Do you understand the point at least now or not? Share valuation of full formulas are dependent on this logic. But what we are doing is mugging up. How it came? Like that it came. How to do? Nothing to do. First, remember one format. Like this if it come, like this you should do. If that doesn't come like that, gone. So, always believe in the concept, not on the procedures. Procedures may come and go, but concept will always remain with you. So, simple logic is, tell me, I am selling my company in which year? Please tell me. 5. So, I should calculate what? C6 divided by KO minus G. What is the C5 already calculated? 350. What is the growth given? Answer, sir? 5%. Divided by, what is the KO? 15% minus 5%. Calculate. 350 into 1.05 divided by 10. 367.5 divided by 10%. Value, please. 3675 lakhs. Don't copy. First tell me, up to here everyone understood the concept clearly. What is 3675? Can you please tell me? This is the terminal value. Do you know what does it mean? I am going to sell you the company after how many years, sir? 5 years at 3,675 lakhs. Understood the point or not? Now multiply the PV factors. Don't do individually. Directly tell the MRC total. 2708.92. 2708.92. 2708.92 lakhs. 2708.92 lakhs. 2708.92 lakhs. Sir, can you please tell me what is this 2708.92 lakhs? Please tell me. Value of the company today na after 5 years. Today. These are all present values. Ide. Gone. 2708. You are writing it in present value column and you are telling after 5 years. What should I tell? No words. 2708 is when these are all present value. Do you know what does it mean? If a company comes today to pay you some money, if a company comes today to pay you money, do you know how much they will pay? These many lakhs they will pay for your company now. Understood the point or not? Now please tell me, like this can you calculate for the merged entity and tell the answers? Answers, sir, everyone, shall we do? Start doing. 2 minutes time. Please do it. Fast. Same procedure you use and do. Have you calculated? How much is the value you got? 5308.47. Everyone got the answer? Now tell me, what is 5308.87? Present value of merged entity. Now you tell me, what is the first question he asked? Value of S Limited, B pre-merger, post-merger. First bit we calculated or not? Next tell me. Maximum value what you can pay to No Limited to buy. Simple question, yeah. What is the value without merger? 2708. With merger? And a maximum how much you can pay to the other company to acquire the difference you can pay. Correct or not, everyone? What is the question, sir? The number, please tell me. Question number 16. See here. Please see here once. First one. Have you got the answer as first one is 3675? Have you got the answer or not? That present value answer 3675. What is the total value we got? 2708. Okay. Next. Next one you need 27 how much? 08. Okay. After merger how much you got? Something nearer to this. Have you got the answer or not? Sir, now we understood how to do the answer. Okay, clarity came. Maximum how much you can pay? This much you can pay. Without merger, this is a value. With merger, this is a value. This is the maximum value of acquisition. Everyone understood the point or not? Okay, now I will ask a question. Tell me, how many shares we are giving to the other person? Sir, question you read, sir. In that question they have given how many shares we are giving? 0.5. So please tell me now, 0.5 shares means how many shares they are having already? They have given any information? Answer, sir, they have given any information? No. That's why see how they are done. Please see here. What is the merged entity value? 5308. It will be shared by one share, 1.5 shares. 1.5. My one share is there, your 0.5 share is there. Totally how much we are going to share? 1.5. This is the value. This is the value. So 2708 is a cost. 3538.98 is the equivalent amount of share of S Limited. Totally the gain came to them is the 830 lakhs. Did you understand what they have done? I repeat one more time. Tell me, did they give any number of shares information to you? Answer. Sorry, tell me. I have one share. How many shares I am giving you? I have one share. How many shares I am giving you? 0.5 share. And totally how much? Ante my question is 5308 is belonging to one share persons, 1.5 shares persons, 0.5 shares persons, 1.5. So answer is how much? 3538. What is the value of S Limited without merger? 27. Equivalent value is how much now? 3538. So the gain that will be flowing to them is 830 lakhs. That's it. This is the answer for this question. Everyone understood the question clearly? Yeah. This is how the 8 marks questions are coming. I have another question. Take a break and come. 15 minutes break. 11 o'clock we will again start. 3 very good questions are there which can come in the next coming examination. All are study material and RTB questions. Okay. Please take a 15 minutes break and come. We'll continue. So let us continue. Some tricky questions are there in mergers chapter. Let us try to understand those. If comes in examination, how to tackle. Let us see. Please see here. In that, the first question is, yes, question number 21. So listen, please see the question. Question number 21. Two companies, Bull Limited and Bear Limited, recently have been merged. Merger initiative has been taken by Bull Limited to achieve low risk profile for the combined firm in spite of fact that both companies belong to different industries and disclose a little co-movement in their profit earning streams. Though there is a likely to synergy benefit to the tune of 7 crore from the proposed merger. Further, both the companies are equity financed and other details are as follows. Bull Limited, Bear Limited, market capitalization, beta was given. Expected market return and risk-free return is 13% and 8% respectively. Shares of merged entity have been distributed in the ratio of 2:1, that is market capitalization before the merger. You are required to calculate the return on shares of both the companies before and after the merger. Calculate the impact of merger on Mr. X, a shareholder holding 4 shares in Bull Limited and 2% of the shares in Bear Limited. 2 minutes time for you to read. After that we can do. 2015 attempt that question was tested in the MTP or RTP. I didn't remember exactly. Either RTP or MTP. 2015 year this question came. Very good question. After that, similar question came in exam also. Read the question first. Please don't waste time. Read the question properly. Okay, done. First question, what he is asking is calculate the return on both the shares before and after merger. He is asking calculate the return. I will ask a question, first answer. Point number 1, who is acquiring whom? Bull Limited is acquiring Bear Limited, or Bear Limited is acquiring Bull Limited? Both are forming a new company. That's a new point we are going to learn in this question. Till now you have seen absorption only. This is the only question came in examination till now, which is concentrating on a new company formation. Till now, any question, efficient acquiring Healthy Limited, target company acquiring some acquiring company acquiring Target Limited. Everywhere, whatever you see in the mergers chapter, you have only seen takeovers. Absorption we have seen. This is the only question that given in examination on merger. Merger by new formation. Merger by new formation. There are two types of mergers. Merger by absorption. Second one, merger by new formation. This is of which kind? New formation. That's why see here. Two companies, Bull Limited and Bear Limited, have been merged. Two companies have been merged. Bull Limited is having a low risk profile. All these things are said. And the benefits are 7 crore from the proposed merger. Okay. How much? 7 crore. From what? 7 crore from the proposed merger in the form of what? Profit. Sir, profit will come for 1 year, 2 year, 3 years, perpetually. Profit will come to the company for 1 year, 2 year, 3 year, perpetually. Perpetually profit will come. Therefore, 1 year they have given 7 crore. We have to calculate perpetual profit. Our perpetual profit is synergy. Okay, continue. Bull Limited market capitalization beta. Bear Limited market capitalization beta. Expected market return RM, RF, shares of the merged entity are distributed in the ratio of 2:1. That is market value before merger. Calculate the return on both the companies before and after the merger. What he is asking us to calculate? He is asking us to calculate the KE before merger and KE after merger. What he is asking us to calculate? KE before merger, KE after merger. Can we calculate together? Start doing, sir. Mark this question important. Sir, if you follow any study material, this question will be there. Question banks, if you follow, this question will be there. Okay, na? Study material, this will not be there, because study material only those questions which are there in study material will be there. RTPs generally they don't include in that. Therefore, in that it may not be possible, but in question banks it will be there. Any question bank you follow. Okay, see here. So what is the question number? Sorry, question number in this. In the material, it is question number 21. If you have a material, it is in 21. First, you tell me. Okay, for your convenience, I am pasting here itself. Till now. How many companies are involved in the merger, sir? Everyone? 2 companies. First question, what he is asking, calculate the return. Okay. Right. KE before and after merger. KE before and after merger. Branch it into 2 parts. Before, after. Before, 2 companies are there. Bull Limited, Bear Limited. Tell me, what is the RM? RM 13%, RF 8%. Beta of both the companies are given or not? 1.5 and 0.6. Can we calculate the KE for both the companies using CAPM or not? Calculate. 8 plus 1.5 into, how much? 13, 13 minus 8 means 5. Tell the value. 8 plus 1.5 into 5. 1.5 into 5, 7.5. 15.5. Next one, Bear Limited. How much? 8 plus 0.6 into 5. How much? 11. What is this 15%, 15.5 and 11? KE calculation. Okay, na? KE is calculated. Next, after the merger. In this, please be careful. I will ask one question, tell me. Please listen, sir. Do you know weighted average beta? I am asking, do you know the concept of weighted average beta? You are telling no on my face. Do you know concept of weighted average beta or not? Okay, now tell me, how many companies are there? 2 companies are there. Okay, na? And now tell me, please listen first. Later you can copy, listen first. What is the respect to beta? 1.5, 0.6. New entity la, I am giving you each share to share 2:1. And the proportion is 2/3, 1/3. Weighted beta of merged entity. Tell the answer, yeah. 1.5 into 2/3. 1. 0.6 into 1/3. Therefore, the new beta of merged entity is 1.2. So, I'll calculate. 8 plus 1.2 into 5. Answer how much? 14. This is the first question answer. Answer is simple, sir. Just you need to understand the logic. That's it. Over. Okay? Done. One bit is completed. Hopefully, can I go move on to the next one? Next. Second bit. Calculate the impact of merger on Mr. X, a shareholder holding 4% shares in Bull Limited, 2% of shares in Bear Limited. I'll ask one simple question, answer. You are a shareholder of Bull Limited, Bear Limited, both the companies. Reply, sir, please. We don't have time, please. You are a shareholder of Bull Limited, Bear Limited, both the companies. Loudly. Both the companies. In Bull Limited, how much you are holding? In Bull Limited, how much you are holding? Bear Limited? Now answer. In the merged company, what is your holding? 4 or 2 or 6? All 3 are wrong answers. For my 4, I will get 2/3. For my 2, I will get 1/3. Did you understand my point or not? New company, you are getting total percentage of 2:1 ratio they are distributing. 2:1 means, listen, for your 4%, you are going to get 4 or 2/3 of 4. 2/3 of 4. For your 2%, you are getting full 2% of 1/3 of 2%. 1/3 of 2%. You are holding, you have to calculate first. Did you understand the workings clearly? Yeah? Okay. Now tell me. Next, this is a step number 1, or next one is B. Calculation of shareholding percentage in merged entity. Shareholding percentage in merged entity. Sir, I will ask one simple question. Please answer. Let us say, please listen. Let us say 100 shares are there in Bull Limited. 100 shares are there in Bear Limited. Okay? In Bull Limited, totally 100 shares are there. How many shares I will have? 4. How many shares I will have in Bear Limited? 2. 100 ki 100 shares if they give, then answer is 6 is a right answer. Correct or not, everyone? New company la 100 shares are there. New company la how many shares are there? 100 are there. This 100 is distributed in the form of how much? 2:1. 2:1. Listening, everyone? Listening, sir, everyone? Therefore, in this 100, 66 only will be given to Bear Limited, Bull Limited shareholders. 33 only will be given to the Bear Limited shareholder. Then for your 4 shares, how will you get 4 shares? Then you now understand the point or not? You will also get 66% of 4 only. Understood the point clearly? 60, whatever the percentage. Okay. Now, calculation of shareholding percentage of merged entity. Company shareholding percentage pre-merger. Next one, swap ratio, weighted average shares. Tell me, 2 companies are there, Bull Limited, Bear Limited. What is my shareholding percentage before? 4%, 2%. But ratio division is how much? 2/3, 1/3. Calculate here, 4 into 2/3. 2.67, okay, 2/3 total 3.34. 3.34. Can you please tell me what is this 3.34? This is my percentage of holding in Bull Limited, Bear Limited, merged entity, merged entity. Okay. Now, finally, he is asking a third question. I mean, second question, another bit he asked. See here, impact of merger on Mr. X. Okay. Please tell me what is the value of Bull Limited pre-merger? 1000. What is the value of Bear Limited pre-merger? What is the value of both the companies pre-merger? 1500. Plus, I told you the format now. What we need to do? Synergy. Now tell me, synergy. One second. Please listen and write. Synergy will be for independent companies or merged company? Everyone? Merged company. Okay. Now answer my question. See the screen. What is the formula for present value of perpetual cash flows? Cash flow per annum divided by required rate. Cash flow per annum divided by required rate. How much synergy profit I will get every year? 7. Divided by required rate. I will ask a question. Bull itself is there. Required return will be 15.5. Bear itself is there. Required return will be 11%. Synergy comes with Bulla, Bear, merger. Therefore, what is the division here? 14%. How much, sir? 50. So tell me, what is the market value of merged entity? 1550. How much? 1550. Okay, everyone? Okay. Tell me. Shall we? Tell me. Previously, I am holding 4% of this company. Correct? My value is 40 crore. I am holding 2% of this company. What is the value? 10 crore. So totally what is my value previously? 50 crore. Now in this 1550 my share is 3.34%. Tell the value. 51.777. What is the gain that I am getting because of merger? That's all. This is the impact of the merger on a shareholder. Do you understand the answer clearly or not, everyone? Okay, done. So what is the answer? 1.77. 1.77. What is this 1.77? Can you please tell me? This is the impact of merger on a shareholder holding how many shares? 4% shares in Bull Limited, 2% shares in Bear Limited before merger. Because of merger, the wealth increase will be 1.77 crores. 1.77 crores. This is a value increase. Understood the question and answer clearly? Yes, sir. Everyone in the class, please. Okay, next. I will be little fast. I need to complete some important questions. So, let us take one question and try to understand how to solve that as well. Most important question, if you ask from mergers chapter, undoubtedly I will tell take question number 30. 30 in my book, study material, that question is there or not, I don't know. Exactly, I don't know in question study material it is there or not. Whether there or not, there, I think it is there here. Yes, it is there. May 2010 examination, at 10 marks question it came. I remember that because after one attempt, 1 year only I have written my CA final. So I remember after that this question came for n number of times in exam. Students started making mistakes also a number of times. So how good this question is. This is a merge of all concepts you learned till now. Let's read the question properly and start. Let's read. AFC Limited, question number 25 from the study material. If you have study material, open that. No study material, at least see here. Okay. AFC Limited wishes to acquire BCD Limited. Shares issued by two companies are 10 lakh and 5 lakh respectively. Calculate the increase in the total value of BCD Limited resulting from the acquisition on the basis of following conditions. Current expected growth rate of BCD is 7%. Expected growth rate under the control of AFC Limited is without any additional capital investment and without any change in risk is 8%. Current market price of AFC 100, BCD 20. 0.6 is the current DPS of BCD. On the basis of aforesaid conditions, calculate gain or loss to the shareholders of both the companies if AFC Limited were to offer one of its share for every 4 shares of BCD. Calculate the gain to the shareholders of both the companies if AFC Limited pays rupees 22 for each share of BCD Limited, assuming PE ratio of AFC Limited does not change after merger. EPS of AFC is 8, BCD 2.5. It is assumed that AFC Limited invests its cash to earn 10%. Super question. 10 marks is less for this question actually. Read the question properly first before we solve. Please read the question before we start. No problem. After this only 2 important questions are there. With that we go to business valuation also. Have you read the question? First, one by one answer. Who is acquiring whom? Sir, 1 second, please concentrate everyone. Important question. Okay, tell me. Who is acquiring whom? AFC is acquiring BCD. Okay, clarity is there. Shares are issued. The shares issued by both the companies are 10 lakh, 5 lakh respectively. Calculate increase in the total value of BCD Limited resulting from the acquisition on the basis of following conditions. Current expected growth rate 7%. Current growth rate under the control of AFC Limited like that 8%. Current market price per share of AFC is 100, BCD 20. 0.6 is a current dividend per share. is a question given. Okay. First tell me, what we have to calculate? What he is expecting us to calculate? I am asking you again. I gave 2-3 minutes time for you to read the question. Tell me, what he is asking us to calculate? Increase in the value of BCD Limited. Increase in the value of BCD Limited. Resulting on the basis of what? Acquisition. Who is acquiring whom? AFC acquiring BCD. He is asking, calculate the increase in the total value of BCD Limited resulting from the acquisition on the basis of following conditions. This is what he asked. Okay, na? I will ask one question, first answer. Point number 1. Generally, whenever they ask you to calculate the total value, first we need to calculate the value of that particular company. Value of the company to calculate, first we need to calculate the value per share. I repeat again, listen carefully. Always whenever we have to value a company, total value of company is nothing but the total market value of its shares. To calculate total market value of the company, we need to know the market price per share. Market price per share means P0. What is the formula for P0? The answer, sir. P0 equal to D1 by KE minus G. D1 by? This is a calculation. Now I am asking you the question. Please listen. In this particular question, you see and tell. No problem. You see and tell. But tell. What is the current growth rate of BCD Limited? 8. 7%. Now expected growth is becoming how much? 1% synergy is there. How much synergy is there? 1% synergy is there in the form of growth. Okay. Next. After that, current market price is how much? 100. Current market price is how much? 100. Current market price of BCD is how much? 20. 0.6 is the current dividend per share of BCD Limited. This is the question that he is being asked. So first question understood everyone? Tell me how to calculate. Tell me. We wanted to calculate the price of BCD Limited, AFC Limited. AFC, BCD current market prices are given or not given? Again I am asking, current market prices of AFC, BCD available, not available? 1 point completed. Second question for you. Next question is AFC, BCD current market values available, current market prices available. We wanted to know how the price will change after acquisition. How the price will change after acquisition. Then only I can know increase in the value. What is the share price of BCD today? Bad response. What is the share price of BCD today? What is the share price of BCD after acquisition? That we need to calculate. Listening or not? Then the difference will become what? Increase or decrease in value. Understood? Now my question, how to calculate the value of that BCD after acquisition? That's the question. Okay? Tell the formula first. P0 equal to? P0 equal to? D1 by KE minus G. Okay. D1 by KE minus G is the formula. Now, first point number 1, we need to know the KE. What we need to know? KE. Tell me, what is the KE of this particular question? Have they given anything in the question in this here? Calculation of KE? The first one, sir. See here. Instead of spending time, I will first show you the answer directly and explain such that we can save a lot of time. A best way of presenting the question, I will show you. Yes. First see here. Don't write anything, don't do anything, just see this, you can understand. Institute study material, after doing this you see how much complicated the solution was given and how easily you can solve it. Question came in exam, how to solve, let us see step by step. Point number 1, calculation of KE of BCD Limited under the current conditions. KE, sir, P0 equal to D1 by KE minus G. Everyone tell me. P0 equal to D1 by KE minus G. I don't want P0, I want KE because P0 is already given in the question. So how to calculate now? KE equal to D1 by P0 plus G. Correct or not? Okay, see here. P naught equal to D1 by KE minus G. Okay. Now I want value of KE. So I can write as KE minus G equal to D1 by P naught. Correct? Next, KE equal to D1 by P naught plus G. This is how we already learned in CA Inter FM. Correct or not, everyone? Same thing we are going to do. KE equal to D1 by P naught plus G. Now I will ask a question. See here. What is the dividend given in the question? 0.6. Very good. Next, dividend price of the particular company share today. How much it is? 20. Plus 0.07. What is the current KE of BCD Limited? 10%. Calculate the price of the share post the acquisition. P equal to 0.6. Numerator 0.6 divided by 10% minus 8%, which is 30. What is the price of the BCD Limited before acquisition? 20. What is the price of the share after acquisition? 30. What is the value increase that might be made? 10 rupees on each share. Now you didn't understand what I said. I will explain. I will ask a question. See the screen once. What is the value of the BCD? K is 10%. I will ask one question. Fatafat give the answer. First tell me. P naught equal to what is the formula? Very good. D1 by K minus G. Perfect. Now second question I am asking you. P naught equal to D1 by K minus G. Okay. Now I want KE. How to calculate? D1 by P naught plus G. Okay na? Why we are not considering growth in dividend? Why we are not directly considering that? Why we are taking D by P? Steady material they will do D by P. We are mugging up literally without knowing the logic. How many of you have done this question before? Very good. 1, 2, 3, 4. Even though you don't raise the hand, some may have done already. They don't want to disclose. Secret information. Sorry. Tell me why institute has done like that. Expected? No. No. They did not give. They did not give. Shall I ask you one question, sir? You have study material with you? Ade, mobile also study material is a study material. You are virtually, you can see that. Now you can answer. You open the answer in the study material once. Everyone open the answer in study material. I just wanted to show you one observation. What is the question number 25? Open the 25th answer directly. See there, yes. They didn't write D1 by P naught. Dividend by price, yes. They didn't write D1. D by P only they will write. In this question only they will write. Student will start mug up. If this question come in exam. D by P, D by P, D by P. Why? Ante, D by P. Why not D1? D1 it would not be. It should be D. Why? There is a simple logic in that. Entire question he asked to do as per current situations. Current. He used the word 4 times. Okay? That is one reason. Listening? Second very important reason, shall I tell you why that answer is like that? Listen. Who is acquiring whom? AFC acquiring whom? Once BCD acquire, acquisition by AFC, why BCD will pay dividend again? Who is acquiring whom? Acquiring whom? When acquired? Now it is under acquisition. Now BCD acquired means next year why BCD will pay dividend? Understood the point or not? D1 is not there. The last dividend is D. That 0.6 is last dividend in the life of BCD. Next year AFC will pay. At least respond, yeah, yes or no. Something you tell, understood or not. That's why in this question they do like that. Because company once after acquisition, there is no life for that company. Over, that company died. Are you understanding or not? That Sir, BCD limited not there means from where BCD will get D1? If company is there, na D1, D10, D60, D70 will be there. Listening or not? 1 year after, understood the point or not? 1 year after, if you go to the BCD limited, what will be there? Kuch nahi hai. Mar jaye, mit jaye, ho jaye, over, done. BCD not there, it was absorbed by AFC already. So, logic is very simple. Institute is right. Their assumptions are right, the way they did is also right. So, don't be under wrong impression that there is a printing mistake. Are you understanding or not? Printing mistake not there. Conceptually also they are correct. In this question, 2 points are very important. Current. Everything do as per current situations. Current expectation is how much? Second, AFC acquires BCD. Means next year, why BCD will pay dividend? Did you now understand the logic or not? On these both assumptions, they have done that. That's why in my notes I have clearly given. Please read. In the question, it is clearly mentioned that valuation shall be on the basis of conditions specified in point A. Point 5 emphasizes on current dividend and current growth. So dividend should be considered D0 without growth. Reason. The reason behind this is after acquisition of BCD by AFC, BCD lost its individual status, hence D1 of BCD becomes irrelevant. Problem is, Institute did not give this analysis there. That's a problem. But logic is right. Everyone. First what we calculated? How much is a KE? KE calculate under current situation or future situation? Current. Because the next year who will not be there? BCD will not be there. Why do you need KE for the next year? So once we calculated. Listening everyone? Using that same 10%, we calculated the price per share. How much we got? 30. What is the price of the BCD today? Answer. What is the price after? There is a value increase or not? Tell our synergy schedule. Market value of AFC pre-merger. Next, market value of BCD pre-merger. Next, market value of both the companies pre-merger. Okay, plus synergy. Market value of merged firm. Market value of? Up to here, everyone understood the point clearly? Everyone in the class? See the screen. See the screen. Let's not waste time in writing the notes. See here. What is the market value of AFC before merger? 1,000 lakhs. How I got that 1,000? 110 lakh shares. 100 rupee they have given in the question. 20 rupee they have given in the question. 5 lakh. 100 lakh. Pre-merger total value is how much? 1,100 lakh. Listening everyone? Now you answer my question. What is the price per share of BCD before merger? Everyone? After merger? 30. 30 minus 20. 10 lakh. The 10 rupees. The 10 rupees into how many lakh shares, sir? Answer. Where it was given this 5 lakh shares? Here, B Limited, how many shares are there? 5 lakh. How much gain is there? 50 lakh. What is the market value of merged firm? 1150. Number of shares post merger? 10 lakh shares, 5 lakh into 1/4. They have given their exchange ratio. Question, if you don't read what I can do. See here. One of its shares for 4 shares of BCD. They have given or not? Now tell me. See the answer. Sir, honestly you tell me. Did you understand the meaning of this 10%? Did you understand 30 rupees? Did you understand our synergy schedule? Any question of synergy come, follow the same schedule. Answers will automatically come. Okay? Done. We are getting a value. See there. Market value of the merged firm is how much? 1150. Number of shares post merger is how much? Already 10 lakh are there with AFC. For 5 lakh I am not giving 5 lakh shares. I am giving only 1/4. Therefore it will become how much? 11.25 lakh shares. So MPS post merger will be 102.22. 102.22. Okay. Next. What is the next one? Calculation of gain or loss to the shareholders of both the company. Please everyone answer. What is the MPS of AFC before merger? Answer. How much today? Gain or loss? Come to them. What is my value? What is my value? Don't see the answer, don't see the screen, don't see anywhere. Please answer me. At the beginning I told you, what is the formula for equivalent MPS? Post-merger MPS into swap ratio. What is a post-merger MPS? Swap ratio is how much? 1 by 4. So 1 or 2 by 4 equal to how much? 25.56. Gain is 5.56. That's all. That's the answer for the question. Easy or difficult? You see steady metal, how much complicated they will do. Well, we can't even understand how those answers came. So what is this 5.56? What is this 2.22? So we don't even understand what they're trying to tell. So the motive of doing the answers is right in steady metal. I'm not commenting on that. But always, those are all Excel generated, AI generated answers type. Normal human being will not understand. And normally when you see the Excel formulas, they will put in, they will calculate them. So we can't understand how them came. But the original logic is like this, they wanted to tell. So did you understand the schedule clearly, everyone? Now understood that question clearly? I said this is the main idea behind that particular question. Shall we go to the next one? I have another very, very important question in my material. Please. 2 questions are there. If the 2 questions are done, I will be happy that I have taught you good amount of questions. Question number 28. 12 marks question came in 3 attempts back. 28. If you follow steady metal are not there. So forget about it. If you follow question banks, it will be definitely there. Recent examiner, it was asked for 12 marks. It was given one of the old RTP. Two minutes time for you, please. Sir, don't waste time. Every minute counts for us, please. Read the question properly. See here what happened in this question. If you are taking photo, take. Shall I continue? Bro, over. Oh, I am there. No, take. This also. Small question, na? Okay. Shall we continue? Listen. Again, this question can come in examination. Let us see. After this, another one more question is there, that is on decomposition of shares. Once that is completed, I will be happy that we covered good amount of questions in the class. Start. There are 2 companies, ABC, XYZ, which are in the same industry. In order to increase its size, ABC Limited wanted to make a takeover bid of XYZ. Equity beta of ABC 1.2, 1.05, risk-free rate 10%, market returns are 16%. Growth rate of ABC in the last recent years is 15%, XYZ 12. Further, both the companies have continuously followed constant dividend policy. Mr. V, the CEO of ABC, requires information about how much premium above the current market price to offer to the XYZ shares. 2 suggestions were made by merchant bankers. Price based on XYZ's net worth as per balance sheet, adjusted in the light of current value of the assets and estimated PAT for next 5 years. Price based on the dividend valuation model using the existing growth rate estimates. This is balance sheet given. Below P&L, additional information. ABC land and building have been recently revalued, whereas XYZ have not been revalued in the last 4 years. During this period, average value increased by 25% per annum. Face value of shares of ABC 10 and 25 for ABC and XYZ. Current value 310 and 470. With the help of above data and given information, you are required to calculate the premium per share above the XYZ's current share price by the 2 suggested valuation models. 12 marks question. Recent attempt, 3 attempts back. This question was there in the material since 2007. 2007 RTP question. From then, it was not tested, recently tested after 20 years. Almost after 15, 16 years. That's why all old RTP questions I am putting in the material now, because they are digging all the old questions now. Understood? They are bringing back again into the forward thing. Simply they are using LIFO. Questions are given on the basis of LIFO. Latest in first thought. First they ask, again it will come to the back side. Last questions are coming front. So any method first see. Methods are not important. You see the questions are very important. You have taken the photo. If not available, you take the photo, or else I will put the question before you. See this. Spend 5 minutes time or 2-3 minutes time, read the question properly first. After that we will see how to answer that. Read the 2 points very, very carefully. Something they are going to try to explain there. Price based on something they are trying to convey there. Okay now? Shall I show the answer now? Have you read the question at least? First tell me. How many companies are going for merger again? 2 companies. One is ABC and another company is XYZ Limited. 2 companies are going for a merger. Their KEs will be calculated because RF beta, RM minus RF, you have to calculate the KE. Listening? For what purpose they gave KE? For what purpose they gave that beta and all these KE? Why KE required in this question? Because we have to value under 2 valuation methods. First valuation method is net worth plus profit after tax. Next one will be dividend valuation model. D1 by KE minus G we need to do. To do D1 by KE minus G, we need what? KE. We need what? KE. That we need to calculate there. Shall we do it? You need not do. I will do one thing, sir. I can understand the discomfort. If you don't have the question, I will do one thing. This document I will share in my Telegram group. Okay, na? You take it and you can see the answers later. I shown the clear answers also. Full answers I have given there. How to present the answer in exam. So please see the screen once. Shall we continue? First tell me, how many companies are there? 2 companies are there. 2 companies are going for a merger, ABC and XYZ. When they gone for a merger, 2 methods they have shown. XYZ's net worth method, in the light of the balance sheet, in the light of current value of assets, means what? You have to revalue and calculate the net worth. So net worth can be calculated in 2 ways. Okay, number 1, liability side you can calculate. Equity share capital plus reserves and surplus is the net worth. Or you can calculate as assets minus outside liabilities. Assets minus outside. At that time, you need to take the assets at book values or market values or market value. There is a hint given in this question. ABC land and building have been revalued. Means you need to again revalue. No need of revaluation. No need. But XYZ have not been revalued over a period of 4 years, which now increases by 25% per annum. Did you understand or not? Who is acquiring whom? Loudly, sir. Please fastly tell, sir. ABC acquiring XYZ. Whose assets are already revalued? That means this is already a revalued number. Okay. Whose is not revalued? XYZ is not revaluing in 1 year or 2 years, last 4 years. Last 4 years, it has grown by 25% each year. 25%? Take calculator. 1500. 4 times 20%, 25% add. And see here, 1500 into 1.25 power 4. 1.25 power 4. How much percent increase they said? 20 or 25? 25. So 1.25 power 4. 4 years compounding. 3, 6, 62, 0.19, 10, 11, 109. Okay. Sir, okay. Forget about decimals. Sir, okay, up to here everyone understood clearly, yeah? Now tell me, what is 1500? Value 4 years back. What is 3662.11? Value today. After making what? Revaluation. After making what? Revaluation. Now tell me, land and building is, revalued number is not 1500, it is no more relevant. What is the value? 3662.11. Up to here everyone understood. I will ask you one question. Tell me, who is acquiring whom? ABC acquiring XYZ. Who should be valued? ABC should be valued, XYZ should be valued. Ammaya, thank you very much. You understood now. Now, I wanted only one small question from you. Is there any other revaluation required? Land and building a revaluation not done, we have done that. Face value they have given, current value they have given. So, we are ready. All ingredients available. Mix the masala and make the biryani now. Now, tell me, take calculator. Directly on calculator you can do. Total all the value of assets. 3662.11 plus 2800 plus 2400 plus 2100 plus 400. How much? 11,000. 11,000. 360.11. Very good. Now, one second. I will ask item after item. Tell me, long-term loan is a outside liability or share? Net worth outside liability. Creditor, bank OD, tax payable. Tax payable. Government is not insider. Government is a outside liability. Next, dividend payable. Tell me. Answer. Illa. Section number 127 of Companies Act says that once the dividend is declared, it must be deposited and paid within a period of 30 days from the date of declaration of dividend, or else the directors of the company and every officer default shall be liable for a imprisonment of not less than 2 years and a fine of ₹2,000 per every day of default, along with 18% simple interest. Which section? 127. Do you know why? As per article regulation number 17 of table F, it's very clear in Companies Act saying that company once declare the dividend, it becomes a debt due by the company to the shareholders. Means once a dividend is declared, it becomes payable. Payable is a liability for you. It becomes a debt due by the company. Listening or not, everyone? Dividend after, you have to declare within 30 days or not? If you don't pay, transfer to unpaid dividend account. If you don't do any of these two, do you know what will happen? From the next day, after 30 days, dividend will be called as a deposit under Companies Act Deposits chapter. That's why interest will be paid on that. This is not the time to learn Companies Act, I also know. But know the logic of dividend. If in examination again question came, dividend payable ante, dividend payable, dividend belongs to equity. Equity ante my mama. Like that, don't interpret. Okay, dividend payable is outside liability. Shareholders are your insiders. Are you understanding the point or not? Though equity shareholders are your insiders, dividend payable to them becomes a debt. So tell me, how much is a debt here? 400. Now I ask you, we want outside liability of ABC or XYZ? Total this. $5,000. Sir, others also please calculate. This is 5,200, correct? Okay, tell me. 6162 point. I will ask you one question, tell me. What 3,000? Someone said some 5,000? Securities PM also you added. Correct, 5,200. Totals don't confuse me. 3,000? $3,000? Why they are saying then 11,000? 5,000? Oh, alignment problem. ఓకే ఓకే అయితే ఇది ఈక్విటీ, ఇది రిజర్వ్స్, షేర్ ప్రీమియం, లాంగ్ టర్మ్ లోన్స్, క్రెడిటార్స్, ఓవర్ డ్రాఫ్ట్, పేయబుల్, డివిడెండ్. ఓకే, నౌ see, now you need to take from here to here. Okay, now tell 3000. Now tell me 3000, if you remove, what is the value we are going to get? 8362.11. Tell me, we are paying net worth, net worth adjusted in the light of current value, net worth adjusted in the light of current value, and estimated PAT for how many years? 5 years. Please see the question and tell what is the PAT for this particular company XYZ. See here, this is the PAT. Listen, see the screen. What is the profit after tax of XYZ Limited this year? What is the profit after tax of XYZ this year? Answer. 750 is after dividend. Yeah, I'm asking after tax. 1 second again. 1 second. Yeah, listen. What is the net profit? 2550. Okay, minus 220, minus 820, 1500. This is profit after tax. Or you can also do like 250, 2550 minus 750 will also give the same answer for you. Are you understanding the point or not? So tell me, answer my question. Point number 1, he is asking to take the profit after tax and dividend. Only profit after tax. Profit after tax for how many years? Next 5 years. Okay, now tell me, what is the growth given for XYZ Limited? What is the growth given for XYZ Limited? 12%. Please tell me, what will be the PAT for next 5 years? 1, 2, 3, 4, 5. What is the existing PAT of the company? 1510 plus 12% and tell the value. 1692. Next again on this, again 12% growth. Next on this again point. Next on this 12%. Point 01. Next point 14 total. $10,743.993. Sir, 1 second. Everyone answer to my question. Here, who is acquiring whom? Sum up everything in the question. If question directly comes in exam, you should be able to solve. Tell me how many companies are given in the question? 2. Number 1, ABC. Number 2, XYZ. Up to here, understand the clarity. Next, tell me, ABC, XYZ are 2 companies under acquisition. Okay, who is acquiring whom? On what basis they are acquiring? They are acquiring on the basis of net worth and PAT. Net worth and PAT, and net worth plus PAT calculation. Net worth they have taken revalued numbers, normal book values, revalued. We calculated. How much is the net worth? 8362.11. Over. Done. 1 point you caught. Next, not only net worth, they are also taking what? Profit after tax. Profit after tax for this year and next 5 years. Next 5 years we are going to take. Listening or not, everyone? So now today's PAT, if you know, you can calculate on the basis of a growth of 12%. Existing PAT came to 1510. Next 5 years ki profit we calculated. Listening or not? With a 12% constant growth. So we got 5 values. We total them. We got 10,000 something. We are not going to pay 10,000. We are not going to pay 8,000. We are going to pay both of them. That means company is valued on the basis of net worth and profit after tax for 5 years. Total both of them. 10,000 something you got. 10,743.93 plus 8,362.11. 19,106 point. Okay, sir, please see the balance sheet and tell me how many shares are there in the company? You put that value like that, 19,000 you put like that. See and tell me, what is the face value of this company share? Hey, in the question it was given, yeah. See there, what is the face value of the company share? ABC or XYZ we want? XYZ. How much is share price? 25. See, how much is a capital? 1,000. 1,000 divided by 25 means how many? 40. How many? 40. 40 lakh shares. This 19,000 106.04 should be divided by how many lakh shares, sir? 40 lakh divided by 40. That much a share price you have to pay. What is the existing market price of this company share? See this, sir, I don't know. How much is existing market price of this company share? 470. How much answer you got? 477.65. 7.65 rupees is the premium above you have to pay. Did you understand the calculation clearly or not? What he is asking you to calculate? Premium above the current market price. Did you understand what we have done? Take calculators once. Finally, we are going to the next problem. What is the net worth value you got? Net worth value 8,362 plus what is the profit after tax for 5 years total? 10,763.793. 10,793. 10,743.93 total that 19,106 point. What is that? That is a total of what and what? That is a total of net worth as well as the PAT for next 5 years. Listening, we totaled it. We got one big value. That will be paid to which company? By whom? For how many shares? And divided by 40 means how much per share you are paying, you will know or not. So divided by 40, how much we got? 477 point some amount we got. Correct or not? What is the existing market price of the company share? They have given in the question. See here. What is the XYZ's present market price? 470. On that basis, if you pay, how much you are paying? 477 point something. Correct or not? Now you tell me, how much premium above the market price you are paying? That's the answer for this question, that's all. Question A big, answer is very small. Just we need to understand the logic there. Understood the point? There is another alternative to do this. Institute has done like this in RTP. Actually, profit after tax you should take after discounting. They're directly totaling the profits. Actually in key, I don't know what is coming in key there. But suggested answer they have totaled like this. But ideally that's not a right answer. Because those are all belonging to today's terms. Those are all belonging to next 5 years. Next 5 years profit. Generally they have to consider the discounting. Example, if you write do discounting and do. Did you understand what I said? Consider the discounting and then do. Okay, because obviously when future is related, we should always calculate the present values. Okay, example if they give do discounting, but how institute has done I have shown you. Understood the main logic, that discounting and non-discounting, okay. Conceptually, everyone understood the concept clearly, yeah. Okay, last. This question I think there in the study material, I don't know, you should only tell. This one, BA Limited and DA Limited. There in the study material? Question number. Okay. Sir, I have also same question. Numbers say change. Numbers say different. Main idea is very simple. Please see here. Please sir, cooperate with me. Answer. Shall we? Okay. See there. So next business valuation there are students are feeling very difficult in business valuation chapter. Students are feeling difficulty in 3 different areas. Because business valuation chapter there are only 3 topics. Number 1 share valuation. Number 2 EVA. What is it? EVA. Number 3 FCFF. Number 3 FCFF. Which is difficult here? Obvious. First I will do that. What are difficult? First let us complete them. Listening, this time believe me, guarantee you will be successful if you do mergers, business valuation, are you understanding or not? Bond valuation, share valuation, equity segment properly you prepare. Listening or not? Equity segment. Properly prepare the complete equity segment. 6 chapters are there in our syllabus in equity segment. Listening? That segment you do properly. Any question paper, good, bad, worst, any question paper, this equity segment 6 chapters will come for 50 marks in exam. Any paper you take, any paper. Okay? Equity segment of what chapters will be there? Share valuation, bond valuation, mergers, acquisitions, business valuation, portfolio management, mutual funds. How many are there totally? 6. These 6 chapters, you will get a good amount of marks. Risk analysis chapters, they are asking 15 marks in a trend. Last 3 attempts you see, risk area, the area of risk is tested for 15% of the paper. What will come under that chapters? Security analysis will come, risk management will come. Which one? Security analysis. Next one, risk management. Security analysis chapter, risk management chapter, portfolios lo some area, risk area. Those 3 are asked for 15 marks in any question paper. Yeah. Risk management to security analysis has become a fancy question in every examination of CA final AFM. Got the point, everyone? So we will do in the tomorrow session those areas. First we will complete business valuation after this. Okay. Let's see the last question for the mergers we are going to do. Start. BA Limited, DA Limited. Both the companies are operating in the same industry. Financial statements of both the companies for the current financial year as follows. Don't read the full statements and waste your time. Just they have given balance sheet, income statement. Income statement lo only important information for us is EAT. What is the EAT? Bah. Really? I'm not asking full form here. How much is the EAT of BA Limited? 2,10,000. DA Limited 99. Number of shares are given. Can you please tell me EPS? I will write here itself. Tell the EPS value. EPS value will be how much, sir? 2.1. Next one. 99,000 divided by 80,000. 1 point. Okay. Next, number of equity shares, dividend payout ratio, market price given. So dividend payout given. Can you please tell me retention per proportion? 0.6, 0.4. How much retained? 60. Paid out 40. How much retained? 40. Paid out 60. This is the question. Shall we continue further? Assume that both the companies are in the process of negotiating a merger, etc. They said. First, bit number 1. Sir, in this, my target is to explain only the bit 1. Bit 2 and 3, again same concept. Share exchange ratio, calculations, everything. Main crux of this entire concept is decomposition. What he is asking, let us see. Decompose the share prices of both the companies into EPS and PE component. Tell me. MPS can be calculated as EPS into PE ratio or not? That's what he is asking. Decompose the share price into EPS and PE. Over. Next. And also segregate EPS into return on equity and book value terms. Are you listening? Tell me what they asked. Don't say yes, except that tell something else. Tell what they asked you to do. First, decompose MPS into 2 parts. What are the 2 parts? EPS, PE ratio. EPS again break into 2 parts. BVPS, ROE. BVPS, ROE. Okay. 2 minutes if you concentrate, we'll complete and go to the next one. Shall we? See there. First thing, Bill, remember this point. MPS in the question given or not given? First tell me. MPS in the question given, not given? Given. Okay. I will do one thing. See here. If you want, you can also do along with me. Branch into 2 parts. 2 companies are there. BA Limited, DA Limited. Again for BA and DA, make 2 branches. MPS, EPS, PE. MPS, EPS, P, EPS again branch, BVPS, ROE, EPS branch, BVPS, ROE. If you can format like this, easy, 2 minutes you will complete. Tell the answers. I will show you the question, because the study material question, this question numbers are different. Okay, study material question you do at home, this you solve in the class. First tell me, do you know the value of market price per share or not? How much? 40 and 15. Write down first. 40, 15. This should be broken into how many parts? 2 parts. What are that? EPS and PE ratio. See there, EPS we calculated already, 2.1, 1.2375. Write down. 2.1. Okay. Tell me, what is the P by E means what? P represents what? MPS. E represents what? EPS. We are having MPS, we are having EPS. Can we calculate the PE ratio or not? Tell the value. 19.04. 0476. Next. What is the PE ratio of next one? 15 divided by 1.2375. Sir, don't copy, sir. Please do. 12.12. Okay, 12.12. What is 12.12? PE ratio. Very good. Next. What is the next one? BVPS into ROE. I will ask a question. Please tell me. What is ROE? Don't tell full form. What is ROE? Yes. Someone is answering. Not formula. So what is the R here? So what is the concept of entire R? Why he is asking us to calculate? First I will ask you one question. Tell me. One second, sir. One second. Let me complete it fast. First point number 1. How much is the retention proportion? How much is the retention proportion? 60, 40. Correct or not? Do you know share valuation G equal to B into R? G equal to R is return on equity only there. B into R. R in N. Return on equity. Do you know? That's why they are asking to calculate growth rate in the next question. If you calculate ROE as a missing figure here, you can use that in the growth rate. Listening? Now listen. BVPS is also called as NAV. BVPS is also called as what? NAV. Already in one question I told you. Okay. Now tell me. See the questions are that's nothing. No efforts required. What is this total? Assets. What is these two? What is outside liability? Answer, sir. 24 minus 12 lakh is how much? 12 lakh. 12 lakh is the net worth. Correct? Book value technically. 12 lakh is book value. Divided by how many number of shares are there in this company? 1 lakh. Tell me what is the book value of BA? 12 rupees. Like that. Tell me. What is the total of assets? Minus outside liability. How much is? 7 lakh. Totally how much lakhs? 8 lakhs. Divided by how many shares are there? 80,000. Tell the BVPS 10. So tell me, BVPS of BA Limited is how much? 12, 10. Write down. $12, $10. Okay. Tell me now. Formula is EPS equal to BVPS into ROE. Now we know the value of what? BVPS 12, EPS 2.1. Can you calculate the ROE as a missing figure or not? 2.1 by 12 into 100. 17.5%. Next. 1.2375 divided by 10 into 100. 12.375%. Everyone understood the calculation clearly? Yeah? Everyone? Okay. Now I ask you a question. Since we know R in both the cases, please tell me the G. G equal to what? B into R. What is the B of first company? 0.6 into R is how much? 0.175 value. Sir, fast sir, I don't have time, please. How much? 1 second. Sir, last benches lo whoever are sitting, did you understand what I said now? Had we calculated ROE or not in the question? Why he have given the ROE in the question? To calculate what? Growth. Growth is a product of two things. Number one, B. Number two, R. What is a B? 0.6. What is B? B means what? Retention proportion. I calculated already here. Okay, tell me. 0.6 into 0.175 value. 10.5. Very good. Next. Here G equal to B into R. What is the G? B? 0.4 into 0.12375 value. 4.9. That's it. This is the answer for this particular question. Everyone understood the concept clearly? Yeah. Okay. See here. Just I will show you how this answer has to be presented if comes in exam. See here. This is how it should be. BA Limited, DA Limited, 2.1, 1.2375. BVPS into ROE. ROE is the balancing figure. BVPS divided by number of shares. All these things calculated. Finally, they got the answers. Calculation of growth rate. Growth rate is B into R. It means retention proportion to return on equity. Retention means 1 minus payout ratio. 1 minus 0.5 into 0.1 by 10.5, 4.95. Everyone understood the concept clearly? Yeah. That's it. With this, the main questions of the mergers chapter has been completed. Let's come to the next chapter, business valuation. Please open that. Please come to the chapter corporate valuation. You can call it corporate valuation or business valuation as the case may be. I have good amount of questions with me already. Super questions which are already tested in exam. Let us do directly. No basic questions. See that directly going to the most important ones. Please take question number 21. In my material 21, in study material I don't know, but it is there. See here, this question. This question, wherever you find, stop there. Which question? 7th? Study material 7th. Sir, someone said me that it is 7th question in study material. I am going with their word. Where is the business valuation page number? 13, huh? 13.46. Okay. Yes, this is a question, sir. 7th question in the study material if you have. If you don't have study material, at least see here. I will show you the question. Question is essentially the same. First, before going into this concept, let me first put you certain things clear and then we will start. Okay? Exactly, I will take for another 1 hour 40 minutes. Okay? Till 2 I will take. I have class at 2 again. Okay? Because main motive is to complete this, not that. That can be taken later also, no problem for me. Shall I take extra 45 minutes, 1 hour? I will complete this chapter and I will send to you. Sir, that 5 days, 2 chapters, if I complete, I can complete 10 chapters. Understood my point? My agenda is at least 2 chapters. If we complete, at least a substantial good amount of syllabus we can complete with important questions in the class. Shall we? Listen. Now the point is business valuation. Only 3 concepts will be there in this chapter. Number 1, normal share valuation. Number 2, EVA calculation. What calculation?
EVA calculation. Number 3 will be there. That is FCFF. Exam 10 questions if they come. 7 questions are coming from FCFF. 2 questions are coming from EVA. One time question is coming from normal security valuation. Understood the point? So most important one is FCFF. Obviously FCFF is the most important one. So let's go by importance and difficulty. So FCFF, people are mugging up the formula. Let us not do that. Let's first understand the logic easily. After that you do whatever you want. Fatafat you can complete. Okay. First listen. I will tell you the logic of how this formula came. Logic means I won't take hours and hours. 2 minutes we can complete the logic. What is the formula? First, FCFF you can calculate in 2 ways. Number 1, you can use costing P&L account. We can use what account? Costing P&L account. Or you can use profit and loss account. First one you can use costing P&L account. Second one, profit and loss account. Sometimes they use cash flow statements also, but let's not take that. In our syllabus it is not there. So 2 things they can use. Number 1, costing P&L. Number 2, P&L account, normal accounting P&L account. Okay, see here. If you take costing P&L account and calculate FCFF, your journey starts with EBIT. Your journey starts with EBIT. Formula will be EBIT into 1 minus T into 1 minus T. EBIT into 1 minus T minus I into 1 minus T. Okay, na? So originally, listening everyone in the class? See here, profit after tax if you use, which one? I am very sorry. I'm very sorry. 1 minute. EBIT into what you have taken? 1 minus T. I'm very sorry. EBIT into 1 minus T. Okay. While calculating EBIT, interest is already deducted or not yet deducted? Loudly, sir, everyone. Not yet deducted. Interest is not yet deducted. Okay. So interest should not be deducted while calculating FCFF. Why? I will tell the reason. Next. P&L account or costing P&L account EBIT will come. What will come? EBIT. EBIT is a cash flow, not a cash flow. First tell me. EBIT is a cash flow, not a cash flow. Everyone? Because depreciation will be there. What will be there? Depreciation. So tell me. Sales minus variable cost contribution. While calculating that variable cost, we will deduct the depreciation also. What also will deduct? Depreciation. And then we will calculate, listening everyone, and then we will calculate EBIT. Until by the time we calculated EBIT, depreciation is deducted or not deducted? Deducted or not deducted? Everyone? But depreciation is a real cash outflow, not a real cash outflow. Therefore, what we need to do? Add back the depreciation. Okay, tell me now. EBIT into 1 minus T plus depreciation. EBIT into 1 minus T plus depreciation is a cash flow. Correct or wrong? Answer. Sir, please listen carefully. EBIT into 1 minus T. EBIT is a cash flow, not a cash flow. Because in that what is there? Depreciation is there. Therefore, what we have done? Added back. What added back? Depreciation added back. So, khel khatam. 1 point is completed. Please, everyone, listen. So, we added back depreciation. EBIT became a cash EBIT now. Which EBIT? Now I will tell. This is a cash flow. Right or wrong? Right. But the problem is, sir, 100% this is right. There is no wrong in that. Pakka this is right. Now the problem starts. Problem is, I have 2 pockets. Cash is there in this pocket and this pocket also. You are considering cash outflow from this pocket only. In this pocket, who will consider? The balance sheet, the P&L. Listening or not? This pocket is P&L. This pocket is balance sheet. From this pocket also cash is going on. You are calculating the cash flow analysis, profit analysis, cash flow analysis, not profit. Means you should consider all the areas wherever cash is going out and coming in. EBIT is a P&L account. I mean, the costing of financial, leave it off. EBIT is a P&L account, balance sheet. Means it is not a balance sheet. Purchase of assets to whom you will give? There also I am buying. Purchase of asset will not come to P&L. Purchase of asset don't comes into. But what is going out? Cash is going out even in that case. But we are not considering in EBIT. Therefore, what they do, whenever company makes a capital expenditure, that is a cash outflow, but not affecting the costing P&L, we are calculating not EBIT analysis, we are doing the cash flow analysis. Therefore, they will add back or deduct the capital expenditure as the case may be. Understood the formula analysis now clearly? Yeah. You tell me, I will listen. Capital expenditure is a, capex is a inflow na outflow na? Sale happens na inflow. Sale happens inflow. Purchase happen outflow. Sale happen? Purchase happen? No answer. 1,000 rupee EBIT. Tax forget about it. 1,000 rupees EBIT. Depreciation 50 rupees. EBIT? Depreciation? Now tell me what is the total? 1,050. I say 1,050 is the total cash inflow of the entire company this year. Right or wrong? Wrong, yeah. Cash account, if you see, 30 rupees or 40 rupees is there. Why? I purchase plant and machinery, not affecting EBIT. Are you understanding the point or not? Understood? So I purchased what? Plant and machinery. Now tell me, plant and machinery purchase is a inflow na outflow na? Minus from that, because in EBIT calculation asset purchase will not come. Understood everyone? You know trading P&L account? First one, what it will come? Debit side first one. Stock, forget about it. Next one. Purchase of what? Machinery, purchase of raw material. Adi, purchase of machinery comes to balance sheet. That is also cash outflow only. This is also cash outflow. EBIT consider revenue items only. What items only? Revenue items only. We are doing revenue FCFF, capital FCFF, total FCFF. But when you take EBIT don't consider balance sheet items. Understood the logic? That's why we will adjust balance sheet la cash inflows and outflows to that. Understood the point clearly? Tell me now. EBIT into 1 minus T. Cash flow na? No. Depreciation is added back. Cash flow na? Yes. Till now, whatever you have done, P&L EBIT became a cash EBIT. But balance sheet whom we will give? Now we have to do that. Balance sheet, two things will be there. Capex, working capital. Capex? Loudly sir. Capex, working capital. Okay. Capital expenditure means outflow of machinery. You are purchasing a machinery. Then minus. Sale of machinery plus. That's why we always write plus or minus capex. Plus or minus, that can be plus, that can also be minus. We can't tell. Sale of machinery gives plus. Purchase of machinery will make it minus. Understood the point everyone? Next. Working capital, very important adjustment. Which one? Working capital. Last year debtors 30. This year debtors 40. What do you mean by that? Last year cash blocked is 30. This year cash blocked is 40. Means extra how much cash inflow is blocked. Are they treated as outflow minus 10? Understood the point clearly? Yeah? That's why. But either debtors, stock, receivables, everything separately we should calculate. Listening, sir, everyone? So now tell me point number 1. Answer to my question clearly. Shall we continue? Okay. Now answer. EBIT is a? EBIT is a? EBIT cash or non-cash? Why? Why? Loudly, what is included? I'll ask you one question. P&L point of view, you tell. What point of view? P&L point of view. How many of you will tell right answer? I will see now. P&L point of view, you tell. EBIT into 1 minus T. Cash flow na, not a cash flow na? Cash flow na, not a cash flow na? EBIT into 1 minus T plus depreciation to the extent of P&L, is it a cash flow or not? Wrong answer. Sales there can be credit sale. That's why current assets are adjusted there. How to calculate EBIT? How to calculate EBIT? Sales minus costs. Are variable fixed, forget. Sales minus cost. Tell me. Sales minus cost. Sales is cash sale, credit sale, both. Credit sale means cash realized or not realized? Not realized also you are taking here, na? That's why deduct in the form of current assets there. That's why working capital is adjusted. Understood the point clearly or not? Non-realized cash will be in the form of not creditors. Unrealized cash in sales is in the form of answer debtor. Therefore adjust the debtors. EBIT already sales are taken. In that sale, some sale which is not realized is also there. Adjust that in the form of working capital. Both will knock off each other, and balance a sale which is really realized in the cash only will be considered. Understood the point or not? That's how this formula was made. Tell me, EBIT into 1 minus T plus what? Depreciation plus or minus capex plus or minus changes in working capital plus or minus changes in working capital. Okay. This is using which P&L? Costing P&L. Now we will use accounting P&L. From PAT you will go. Okay, from PAT. From PAT if you go, there is a problem. I will tell you, please listen carefully, sir. Please, shall we? Please answer to this and tell. We are calculating cash flow for what? FC, F. Last F is what? Firm means equity or debt or entire company. Loudly? Entire company. Okay, na? Now listen carefully. Shall I? Please apply this and listen carefully, sir. Just 2 minutes you answer. I have my own earned 100 rupees are there. My own money I kept in pocket. I took 50 rupees also from you. Loan money. Totally how much? Totally how much? 150. Totally 150. Now listen carefully. Listening everyone? Totally how much is there? 150 is there. Okay. Now listen. There is a family. 3 people are there. Please listen. A, B and C. I am C. Let's say C took money from A. C has 100 rupees. C took money from A 25, B 25. From outsider Mr. D I took 50. Totally how much is there in my pocket now? Please sir, totally how much is there in my pocket now? Answer? Now I ask you a question. Tell me, how much amount is available for our family after paying outsiders? I said, what is our answer? Did you understand my question clearly? Again start, sir. How much money I have? I am C. How much amount? My own money. How much money I taken from my brother? 25. From another brother? Totally how much I have now? 150. Outsider how much I have taken? 50. Totally how much I have? Answer? Now I ask a simple question. How much amount I have? How much amount I have after paying outsiders? Answer? 150. Why you are not telling 100? Because A and B are also considered as a insider here. Correct? Next I will ask you third question now. I said, how much available with me? 100. You are deducting also whom now? They FCFF difference. FCFF la debenture holders are also considered as a insiders only. In which calculation? FCFF calculation, who is also considered as an insider? Everyone. Debenture holders. But FCFF calculation, FCFE calculation, debenture holders also will be treated as a outsiders only. Treated as a outsiders. Therefore, now tell me, we are doing FCFF or FCFE now? Loudly, sir. Therefore, who is also an outsider? Sorry, who is also an insider? I'm very sorry. Who is also an insider? Therefore, payments made to them should not be taken as a payment. That's why we will add back the interest. Do you understand the point or not, everyone? Profit after tax law we are going to add back or not? Tell me what we are going to add back first. Depreciation. Next what we are going to add back? Interest after tax plus or minus capex plus or minus change in working capital. Write down these two formula first. If you understand the logic, problem becomes very easy. Okay, done. Tell me, what is the formula for FCFF through EBIT? EBIT into 1 minus T plus depreciation plus or minus capex plus or minus changes in working capital. Next, PAT through FCFF? PAT plus depreciation plus interest after tax plus or minus capex plus or minus changes in working capital. Shall we do a problem now? Let's start. We will do 3 questions in this. 3 questions with 3 different concepts are there. Let us do FCFF. We will get a full clarity. Start. 21st question. Following information is available with respect to XYZ Limited, which is expected to grow at the higher rate for 4 years and after that stabilize at a lower level. Revenue. Base year information 2,300, capital expenditure 280, depreciation 200. Information for the high growth and stable growth are as follows. Revenue and EBIT 20% and 10%. Growth in capital expenditure and depreciation 20%. Capex is offset by depreciation. Risk-free rate 10%, 9%, equity beta, market risk premium, pre-tax cost of debt, debt equity ratio. For all the time, working capital is 25% of the revenue and corporate tax rate is 30%. What is the value of the firm? He is asking the value of equity, a value of the firm. Means we have to calculate what? FCFF. Read the question once, we'll start. Tell me, it will grow at the rate of 20% for how many years? After that, it will stably grow at 10% till perpetuity. Okay, done. Next one. How much growth in capital expenditure and depreciation will be there? 20% for how many years? 4 years. After that, capital expenditure, excess capital expenditure every year and the depreciation will exactly be equal. Is the assumption. Okay, offsets each other. Sir, capital expenditure and depreciation, how come both will be equal, sir? On capital expenditure, some percentage of depreciation we will apply. No, he is not telling that. He is telling that every year, additional capital expenditure you will put or not. How much additional cash outflow of capital expenditure you are putting, total depreciation on full capital expenditure, both will be equal. Not understood. Capex offset by depreciation. See here once. See here, sir. Year 1, year 2, year 3, year 4. Okay, va? Tell me. Total assets of the company, 1000 crore. Total assets of the company, 1000 crore. First year, additional capital expenditure, 200. Next year, additional capital expenditure, 250. Next year, additional capital expenditure, 350. Next year, additional capital expenditure, 500. Listening, everyone? Now tell me. Listening, sir? Tell me. Now, I will calculate depreciation. I will calculate what's our depreciation. Now tell me, what is the total capital expenditure? 1200. How much? 1200. Depreciation will be calculated on 1000. Depreciation is calculated on 200. Depreciation is calculated on 1200. Answer, sir. Some amount will come or not. Depreciation here. This and this is equal, he is saying. Are you listening, sir? The meaning. Capital expenditure, total and depreciation are same. Capital expenditure of every year and the total depreciation is same. every year additional capital expenditure whatever you put will be equal to the total depreciation on all the assets. That means this and this will offset each other. What and what will offset? What will offset each other? Total assets value and depreciation will offset. It will never. Unless and until depreciation rate is 100%, you can't have that. Sir, assets see 100 rupee. Depreciation will be 100 or less than 100. So both cannot offset. I'm not telling capital expenditure and depreciation are offsetting. What are offsetting each other? Extra capital expenditure of every year and the total depreciation on entire capital expenditure, both will offset each other. That's the meaning there. Understood the point clearly? Yeah? Let us do one by one, please. First step number 1, you tell me, I will write. Point number 1, what is the formula? We have to use which model? EBIT. What is EBIT? What is EBIT? 300 crores when today, base year. We are going to calculate like that for how many years? 4 years. First, before going into anything else, first answer, step by step let us do. Working notes we have to prepare. Tell me, point number 1, what is the total formula? Tell me. Hello everyone. EBIT into 1 minus T. Plus depreciation. Plus or minus capital expenditure. Plus or minus changes in working capital. Changes in working capital. Please tell me, what is the base capital expenditure? 280 crores. Capital expenditure is growing at what rate? First, shall we do that? Calculate. Write down. How to do the question? I will tell you 2 questions. I will solve and I will show you. Step 1. Calculation of capex. Fast. Year 0, 1, 2, 3, 4 and perpetuity. P means perpetuity. First, everyone, tell me, what is the capital expenditure I am putting? First year, how much? 280. Next year, I will put a capital expenditure of how much? There is a growth of how much? 20%. Tell the value. Sir, calculate fast. Start. 336, huh? Next. 403.2. Next. Next. 580.61. That's all. 4 years ki you calculated. What is this? What is this? Capital expenditure. Tell me. First year how much is a capex? Next year how much is a capex? 336 you are spending. He is saying that this 336 and depreciation will be same for the last perpetuity. Listening everyone. I will tell you how it will be understood. As of now, I am not doing anything here. Next, second bit. Calculation of depreciation. Year 0, 1, 2, 3, 4, perpetuity. Tell me, what is the base year depreciation? Write down there, sir, clearly. Base year depreciation, how much? Depreciation also will grow at what rate? Write down, how much? 240, 288, 340, see, 414.772 offset. There is no depreciation for perpetual period. Now did you understand a capital expenditure offset means? Means what and what will be, sir, one second, I have one question. 345.6 is depreciation on how much amount? Again, 345.6, sir, without knowing the concept, don't mug up the models like this. If it comes like that, I should do, forget about it. 345.6 is depreciation on what? Depreciation on what? 483.84 is a utter nonsense. That's what I said. 483.84 is not the total capital expenditure. It is the capital expenditure of third year. Capital expenditure of what this person is saying. Now tell me, 345.6 is Depreciation on total assets. He is saying this depreciation and this additional will offset in perpetual period. What will offset? Total depreciation on all the assets offsets with additional capital expenditure of that year. Understood the point? Like that you should understand. Step 3. What is the third step we require? Change in working capital. Change in working capital. Do it. Year 0, 1, 2, 3, 4, perpetuity. Start. How much is the revenue? 2000. Growth will be 20%. Start. Fast, fast, fast. Calculate. 2400, 2880, 3456, 4147.2. How are you doing, sir? Don't get wondered. Is it 200? Is it 2000? Or else people will get, sir, mugged up everything. Yeah, that much time and energy I don't have. Okay, here it is 200, here it is 2000. Therefore, extra 0, I added. Okay, start. Last one, tell me 10% growth. Tell me the value, perpetual. 4561.92. Okay. Working capital will be how much percentage of revenues, he said? Loudly. 25%. Tell me, 25% of 2000. 500. 25% of 2400. Next, 25% of 2880. 720. 25% of 3456. 864. 864. Next, 4147.2 divided by, into 25%. 1036.8. Next, 4561.92 into 25%. I didn't understand. 148. What is 1140.48? Working capital. Listen very carefully. Working capital should not be total, it should be change. Tell me, how much I spent in the first year? 100. Next, 120. Next, 144. Next, next, 103.68. Done now, everyone? What is this? I want one answer. What is 500? What is 500? It is the sales blocked in the debtors form. Sales blocked in the debtors form. Next year, what is that balance? 600. Means extra how much cash was blocked this year? 100 we should take. That is outflow. Listening or not, everyone? Okay. Next. Sir, tell me, all ingredients are ready to prepare the main item or not? Tell me what is the formula. Please, sir, everyone calculate. Tell me what is the formula. EBIT into 1 minus T. EBIT has been given in the question or not? See there and tell. Given. We can calculate 20% and calculate or not? Yes. After tax also we can calculate. Next, adjustment plus depreciation. Available. Next. Next. CapEx. Available. Next. Available. Are we ready to calculate everything or not? But we didn't calculate KE calculation and KO calculation. What we didn't calculate? KE, KO. We didn't calculate. He also gave that. Okay. See here. Those calculations, let's not waste time in doing that in the class. I will show you the final answer directly. See this. Don't waste time in calculating KE, KO. See here. What is the KD? 9.1 and 9. High growth how much it is? 9. 9.1. Stable growth how much it is? 9. Like that KE. High growth stable 16.9 and stable growth how much it is? 14. Next. Weighted average cost of capital 13 and 12. These are the three answers that we need to have. Forget about KD, KE. Just note it down there. KO, high growth period 13, stable growth 12. KO, high growth, stable growth. What is the answer for the high growth? 13%. Stable growth? 12%. Now all the answers are available or not? Yes. Sir, hopefully everyone can calculate KD, KE and KO. That I need not do in the class. Okay. Let's start. Prepare the biryani. Write down. Calculation of FCFFN, value of the firm. Calculation of FCFFN, value of the firm. Two problems you do along with me. Full clarity will come. See there. Year 0, 1, 2, 3, 4, perpetuity. Exams also write down the 0 column. Confusion will not come. Listening? Or else a confusion you will do half the wrong answers. Instead of taking the 0 value, you will take 1. 0 values you will take in first year. Gone. That's why maintain 0 column always. You help me, both of us, let us do together. Tell the EBIT values. Start. Do along with me. 300, 360, 430, 2, 5, 518.4, 6, 22.08. This is how much percent growth? 20. But here it will grow only at 10%. 1 second. Question he said the EBIT is growing at how much rate? 20% in high growth, 10% in stable growth. Okay. Tell me. 680? 29? Okay. Sir, please tell me one answer. Can you directly tell me EBIT into 1 minus T now? What is the T? Tax rate, how much it has given? Can you calculate 0.7 and tell the answers now? One by one tell the answers. Sir, everyone do. 210, 252, 302.4, 360, 88, 430, 46, 479, 479. Okay. Tell me what we calculated now. EBIT into 1 minus T. Sir, everyone understood? Okay, done. Next, EBIT into 1 minus T. Next, what we need to add back? Tell the depreciation answer. You have the answers with you. Depreciation each year. First year is? Next. 240. Next. 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 4. Next. Offset. Okay. Next. Next, what we need to deduct? Deduct is outflow. Depreciation is added back, yeah, which is not a cash flow. Capex is not deducted, we are deducting now. Less add, less. Tell me. 280, 330, next. 4, next. 0.84, next. 5. So I didn't understand what you said. 580.61. Okay, 580.61 offset. Up to here calculations understood, everyone? Next, enough again changes in working capital. Please tell me, all the years working capital is rising or falling? Rising. Rising means go on, cash is getting blocked every year. It is an outflow. Tell me, minus changes in working capital. Please let me know the answers. 0. From here you tell me. Start. 100, 120, 144, 172.8, 103.68. Okay. 103.68. Okay. All the formula was presented in the form of a table or not? That's it. Total. Total of what you will get? FC, FF. Calculate the total. 0 year you forget now. From now 0 year you forget. Calculate from the 1. Don't calculate from 360. 252 onwards you should calculate. 252 plus 240 minus 336 minus 100. Sir, everyone do, sir. Practice in the class itself. Tell me how much it is? 56. Next. 67 point. Next. 80.64. 96.77. That you leave. Don't do. I will explain how to do. Okay, 96.77. Up to here, are you all comfortable in doing the answer or not? Okay, now answer. Asal main point came now. First thing, tell me. Shall I continue? Sir, before you come to the class and after you came to the class today, first mergers equations, are you confident or not? Sir, business valuation, this logic everyone understood now clearly. How to present the answer understood? Now last question for you in this problem. Tell me, this is FCFF. It's like a dividend. Like how you do D1 by KE minus G. So D1 by KE minus G, if you do, you will get the value of company per share. Answer, sir. Per share. Okay, na? This is the value of one share, total company cash flow. Na? Okay. D1 by KE minus G, if you do, you will get P naught. I want value of company directly. FCFF 1 divided by FCFF 1 divided by KO minus G. Equity ki KV, debt ki KD. We are valuing entire firm. So we will take KD, KE, KO na KO. Denominator la KO should come. KO already we calculated 13% or some, I didn't remember, 11 or 13 and 12%. That will be considered. Sir, that all I am not asking you. I have one question answer. What is this one? This is first year, second year, third year, fourth year, fifth beginning onwards. Therefore, we will consider it as a fourth ending. That's why same P factor we will consider. Understood or not every year? Understood? Now answer my question. What should come here? This will be fourth year value of fifth year value of fifth to perpetuity. Fifth to perpetuity, one value has to come. Correct? Tell me. I want value at P1, P2, P3, P4 ending. Answer. Start again, everyone. P4 ending. P4 equal to what is the formula generally? D5 divided by KE minus G. P4 equal to D5 divided by KE minus G, because value of any asset is present value of future cash flows. For P4, future will be D5. Like that for listening, we want the value at the end of first year, second year, third year, fourth year. Answer. Therefore, value of 4 equal to FCFF 5 divided by KO minus G. FCFF 5 divided by KO minus G. FCFF 5 can be written as D1 can be written as D0 into 1 plus G. FCFF 5 can be written as FCFF 4 into 1 plus G. What is the FCFF 4? Okay, na? What is the growth rate in the stable period? Answer. So how to do? 96.77 into 1 point? 1.1. Tell the answer. 96.77 into what is the growth rate? 10% into 1.10. How much you got? Some amount has you got or not? Like that you should not do. That's what I wanted to tell. Never do like that. Flow if you do, From there, answer what? Why, sir? I mugged up like that. Suddenly you don't change the pattern. Shall I tell you why we should not do? Listen. Sir, previously, 1 hour back also, you said the same. I did the same. Why you are changing your words again? We have to in this question especially. Do you know why? I'll ask you a question, answer. How you got 96.77? Shall I tell you how you got? EB8 into 1 minus T. Plus depreciation. Minus capex. Minus working capital you got. Correct? 96.77 if you take and calculate perpetuity. For perpetuity also you are considering capex and depreciation. But for perpetuity, capex and depreciation offset each other. Did you understand the point or not? Again, 96.77 calculated or not? Capex and depreciation are offset or not offset? In 96.77 calculation, capex and depreciation are offset or not offset? That means if you take 96.77 into growth and take to perpetuity, you are again considering what and what? Capital expenditure and depreciation again you are considering. That's why in the study material they will do valuation for this and take perpetuity. We will mug up. If question comes in FCFF, in this bit, don't take this. Take this. Why? Don't ask. Like that we should do. So, why they are doing is, this is a reason. 96.77, what is there? Answer, sir. Capex and depreciation is also there. Okay? But perpetuity, when you take, perpetuity should not consider what and what? Capex and depreciation. But when you take 96.77, you are again considering capex and depreciation. That's why they don't do like that in this question. Here we will calculate one value. Here they will calculate one, that directly they will consider, and that will be considered as a FCFF 5 directly. FCFF 5. Don't do FCFF 4 into 1 plus G, because that 4 la depreciation capex is there. Listening or not, everyone? Now you tell me. Don't copy anything. Just answer. And moreover, I forgot to tell you. This is at the end of first year, second year, third year, fourth year. Answer. Fourth year. Fourth year ki stable period started by that time. Correct or not? Stable period ki what is a KO? Answer. Fourth year after what is a KO? We should consider KO place like 12 there. That means total is 479 minus 103.68. Take calculators. 479 minus 103.68 divided by KO is how much? Growth is how much? KO how much? 12%. Growth is how much? 10%. And divided by 2%. That's the answer. That's a terminal value answer. Babu Bujji Kanna. Understood or not, everyone? Tell me, why we are not taking 96.77? Like that we should do, do you know, can I take 96.77 there? Yes, you can take if the question like capital expenditure depreciation offset point is not there. If not there, you can consider 96.77 and that's the right way. Understood the point or not? Always don't mug up. Like this, if it come, we should do like this. Next they will change question in exam. So therefore, please listen carefully. Why that adjustment came, you understand. Even if they change, you can write the answer properly in exam. So point number 1, everyone answer my question. 375 point something you got. That we will expect to continue till the perpetuity. So that divided by KO. Fourth year after, what is the KO? 12%. So 12 minus 10%, 2% you divide, you got some 18,000 something. That we need to take here. Understood or not? Tell me now. Let's calculate and do. Close this particular concept. Start. Tell me, what is the V4 value? FCFF 5 divided by KO minus G. FCFF 5 value you tell? 479 minus 103.68. Value please. 332 divided by what is a KO? Minus 2%. 375.32 divided by 10%. Value, please. Huh? Oh, sorry, 10%. Sorry. 10%. So divided by 2%. 870, 18,766. Point 766. Okay. 18,766. Okay, va? Now you answer final question and then conclude the answer. Tell me, all this calculation when you are doing, all this calculation sheet we are doing when? Today. Therefore, PV you should take it 13% as per today's situation. Listening? PV at the rate of 13%. Tell the values. Fatafat, give the answer. 0.885 783 693 613 இல்ல now directly present value of FCFF you tell me. 49.56. Next. 52.62. 81.33. Hey, how come it is possible? I am blindly writing. Huh? Yeah, bro, you have added 80.64 plus 0.693. Where a level answer will come. Next. 59.32. Next. 11,503.56. Total this value of company equal to rupees 11,720.94. Okay. Have you calculated? What is the answer we got? 11,720. Which question it is? 6th, 7th, 8th? 7th. See here. Exact. If you do answer perfectly, go as per the model, answers won't deviate from the study material answers. Perfectly you will get the answer. Decimals also won't change. Provided you go as per the model. Properly you do, you will get the answer. Sorry. Now we will do one question I will give you. Try question number 8. Same question. Not same, similar. This was 8 marks question, that was a 10 marks question. So many working notes, and these working notes will not be there in this. Read the question first. Following information is given with respect to WXY Limited, which is expected to grow at the rate of 20% in the next 3 years, and it will stabilize at 8%. Revenue, cost of goods and operating expenses, capital expenditure, depreciation. During high growth period, revenues and EBIT will grow at 20%, capex will be at 15%. From year 4 onwards, normal growth period, revenues and EBIT will grow at 8% and incremental capital expenditure. Incremental capital expenditure. Here clarity is there. Incremental capital expenditure will be offset by depreciation. During both high growth and normal growth period, net working capital will be 25% of revenue. Weighted average cost of capital, they only given. Corporate income tax side, they only given. Calculate the value using the FCFF model. Start. Don't directly do. First thing, working notes are important. Okay? What will be the first working note? What will be the first working note? I have one small question. Tell me. See there and tell, no problem. Capital expenditure. Concept you tell me. Revenues are how much? 7,500. COG is 3,000. Operating expenses are there. Capex is there. Depreciation is there. How much is the depreciation? Everyone. That is already included in what? Answer? Operating expenses already it was included. What is included? Depreciation is included. Listening everyone, I have one small question for you. See the question there below, this content you read. During high growth Okay? Now tell me. Capital expenditure net of depreciation is growing at what rate? Answers are 15% rate. Answer. Capex is rising by how much percent? 15. Depreciation is rising by how much percent? 15. Wrong answer. Other point. Like this, if you do, gone again. Capex, how much it is grown? We don't know. Depreciation, how much it is grown? We don't know. Capex minus depreciation, net amount is growing at 15%. Listening or not, everyone? Growth rate of Capex? Don't know. Growth rate of depreciation? Don't know. What we know? Hey, listening everyone? See the screen once. See the screen. What is the depreciation? What is depreciation? Now tell me. 600 plus 15%, 15%, 15%, correct or wrong? Utter nonsense answer will come to you. 600 has no relevance. Listening? 600 has only one relevance. Do you know what is the relevance? Base information, Capex minus 600 will do. Here, what is this? What is the depreciation? How much is the depreciation? 600. 750 minus 600? 150 will grow at 15%. 600 might grow at different rate. Capex may grow at a different rate. That is not even given in the question. What was given? Net amounts are growing at what rate? Did you now understand the adjustment? Answers are everyone? Shall we do it together? Let's start. First, step 1, calculation of Capex net of depreciation. This question is given for 3 years or 4 years? 3 years and perpetuity. Okay, write down, sir. Year 0, 1, 2, 3, perpetuity. Okay. Next, year Capex. Tell the base year Capex. 750. Depreciation 600. Net Capex how much? This 150 will grow at 15%. Last year what is the growth rate? 8%. Offsets each other. Just I have written to confirm from you. Don't read that. Tell me, 150 becomes how much? 172.5. Next. 188, 198.38. 220, 13. Next one, offset. Don't just copy. Understanding and copying, everyone. Next, step 2. Calculation of step 2. Calculation of change in working capital. You help me with the numbers. We will do year 0, 1, 2, 3, perpetuity. Tell me. Tell me. What is the sales? Growing at what rate for the first 3 years? 15 or 20? The question is here. Revenues and all these will grow at what rate? 20%. Last year it will grow at 8% forever in perpetuity. Okay. Now, tell me, 7,500 plus 20. 9,000? 9,000, 10,000. Oh, okay. Next. 10,800. Next. 9 plus 8%. 13,000. 9. 996.8. Okay. This is sales. Working capital will be how much percentage of sales? 25%. Value 1875. Faster. 2250. 2700. 3240. 3499.2. Tell me, there is a constant growth in working capital or not? And constantly my cash is also getting blocked. Therefore, every year there is a change in working capital negatively. Tell me, minus. Next. 259.2. Okay, bye everyone. Next. Working capital change also over. Ingredients available. Shall we prepare the final one? Start. Step 3. FCFF and value of company. Start, sir, everyone. Year 0, 1, 2, 3, perpetuity. Okay. First, directly, let's not waste the time now. EB8 into 1 minus T, directly you do and tell. Because sales is, EB8 is how much, sir, in the given question? Sir, EB8 directly we can do. See here. 7,500 minus 3,000 minus 2250 minus, 2250, that's all. How much? 2250. Sir, capital expenditure will come in EB8 here, will not come in EB8 here. Will come, will not come, will not come. EB8 calculation will not come. But operating expenses law already what is there? Depreciation. So therefore we deducted it. Hello, listening everyone. So tell me. Separately you need not deduct depreciation again because already in this 2250 it is there. Okay. Tell me. What is the revenue? 7,500 minus what is the cost? 5250. What is the total available? 2250. Shall we start doing it or not, everyone? Tell the answer. What? Sorry, first write down EB80. What is the EB80? Growth at the rate of how much percent for the first 2 years, 3 years? Tell the values. Start. 2700, 3240, 3888. Next. Calculate directly EB80 into 1 minus T. Sir, EB80 into 1 minus T means directly take away the tax rate and tell the answer. Tax is how much percent? 30%. Tell the value. 2250 into 30%. 70%. 1575 1890. Next. 2721.6. Next. 29.33. This is EB8 into 1 minus T. Tell sir, don't sit idle. EB8 into 1 minus T. What we need to do next? Add back depreciation. Already you have done. Add back depreciation. Depreciation is not there in the question. It is adjusted to what? Capital expenditure. Capital expenditure already we have done. Outflows are there every year. Correct? Tell these 3 numbers. Directly write down minus capex net of depreciation. Tell the value. 172.5, 198.38, 228.13. Offset. Next, minus changes in what capital? Working capital. 0 year not required. Tell directly. 375. 450 na? 450, 540, 259.2. Final value is called as what value? FCFF. Tell the value. 1890 minus 172.5 minus 375. 13. Next. One 662. Next. 1953.47. Directly don't do. Last year how to do? We want value at the end of first era, second era, third era. Sir, participate, sir. Final concept. We need to value at the end of first era, second era, third era. Dependent on what? FCFF 4 divided by KO minus G. Can I take 1953.47 into 1 plus some growth? Can I do like that? Cannot. Why we cannot do that? Offset effect is there again. So directly tell 2939.33 minus 259.2. 2680.13 divided by KO is how much given in the question already? 15. What is the growth in the? Yes. 2680.13 divided by 7%. Properly tell. 38,287.57. 38,287.57. PV at the rate of how much percentage? PV at the rate of how much percentage? 15, tell me. 0.8698. Given in the question, tell me. 0.8696 7561 65 75.6575. Sir, MRC directly you do for this? What is the value? 28,850. Others also please calculate once. 28850.52. Have you got the answer or not, everyone? See here. What is the question number? 8. See here once. Tell the answer. 28. Like that it will tally. So FCFF should not be a problem from now. Everyone clear? Everyone in the class? Sir, are you all confident with main 80% of this chapter is filled with FCFF calculation? Everyone understood that clearly or not? Okay. Just FCFE given, debt you have to remove from that value. What is given? FCFE, if they ask, total answer you got or not? Answer, sir, everyone. From that market value of the debt you remove. Automatically whatever remaining will be for the equity shareholders. Understood the point? So there is nothing great calculation for FCFE. Main concept is only for FCFF. Okay. Now some important questions if you wanted to do. In this there is one area called as a EVA. What area, sir? EVA. Sir, EVA concept I will explain now. Problem we will do in the next class. For the first 35-40 minutes we will complete it. Then we will continue with the remaining areas. Am I clear, everyone? 2 chapters I will put and I will complete. Mergers, decent number of problems we have done. Business valuation and number of problems is not important. There is one very important concept is that you need to understand. Remaining you also can do. Are you all confident with FCFF now? But FCFE, another area is there. That and EVA are the concepts we are going to discuss in the tomorrow's class first. Once completed, then I will go to share valuation area. Which area? Share valuation. After that, risk management, as I already said. One area is there, I will start. Before that, see here. EVA formula is there. Everyone in the class maybe know about it. EBIT into 1 minus T minus KO into capital employed. KO is also called as what? Weighted average cost of capital. WACC calculation will be made into capital employed. Tell me now. EVA equal to what is the formula? EBIT into 1 minus T minus KO into capital employed. This is a calculation of what? EVA. EVA la very simple logic here. EBIT into 1 minus T minus KO into capital employed. Simple logic. Logic is very simple. Just I will tell that and I will leave. See here. What is this CE called as? Capital employed. One question I will make you to do, which was given in FM only, the AFM paper only, I mean SFM paper, old papers, 2009 or 10 it was given. The fantabulous question they can ask in EVA. Remaining any question paper, so EVA that much conceptually they never tested in examination after that. It is not there in the study material. I will show you the question. 2009 8 exams they asked that question. Every minute detail of EVA will be tested in that question. Listening, okay. Tomorrow we will do 3 problems on EVA. 3 or 4 problems I will do. Okay. First problem is the most important one. Remaining all our study material questions I will do. Okay, na? That question you must do in the class. In my study material I kept that. I will show you that question also. Okay. First let us understand the logic and leave. At home, practice and come. Listening, practice and come. If you felt any problem as uncomfortable, let me know. I will teach in the class. Clear? Don't just close the books after going home. You go. If you have any problem if you are feeling uncomfortable, FCFF or FCFE anything, let me know. I will take in the class. Okay? For me, no problem. Any question from the study material, any question from the institute you give me, I will solve for you. But the point is, listen carefully. EVA calculation, how to understand. EVA can be done in 2 ways. Assets, liabilities. First one, assets. Second one, liabilities. Generally, EVA calculation is done from income statement and liability point of view. Income statement and liability point of view. But in the recent trends, ICAI is asking more questions on EVA from assets point of view. I will ask a question. Tell me. Capital employed means what? Simple question, na? Tell me. What is capital employed? Capital employed means how much capital is given by the outsiders to the company or owners has given. Simply it includes equity share capital, reserves and surplus, debentures, everything will be called as a capital employed. Correct or not? I will ask you a question. Capital employed, you will put it in dustbin or you will invest? Answer. Company raise finance by equity, preference, debt, reserves, various sources la money is raised. What company will do with that money? Put it in dustbin. What they will do? Answer. Invest in what? Therefore, assets side questions they are giving. Understood the point or not? Total of assets is nothing but capital employed. That's what I wanted to tell. Total of assets is nothing but capital employed. Research and development was done. Loudly. What is done? Research and development was done. In that research and development, successful it was, and because of that a patent is generated. What is generated? Patent. Patent is also a capital employed now. That's what one question is there in your materials also. Patent with one question came on economic value added. Adek this question. How did you understand how to approach towards EVA? EVA questions are extremely easy when you understand it properly. I repeat, EBIT into 1 minus T minus KO into capital employed is the main answer. Clear or not everyone? I will ask you a question, tell me now. Capital employed can be given in how many ways in the exam? 2 ways. One, asset side they can give. Second, liability side they can give. Liability side na easy. Equity share capital, reserves and surplus, debentures, preference shares, khel khatam duknam band. But when they give question from assets point of view, miscellaneous expenses, preliminary expenses, discount on issue of debentures, all those should not be considered in the asset side. Listening or not? Answer, sir, everyone. What is the discount on issue of debenture means? You received money, you gave discount. Ante that capital is not even received. Then why you are considering capital employed in asset side? You should not consider that the meaning. Understood the point or not, everyone? Loudly, everyone understood the point or not? Okay. So therefore, EVA, how to calculate? Logic I will tell, calculations we do tomorrow. Listen carefully. EVA, what is full form? EBIT belongs to how many people? Equity or debt or both? 3 people. Government is also there. Who is also there? Government is also there. Listen, whenever you want to take a return, return will be given when you take risk of investment, correct or not? I repeat, when you get return, simple question. When you take a investment, when you make investment, what you will get? Return. When you make what? You will get return. Without investment, can you get a return? Government will get. Not normal, fixed rate of return, 30%. Do you understand the point or not? Government is the only party who is happy at the end of the day, because on a fixed basis, 30% slab law, all companies are taxed. Are you understanding or not? From this, what is the logic you have to understand? Company capital is given by whom and whom? Debt and equity. Answer, sir. Debt and equity. But EBIT belongs to whom? Debt, equity and government. Debt, equity and government. Start again. Capital is given by debt and equity. Money belong, EBIT belong to debt, equity and government. Comparison is wrong. Therefore, remove government first from EBIT. Did you understand the logic of the formula or not? That's why first deduct whom? Government from the EBIT. Then the amount whatever you have is belonging to whom and whom? Equity and debt. Therefore, you can use KO, that is KD and KE, equity and debt. Capital employed given by equity and debt. Everything is belonging to equity and debt. That's how you get the value addition. Everyone understood the point clearly? Yeah. Answers and other things we will see tomorrow. Understood the logic of EVA concept clearly? Yeah. So in a revision session, maximum humanly what is possible, I am trying to do it. Everyone understood the concepts clearly for the today's session. Tomorrow's session, another 2 chapters target we will put and we will try to complete them. Clear? So thank you very much. Have a nice day. We will meet again tomorrow. Thank you.
So very good morning, everyone. So in the last session, at the flag end, we started with revising the concepts in bond valuation. So let us continue and complete the bond valuation in another 1 hour, 1.5 hour maximum. By the time we take our first small break, we have to complete this chapter bond valuation, such that we will start with the next area called as security analysis. Okay, a new area we will begin in the today's session. So before even we start with any other chapter, first bond valuation study material, there are no great problems contained there. So what we will do is I will show the material. Okay, even when you follow any question bank, in that question bank definitely my questions will be there, because anyway anyone has to take the questions only from ICAI sources. So let us start with that. Please see the screen. See there? See there once. I wanted every one of you, let us start doing some 7 to 8 problems in bond valuation. Okay, I told you in the YouTube channel already, bond valuation is thoroughly covered, but still revision class when you came face to face, it is my responsibility to deal with all the concepts again. So therefore what I wanted to do is, for each module 1 problem I will do. Listening, let us not put efforts on understanding how it came, why it came, when it came, what is the formula, why derivation came, all those you can see there. Clear or not? Mainly let us focus on, if a question comes, how to solve in exam. Let us focus on that. Shall we? Okay. In bond valuation chapter, there are 8 concepts we need to cover. Yesterday we already covered convertible bonds concept. Which one? Convertible bond. IP over. Normal bond valuation also we completed. 10% to 5% we have done. So 2 basic questions we completed from the study material. Study material, beyond that there is no great question, only convertible bonds questions are there in the study mat. So therefore I have material, so wherein I have covered around 39 different types of questions in bonds chapter, almost around 40 questions. So in this, some very quality questions are there. Let us see how the questions have come and what is the meaning. Okay, so we are going to take question number 6. This will be there in your question banks wherever you follow. Let us see question number 6. Okay, it is any study material, this question? Not there, I think not there. Yesterday I saw it's not there. Sir, okay, no problem here. Even if it is not there, let us solve, because these are all exam questions. Some new points we are going to learn in each of these questions. Shall we solve together? Let us begin. See that. Messrs. Agfa Industries is planning to issue a debenture series on the following terms. Face value 100, term to maturity 7 years. Yearly coupon rates are as follows. Year 1 to 2 to 3 to 4 and 5 to 7. Coupon rate 8%, 12%, 15%. Current market interest rate on similar debentures is 15. Company proposes to issue so as to yield a return of 16% per annum to the investors. Determine the issue price. Assume redemption is at a premium of 5%. This is the question. Read the question for a minute. We start doing the solution. Shall we? First answer my question. In this question, what is the new point you found? Generally, interest will be same across all the years. In this question, what is the new point? Interest is changing every year. Okay. So, first 1 2 years, what is the interest rate? Next 3 to 4, 5 6 7, 3 years. How much? So this is a variability in the interest rates. So interest rate is not fixed, interest rate is variable in this particular question. Shall we do it together? Let's start. Keep the heading. Question number 6. Okay, let's solve. Please solve very fast. Year, cash flow, PV at the rate of, this is important. Market interest rate is 15%. Company is issuing to yield 16%. Which one you should take? PV at the rate of 15 or 16? Though market is giving 15, company is giving to yield a return of 16. So for our company, we need to take it 16. PVCF. If nothing is given, market interest rate could be taken. Write down. 1 to 2, 3 to 4, 5 to 7. Fast. Tell me. 1 to 2, what is the cash flow? 8%. What is the face value? 100. Redemption is at a premium of 5%. Correct or not? Okay. Let's say. And lastly, 7 also you write. Why? 7th year what will happen? Redemption. Redemption will be at 100 or 105. Write down there. Redemption 105. So tell me. First 1 2 years what is the percentage? 8, 12, 15. 8% means how much? 8, 12, 15. Calculate the annuity for 16% for 2 years. 1.605. Next 3 4. 3 4, not 1 2 3 4. 1.192 3. Next 1.24 354. Oh, 50, 5 to 7? 2. Last one point. 354. Directly tell the PVCF. How much? 82.92 or 93? 92.896 means 93. So the time given for this is 2 minutes. We have spent 3 minutes, 1 minute gone. Done na? Everyone got the answer? In this, what is the new point we learned? Everything is same like a previous question, but what is changing here? Interest rates. Interest rates every year are not same. Every 2 years they are changing the interest rate. So variable coupon, this concept has been there. These are called as floated rate bonds. Which bonds? Floated rate bonds. These are called as a floating rate bonds. Shall we continue to the next one? Next one. Next question. So which model we completed? Basic bond valuation completed. Convertible bond concept completed. Next one. Keep the heading duration and volatility. Next concept we are going to touch is duration and volatility. Okay, first listen. Duration problem whenever given in the question. Shall we continue, sir? Listen. Duration problem whenever given in the question. One small observation for all of us. Whenever duration is given, there is a pro forma for that. Okay, lot of meaning will be there for that pro forma. We are not even concerned about what is the meaning at this stage. We are just focusing on if a question comes, how to answer. Okay, so there is a pro forma for that. You might have already known, but still I am telling one more time. See here. Year, cash flow, PV at the rate of some percentage, PV, CF. Up to here, everyone knows the schedule or not? Now we need to take a new schedule called as a proportion. What is it? Proportion. Next one is proportion into time. Time means years. Time means years. Start. Keep the heading. In the study material, in my material, it is question number 7. In your material also it might be there, definitely. These are all exam questions. It will be there. Any material you follow, it will be there. See the question. Wait a minute, I will copy for you. This is a question here. Tell me, please, what is the face value? Coupon, number of years, redemption value, yield to maturity. Tell me, what are all the information that was given? Life given or not given? Hey, life given, not given. Write down first. How many years? Whatever information is available, first write down that. Next. Coupon rate, how much percent? 16. Face value is how much? 1000. So, any redemption details they give it? Yes. Redemption is at how much? 1000. Can we do it together? Start fast. Tell me how much? 160, 160, 160. Last year I will get 160, 160 plus principal. So I will get how much? 1160. PV at the rate of how much percent? See the yield to maturity, how much? Write down. 17%. Tell the PV factors, please. 0.855. Next. 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 Don't directly do PVCF. Duration ke full calculation we have to do. Okay? Write down the PVCF values. Tell me 160 into 0.855. 1. Next. 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 85.4. Next. Next. Total. 9. Done up to here? Now you have to calculate 136.8 divided by 964.4. 116.96 divided by 964.4. Proportions you have to calculate. Anyone who calculated, tell me probability. Sorry, proportion. 1/4. 1/4. This is 0.142. Correct? Next. 1 2. 1 2. 1030 na. 4 digits you tell. 10 0. Next. Next. 0. 0.1420 into 1, 0.1212 into 2, 0.1035 into 3, like that. Proportions into the time periods. Tell the value, proportion into T, 0.142. Next. 24. Next. 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 37. Last. 81. Total. 24. Sorry, 24 years. 4.24 years. 4.24 years. Step 1 over. First one, tell me, everyone understood how to calculate duration? Simple logic I will tell. Why? What is a duration concept? Let me first explain. So, though revision, just let me explain basic idea about what is a duration. You can understand easily after that. Beyond this, I can't explain in this particular session. See that. Point number 1. How much money I invested and entered into the bonds? In that question. 964A. Wrong. First question is wrong. See again. What is the price I paid and entered? 964. Okay. My 964 money I kept into the market and entered into the market on bonds. Correct. Now tell me, I stayed in the market totally for how many years? 6 years. Now tell me, that means my money of 964.4, whatever I invested is blocked in the market for how many years? 6 years. 4.24 years only. That is second point. That is duration. Our answer. Are you understanding? In that video you watch, 1 hour I explained about how the duration formulas came.
Okay, that this is not the time to learn, but still I'm just explaining you what is the meaning of a duration. Duration is called as a payback period, principal payback period. Listening, how much you are buying, sorry, at what price you are buying today, receiving how much interest in the first year. Ante in this 964.4 you invested today, you received 160 after 1 year. Present value is how much? Means in this 964, 136 is recovered in the first year itself. Ante 14.2% of your investment is recovered in the first year itself. That's the meaning. 12.12% is staying in the market for 2 years. Okay, so on an average, the weighted average duration is how much? 4.24 years. Simply to tell, your money is blocked in the market. Money means which money? Face value, par value, market value, purchase price. Is blocked in the market for how many years? 4.24 years. Do you know what is the meaning of 4.24? At the end of 4.24 years, 964.4 is recovered back. 964.4 is recovered back. After that 4.24 to 6th year gap, you are getting excess only. Then why you are staying in the market? Come out after that. So your ideal get out period, when to buy a bond is one question, when to exit is also another question. Markets la important thing is what? Entry how much important, exit is also that much important. Exit you should take at the end of 4.24 years. That's the meaning of this bond duration. Everyone understood the concept? And next very important question, what is the use of bond duration? Bond duration will tell about what? Bond duration will tell about what? Principal payback, not payback. Which payback? Principal payback. How much you invested as a principal? That principal is recovered back within how many years? What happened? During the class, don't come and intrude into the camera. Yeah. Go. Listen, shall we? So 964.4 is the principal that I invested when? Today. That stayed in the market only for how many years? 4.24. It is not in 6 years. 4.24 year end ki 964.4 has been recovered back. But you are there still for another 1.5 year. Listening or not? So what is the ideal exit period? 4.24th year ki please come out of the market. Your principal has been recovered. Understood? This is one point. Second, what is the use of duration? What is the purpose of duration? What is the use of, where you use duration? Whenever you wanted to stay immune against the interest rate risk, immunization ki there will be only one concept, that is a duration bond. What is that and how is that? We will see in the bond immunization concept. Up to here everyone understood clearly? Okay. So what is the meaning of a bond duration? Principal payback period. How it will be useful and how we have to do, let us understand that clearly. Okay. Next one. So question number 1, bit number 1 we completed. Okay. Bit number 2. First, current market price. What is the current market price? Done. Next one, what is the duration? Next one, modified duration. What is it? Modified duration. Sir, modified duration, volatility. Both are same actually. Modified duration or volatility. Printing mistake. So, write down. Modified duration or volatility. Formula, let us write down. Volatility equal to duration by 1 plus y. Volatility equal to duration by 1 plus y. Sir, this formula will affect which concept? This formula will affect which concept? Convexity. Which concept? Convexity. In that video I explained that concept. That's why in this video I am only explaining the problems and going on from the exam's point of view. I want more concept. You can also see there. That is a revision session only last time. But 6 hours I recorded only bond valuation. Because so many students requested at that time. Sir, we are not understanding bond valuation properly. Various students. So therefore I recorded at that time more length I gave to forex derivatives of bonds in that videos. You can see there. Okay, forex derivatives of bonds I gave more importance in that videos. That's why substantially I am giving importance more to the equity segment here. Such that anyone, whoever, you can watch the videos and you can write the exam. Okay, let's continue. So volatility formula. What is the volatility formula? Duration by 1 plus y. Write down. V equal to, what is the duration? What is the YTM? 70. Write down. Tell the answer. 3.62 624. 3.624. 3.624 is the percentage. Is the percentage. Sir, what is the meaning of this 3.624 percentage? Listen. I will tell you. YTM is the, what is it? YTM is the interest rate, PV factor. Coupon rate will be in the second column. YTM will be there in the third column. PV factor will be interest rate. PV factor will be YTM. Answer. Yesterday's class I told you one point. What is the relation between PV factor and the value of a bond? Direct, indirect? Indirect. Direct or inverse? That's 1 by 1 plus y. He's trying to tell that if YTM bond price, YTM and bond price, YTM increases, bond price decreases. YTM decreases, bond price increases. But how much is what we are going to see here? Tell me, how to interpret this as a statement? 3.624%. How to interpret this as a statement? For every 1% change in the YTM up and down, bond price will change up and down by 3.624%. Means how many times is the beta? 3.624 is the beta of this bond. This is called as a beta, volatility. Sensitivity, everyone understood or not? Sir, you know beta in the bonds, shares or not? This is a beta for the bonds. This is the beta for the bond. What is the beta? What is the beta for the bond concept called as volatility? Tell me, what do you mean volatility? 3.624% means how to read? For every 1% change in the YTM, bond price changes by 3.624% inversely. Understood everyone? Shall we start doing? Shall we start doing? Right now. Here you see what he asked you. Calculate the market price if yield increases by how many basis points? 100 basis points will make 1% interest rate. 75 basis points means 0.75. Okay. Now tell me, how much is the interest rate change? The yield rate change, how much? 0.75. Tell me, 1% ki 3.624% if it changes, for 0.75% change, how much percent bond price should change? Everyone do, yeah. Don't sit idle. Everyone do it. 2.71. We can take it 2.72%. What is 2.72%? What do you mean by 2.72? How to interpret 2.72? If YTM changes by 0.75%, bond price will change by 2.72% inversely. Here in the question, YTM is increasing or decreasing? Bond price will decrease now. Okay. What is the existing bond price? 964.4 minus 2.72%. Tell the value. Total value you said 938.17. That's it. Duration concept, volatility concept, modified duration concept, basis point adjustment in one single problem. We have completed it. So this is not about copying the answers. Understood or not everyone? Have you revised the concept? What are the 4 concepts we completed now? Valuation of bond, duration, volatility, adjustment of volatility to the basis points and calculation the value of the bond. So now tell me, in this particular question, please answer one question. Point number 1. What is 964.4? Bad response, sir. Everyone in the class, what is 964.4? What is 4.24? Very good. What is 3.624? What do you mean by 3.624 volatility? For every 1% change in the yield, Bond price will change by 3.624%. Very good. What is 2.72% meaning? If 1% change lead to 3.624% change in the bond price inversely, 0.75% change will lead to a inverse change, 2.72%. Now the existing bond price is how much? 964.4. In the question, basis points of 75 increased or decreased? Increase. So bond price will decrease. Decrease by 2.72%. So that value became 938.17. Everyone understood the concept? That's it. We completed another concept. Now duration, volatility, all in one question has been completed. Next, there are some good questions. Let us also solve them. Sir, conceptually, let us take one model and complete them. Problems you do later. But revision means I need to cover all the concepts of first whatever is contained in the syllabus. Model ki one problem I will do. Remaining practice you can do later. Listening, sir? Or else 270 hours we have to complete in 30 hours means I can't explain all the questions in the class. I will explain the concept, how to understand, how to do if comes in exam. Practice you do after the classes. Shall we? Next, bond immunization. Keep the heading. Mark it important, this attempt chance is there. Bond immunization. Okay, first thing, listen, I will tell you what is bond immunization. Sir, bond immunization ki there is a problem. Let me explain what is the problem of a bond immunization. Shall we? Listen, a 5 minutes background explanation and then we will start with the problem, or else you can't understand if I do the answers directly. Bond immunization, why it will be taken? Anyone in the class? Why people do bond immunization? What could be the probable purpose? Will be having? Next, how they will do interest rate risk management? That is okay. I am not asking steps to calculate. I am asking what is bond immunization. So what? What we will get if we do? No. Okay, next. How immunization will help? Reason I will tell you. Exam they are not asking direct questions on immunization. But nonsense questions are coming in exam. Means they create all masala inside the question and then they will ask the question on bond immunization. Straight questions they are not asking on that. Are you understanding or not? First thing you need to understand is why bond immunization became more popular and why people are using, mostly insurance companies, LIC, all these are using the bond immunization concept very, very rigorously. They are using this concept, bond immunization. So what is the motive of the bond immunization concept? What is the idea behind it? Why it became so popular throughout the world, immunization strategies? Let me explain a small overview as to what do you mean by bond immunization strategy. Listen carefully. Point number one. Whenever we invest in the bonds, regularly bond will give interest. Okay? And now I will ask a question, tell me. Today I issued a bond. Coupon rate is 14%. YTM is 16%. Coupon rate 14, YTM 16%. I purchased a bond at 910 rupees. 1000 rupee, but quoted in the market at 910 rupee. I purchased at 910. Company is paying a coupon of 14%. I am expecting a return of 16% out of it. This is a situation, information given to you. Listening, I calculated the value of the bond. It came to 910 rupees. What is the meaning of 910 rupees? Can you please explain? I repeat one more time. Okay. For example, I will go to this numbers only. Okay, na? You see the screen once. At what price I purchased the bond? Very good. Next,
What is the expectation of a return? Company gave me how much? I expected 17, company gave me 16, means I'm happy or unhappy? Unhappy markets won't trade at premium. That's why it is at a discount. 964 it is trading a bond which is worth 1,000. Okay, done. 1 point completed. Okay, now answer my question. First year, how much is your cash flow? 160. First year, how much is your cash flow? 160. Second year, 160, 160, 160, 160, 160, and last year 1,160 you received. Correct or not? Listen carefully. The assumption of this entire concept, okay, the assumption of this calculation, not this calculation, any calculation for that case, okay, is reinvestment. Always remember, time value of money, basics of time value of money, beginning chapter of the FM, there will be one area called as a time value of money. Time value of money, we will be learning one thing called as a reinvestment assumption of PV factors. Okay, na? I will ask you a question, answer. FV equal to what? FV, future value, equal to dash, formula. PV into 1 plus R whole power n. The name clearly it is saying again, start. PV, FV equal to, start again. FV equal to PV into 1 is the principal, R is the interest. That both are getting reinvested for n number of years. That means PV factor assumes reinvestment. PV factor assumes reinvestment. Do you know what is the meaning of that? See the screen once. First year, how much is a cash flow I am getting? First year, how much is a cash flow I am getting? Do you know what is the assumption? This 160 is reinvested for the next 5 years. For the next 5 years. At what rate? At the same rate. At what rate? Same rate. Where is it? This one. At the same rate. So next one. Second year, how much you receive? It is assumed that this 160 was reinvested for 4 years. Next, 160 for 3 years. 160 for 2 years. 160 for 1 year. This is not reinvested directly. We are taking at the end of 5th year. Did you get my point or not? That means what we are assuming? Loudly, sir. That means every calculation you have done here, 964.4 rupees. 964.4 rupees is true if you reinvest your cash flows at same rate of return again. Then only this assumption holds true. What is R here? What is R here? R is 16 or 17? 17. Do you know what is assumption now? 160 rupees you got is reinvested for the next future years at the same rate of return of 17% is the assumption here. No. Then only 964 will come. If you don't reinvest, 964 will not come. Your answers will go wrong. Listening. So tell me, what is the assumption? Intermittent cash flows. Start. What is it? Intermittent cash flows are reinvested at the same rate of return. At the same, I will ask you a question now. Tell me, today bond was issued. Listen carefully. Today bond was issued. Ongoing yield rates are 17% in the market. Ongoing yield rates are 17% in the market. When today, listen again. Today I am purchasing a bond. By the time I purchase the bond, in the market, YTM going on is 17% is the YTM of the bonds. Listening or not? Okay. I calculated at 17%. What if I get 160 in the first year, reinvested for next 5, 164, 163 years, 160 for 2 years, 160 for 1 year, 1160. I calculated all this on a paper, I got 964. Low. I saw in the market, 964 kit is getting traded. Immediately I jumped and I purchased the bond. Okay? Now tell me, 160, 160, 160, 160, 160, 160 and 1160, expected actual? These are all future expected cash flows, actual cash flows. Expected and actual as well, because it is not a share, it is a bond, and the returns are guaranteed or unguaranteed? Though it is in future, it's a guaranteed future return. Listening? Now tell me, when I invested? Year 0. What price? Please sir, what price? First year, how much interest I receive? 160 will be received on purchase price or par value? Par value. So I received 160. Okay, na? Now, to get this 17% return in real life terms, I should do what with that 160 received at the end of first year? Answer? I took that 160, went into the market to reinvest at 17%. 1 year after, interest rates came and fall down to 15%. What should I do now? Now, did you understand the concept or not? Now, there is a problem. So, always try to remember clearly, whenever you are trying to reinvest, at the time you go for reinvestment, interest rates can fall, interest rates can rise. Then what you dreamt of may not happen in the real life terms. Learning or not, everyone? Irrespective of market rise and market fall, if you want to have your 17% intact always throughout the life, then the only avenue available is bond immunization. Which one? Bond immunization. Either go for this. No, sir, I can't afford bond immunization. It's a very much a big, lengthy process. I require a research team for that. Then go for interest rate swaps. Go for interest rate swaps. There are only 2 options available. Option number 1, bond immunization. Option number 2, interest rate swaps. Okay, so in examination there can be a question where they merge both immunization and swaps and give for 12 marks also in exam. That chance also is there. Are you understanding or not? I will show you the questions also how they can come in swaps. CFA level 3 I am writing now. Level 3 there are hell lot many nonsense questions are there on swaps with immunization. Are you understanding or not? Level 1, level 2 okay. Level 3 nonsense will be there. So they will put all kinds of immunization with swaps, immunization with overnight index swaps, immunization with the vanilla swaps. Like that they will merge questions and they will ask in exam. So simple summary of whatever the immunization concept went to be. Whenever you are calculating the bond values, it is an assumption that intermediate cash flows, whatever you are getting, are reinvested at the YTM rate. Reinvested at? Loudly, reinvested at? But really we do that? No. We may do, may not do. 99.99 cases we can't do that. Because interest rates will not be static. Today 17 is right, but tomorrow it may change. Correct or not? So then how can I do all those things? So it becomes a problem for me. At that time how to do is the immunization strategy. Everyone understood the concept? That's why try to understand clearly. Beyond this I am not going to explain anything. Let's see how question has to be solved coming in exam. Whenever immunization question came, first thing you should keep in mind is calculate the duration of the bond. Calculate the loudly, calculate the okay, calculate the duration. Invest in, I repeat, invest in such a bond whose duration is equal to your time horizon. I repeat one more time. Yesterday, share valuation I told you, everyone will invest in the market with a time horizon or without a time horizon. That means when they enter itself, they will decide when to exit. They will enter with a motive to exit. No one wanted to stay for hundreds of years. Company can be perpetual. I am not perpetual. I wanted to take an exit at some point of time. Listening or not? So I have a target. I should earn 10 crores by the next 5 years. Close everything, happy, take retirement. For that what I have to do, I will think. Are you understanding or not? Like that everyone in future, in the next 5 years, what you wanted to do? First you will plan and then you will come out. Listening? Same. Every bond investor will have a time horizon. Now listen. Start listening everyone. I want 1 lakh after 1 year. Loudly, I want 1 lakh, not today, 1 lakh after 1 year. How much I need to invest to today in order to make this as 1 lakh? That's the question. So we need to calculate a present value. What value we need to calculate? Present value. Okay na? For example, I want 1 lakh after 2 years. Loudly, I want 1 lakh after 2 years. Okay, I want 10% return. How much I need to invest to today? Present value of that. Technically it is 82,624. 0.826, yeah. So 82,624. So tell me, how much I want after 2 years? How much I want after 2 years? What is my yield expectation? 10%. So tell me, how much I need to invest today? 82,000. Do you know what is the meaning of that? 82,624 you invested. How much return you got in the first year?
Just now I told na, at what rate you invested? Start again. How much I invested today? What is the rate of interest? Obviously it will be 8264, totally 90,910 it came. Correct or not? Again this 90,910, what you have to do? Reinvest for the next year. Correct? That's why you will get that 1 lakh after 2 years. And what you are doing now? Interest in the first year, you are reinvesting in the second year again. Listening? By the time I went for reinvestment, market interest rate fell to 8.53%. Now I will get my target 1 lakh, I will not get my target. Therefore, duration will help you. How? By all these logics, you see that. Here, I am doing only problem. This time I should not spend in this, but everyone understood immunization concept clearly. So, immunization concept simply says, when you go for reinvestment, if there is a fall in interest rates, you will feel a problem. In that case, immunization says that. Tell me, how much is my time horizon? In my example, I want 1 lakh today, after 1 year, after 2 years. What is my time horizon? Therefore, check that bond. Check that bond in the market whose duration is 2 years. Tell me what I said. Check that bond whose duration is 2 years, not life 2 years. What should be 2 years? Duration should be 2 years. Babu, listening everyone, don't make mistakes in exam here. Again I am repeating. Tell me, whenever you wanted to immunize yourself against the risk of interest rate, you should invest in such a bond. You should invest in such a bond whose duration is equal to your time horizon, not the life equal to time horizon. Okay, na? Shall we do a problem on that? 1 8 marks question is there given in the exam only. Take question number, I think in your books also it will be definitely there. Exam question, na? You need not worry. Definitely all books will have. 12th question. 12th question. In my book, 12th question, in your book, might be 20. Study material it is there. Then open study material. If study material is there, I will give importance only to that, even not even mine. Go for the study material. Question number 27. Same numbers. Sir, read the question. Read the question once. See there, same question what I asked you now. Shall we do it together? Yes, please see that. Mr. A will need 1 lakh rupees not today. Clearly he said, when he need? After 2 years. After 2 years. He wants to make one-time necessary investment now. He has a choice of 2 types of bonds and their details are given below. Face value, bond X, bond Y, coupon, years to maturity, 1 to 4, current price, current yield. Current yield means YTM. Current yield is YTM. Okay. Next. See the next part of the question. Read. Advise Mr. A whether he should invest all his money in one type of bond or he should buy the bonds, and if so, in which quantity. Assume that there will not be any call risk or default risk. Meanings of these points I will tell you. First tell me, how much money he want today after 2 years. For that what he need to do today? Invest how much? 1 lakh or less than 1 lakh? What is his expected return? Same 82,624. That example I have taken from this question only directly. Tell me how much I want? How much I want? When? Today or after 2 years? What I wanted to do today? Invest. How much I need to invest? 82,624. Okay, na? First year I will get interest. Reinvest. Again you will get. Listening? But here, after burning, he is not applying Bernal. He is taking a decision 2 years back itself. What he is asking, if interest rate changes after my investment, I should be immune or not. So tell in which bond I need to invest to reach the target of 1 lakh. Listening or not everyone? Answer. So simply he is taking the judgment of immunization not after investment and after change in interest rates. Even before changing of interest rates, he has taken the decision. Listening? So which bond I need to invest? Bond X or bond Y is a question now. I will show you the question on the screen, or you can open the textbook also and see. Tell me, bond X, what is the life? Why? My horizon is none of the bonds are there in the market. This is reality. What you want will not be there. We should be adjusted with what we have, and we need to take a right decision at a right time with a right combination. Clear? You want to do, but there is no two things that are given for the duration of 2 years. There is one bond, life is 1 year. There is another bond, life is 4 years. We should invest in such a bond whose life is equal to the time horizon, whose duration is time horizon. So first what we need to do for this question, duration we have to calculate. First question I will ask, duration of bond X, we can calculate or not? You need not calculate 1 year, because principal will be received at the end of first year. Therefore 1 year, that you need not calculate. For this, will you calculate the duration? Tell the columns. Year, cash flow, PV at the rate of 10%, PVCF, proportion into time. What is the PV factor here? 10%. What is the interest rate here? 7% and 8%. Here no need of calculating, here 8%. Will you do the duration first? Start doing the duration calculation. Don't see the answers, practice in the class and complete. Par value is 100 or 1000? 1000, so careful. Don't write 8 rupees, it is 80 rupees. Now flow 100 rupees, 8 rupees you might have taken. So be careful. No, you should not take like this. You have to calculate duration. Duration every year you should take. Directly 1 to 4 you should not do. This is another mistake you can do. 1, 2, 3, 4 separately you have to take. Don't write 1 to 4 directly when duration is involved. Because every year we need to calculate the proportion. Is there anyone in this area? Do you have any doubts? Clear? How much is the value? 936.6. Something 936. 936 value of the bond. 3 point. What is 3.5? Duration, huh? Okay. $3.56 duration. $3.56. Basic calculation, everyone done? Okay. Let me know first the answers. Not every answer, please tell me. Bond immunization, first tell me. How many bonds are there with us? Bond X and bond Y. Tell me. Bond X, what is the life, what is the yield, and what is the duration? L, Y and D. Tell me, what is the life? 1 year. Yield 10%. Duration 1 year. Next, life 4 years. Yield 10%. Duration 3.56 years. Round it off to 3.56. Now you tell me, please. My time horizon is how many years? But I have no bond in the market which is having 2 years duration. So 2 years life is easy to find. 2 years life is easy to find. But what is not easy to find? 2 years duration is not easy to find. Life 2 years means somewhere I can find it. But I want duration to be 2 years, which is very difficult. Therefore, you need to have weighted average duration of your time horizon. Everyone, what duration? Weighted average duration of your time horizon. A very unique concept. See the screen. Please see the screen, sir. Just 2 minutes we will complete the answer. First tell me, up to here everyone understood? Whenever immunization question comes in exam, first step number 1 is duration. Once you calculate duration, exactly in the question some time horizon will be given. If it matches, invest entire money in that particular bond. No sir, I am getting a duration of 1 and 3.56. It is not 2 in either of the cases. Then what to do? Then what to do is weighted average duration must be made as a 2. How to do that? Let's see. Keep the heading. Next step. First step you completed. Second step, write down. Second step. Proportion of investment in bond X and Y. Proportion of investment in bond X and Y. Okay. Bond duration, bond duration, proportion, weighted duration. Tell me, I should invest in completely in bond X or completely in bond Y, partly in X and partly in Y. But how much? That's what we are going to calculate. X and Y. What is the duration of X? 1 year. What is the duration of Y? Your target duration is how many years? 2 years. Okay. Sir, if I write proportion of X as X, proportion of Y will become 1 minus X. Correct? Okay. X into 1 is X. 3.56 minus 3.56 X. X plus 3.56 minus 3.56 X equal to 2 years duration. X minus 3.56 minus 2.56 X plus 3.56 equal to 2. So please calculate here, bring all these numbers to this side. 2.56 X equal to how much? 1.56. X equal to 0.6. 609 means how much? 0.61, or also written as how much? 61%. 1 minus X is Y, which will be 1 minus 0.61. That will become how much percent? 39. We got second answer. Tell me, how much money I should invest in that 82,624? How much amount I should invest in bond A, or the bond X? 61% I should invest there. How much amount I should invest in bond B, or the bond Y? 39%. Start again. How much duration I want? Is there any bond giving 2 years duration? So combination it should be 2. In that, how much proportion you should invest in X and Y is a question now. Tell me, at the end, to reach my weighted average duration of 2 years in both the bonds together, I need to invest how much percentage of my 82,624 in X? How much in Y? If you do like this, and during the duration period, if you invest and come out, you will be immune against the risk. How immunization will be done, that all will take a lot of time. I am not going to explain the proof. I am going to explain only the answer here. Exam question comes, how to answer. So first step duration, second step calculation. Understood everyone? Now you tell, use this and tell. Nothing, no more calculations required. How much you are investing today? X or Y combination. 82,624 will be divided into how many parts? Part A, bond X. Part B, bond Y. Bond X la how much you are going to invest? 61 means how much? 82,624 into 6%. Sorry, 61%. How much? 52,000? 50,400. That much amount you are going to invest in which bond? What is the price of the bond given in the question? Divided by 972 point something, whatever you said. 51.52 bonds of X you need to buy, and the balance you need to buy for the bond X, bond Y. Shall we do it together now? Next one, step 3. Number of bonds of X and Y. Number of bonds of X and Y. Okay. Rupees 82,624. Break it into two parts. X and Y. X la how much percent? 61, and in Y 39%. Please tell the value. 61% in X. 50. Next. 32,224. This will be divided by how much? What is the price? 970. Okay. Second one. 973.5. 936.52. Tell me how many number of bonds of X? Bond X, 50,400 divided by 972.73. 52 bonds. Next. 30. Okay. That's all. This is a 8 marks question given in the examination on bond immunization strategy. Shall we go into the next concept or not? Sir, everyone understood bond immunization clearly? Everyone in the class, idea clear? Hai? Next. After that, bond immunization concept also we have completed and how to do. Next, let us do a question on forward rates. This time I am expecting one question on forward rate, because 5 attempts back they have given a question. From then they didn't give any time before, after that. So chance is there, forward rates can come. Okay. Let us take question number 14. Study material it will be there. But this question forward rates will be there in IRRM chapter in study material. Okay. Why in IRRM? Because this is IRRM question A. But my point is, let me explain in the bonds itself as the student will understand easily. This is the question. Okay. See the question first. We are allocating 5 minutes time for this question. Good question. I will explain for 5 minutes, doing for 5 minutes, answer is over. Okay. Please see here. Face value, interest rate, maturity, current price. These are the 4 information given. Using this, they will ask you to calculate the forward rates. Which rates? Forward rates he will ask you to calculate. First, let me explain what is the concept of a forward rate. Forward rate is a YTM. Forward rate is a? Please answer, sir. Forward rate is a? But YTM not of an average rate, YTM of an exact rate. You may get a doubt. What is YTM average rate? What is YTM exact rate? Let me explain. Not what you think. You are thinking that YTM approximate, YTM accurate. No, I am not talking about that. What I am saying is, see here, see the screen. Face value 100, interest rate 0, maturity and current price. This is a situation given in the question. Correct? Listen. If you calculate YTM for all the 3 bonds, this is bond 1, bond 2, bond 3. 3 bonds you will calculate YTM means you will get one answer. I into 1 minus T plus RV minus NP by N whole divided by RV plus NP by 2. You will do one approximate will come. You can do IRR method and you can calculate an accurate YTM rate. Listening? You can calculate it. You will get the answer also. Fantastic. Over. That YTM and this forward rates both are not same. Okay. Forward rate is something different. Something different. Forward rate is not like a normal interest rates you calculate. Examination IRRM, why it become difficult? Because student first couldn't understand properly the meaning of what is a forward rate. Because of formula answer, they couldn't digest what is going on there. So the main point is we should understand what is the forward rate. The principle is what matters. So how this concept has come. Listen. In my notes, I already calculated YTMs for all the three. Okay? You need not calculate and waste your time now. Okay? I will first show you YTM rates. This question let us not put on paper and do. It will take a lot of time to do that. Okay, see here once. Please, sir, once see here. Which page? 38. Yes, got it. Thank you. See here. What is the concept you are seeing on the screen? Which rates? Forward rates. Okay. Now let us understand the concept of forward rates in a right sense. See the screen once. You need not do anything. First step you see. Okay. Step 1. I will make it full screen. See here. Question you have on hand, everyone? If you don't have also, no problem. 3 bonds are given. Shall we start? What we have to do, let me explain first, okay? Don't do anything. Try to understand from this. You do after going to the home. Let us save some time in writing the answers. First point number 1. Year 1 bond, 2 years bond, 3 years bond. Okay? I calculated YTM for all the bonds, approximate YTM. Okay? First bond I calculated. What is the YTM? 9.3. Please see here, sir, everyone. First bond, what is the YTM? 9.3. Second bond? 10. This one? Is forward rate. But forward rate is not these 3 numbers, will be extracted from these 3 numbers. Listening or not, everyone? Tell me, what is this? 9.3. What is 9.3? Bad response, sir. What is 9.3? Huh? YTM. YTM of which bond? First bond, 1 year bond. Okay, na? Next, come to this. Second one. What is this? What is 10.83? YTM of 2 years bond. Correct or not, everyone? Wrong. Adhe this forward rate concept. Adhe forward rate concept. Akkada problem started. 10.83 is not the YTM of a 2 years bond. It is the YTM given by a 2 years bond over a period of 2 years on an average. First year it is 9.3, second year it is something else, both put together total and average is 10.83. Are you understanding the point or not? Always remember, yield calculation whatever you do, ante YTM calculation we do or not, that is always average only. Sir, no sir, I will do accurate. Accurate is your answer, but not the concept. Inherent concept of YTM itself says, for example, see there. Second bond is what? How many years life? Loudly? Tell me now. 2 years bond, you got a YTM of 10.83. What is 10.83? 10.83 is the market expectation. 10.83 is the market expectation on an average rate, not exact. Not exact. See there once. What is a 1 year bond return expected? 9 point? Loudly. What is the return expected on 1 year bond? Okay. Next, what is the return expected on a 2 years bond? Wrong. That's what I am saying. First year market totally expect 9.3A. Second year they will expect some other rate. On an average over a 2 years period it is 10.83. Did you get my point or not? Sir, this year how much you are expecting? This year how much you are expecting from Government of India bonds? Which bonds? Government of India. Those are government securities they have given there. First of all, let me tell you one thing. Whenever you are investing in companies, companies have a risk or no risk? On risk basis, we will ask return, correct? Government securities are riskier, risk-free. Then why you will ask different returns for different years? That's why always remember, forward rates, all these will be calculated on the basis of either Government of India bonds or Government of India zero coupon bonds. Or Government of India zero coupon bond. Where you will learn this? Interest rate swaps again. Interest rate swaps plus swap valuation techniques are there, na? There you will learn about all this. So, I am reading to say one more time, please listen carefully. Concept is very complicated. This is a FRA concept. Okay? I am putting in bond valuation chapter. Listen one last time. Market is expecting how much from the government securities in the first year? In the second year? We don't know. Second year we don't know. We know only 2 years. We don't know second year. He wants second year. Are you understanding the point or not? Tell me. What is 9.3? First year. 10.83? 2 years average. 10.89? 3 years average. What I want? Rate between 1 to rate between 2, 3. Understood the point or not? What is the importance of that rate? At that rate only, FRAs are agreed in the swaps chapter. And the name of the concept is forward rate agreement. Understood the point or not? There we will agree on not on average rates. We will agree on what rates? Actual forward rates they will enter. That's why the name of that concept in swaps chapter came as a forward rate agreements. Everyone understood the concept clearly up to here? Idea clear and yes or no? Now answer, last and final. Okay? 9.3 is forward rate, correct? 9.3 is a not YTM, it is a forward rate, correct? Yes, it is correct. First year it is correct. Next, what is this? This is forward rate for second year, correct? No. This is 10.89 is a forward rate for third year, correct? No. These are all what? Rates on an average. First year ke average, actual, cumulative, everything is same. Correct or not? Okay. Let us now see the answer. I am not making you to do this. Time will be taken. It will take 10-15 minutes if you start writing the answer. Therefore, what I will do is I will first conclude my answer. See here. Type of bond. What is the type of bond? 1 year bond. What is the YTM? 9.3. Meaning, very fastly read. I will go to the next one. This bond gives 9.3% return per annum. Decide. Forward rate for first year. YTM is the forward rate. Next, second, 2 years bond. 10.83% per annum. This bond gives 10.83% per annum on an average for the first 2 years. What is the expectation of market in the first year? 9 point? On which bond? Which government security? Any government security they will expect same because government securities are not having any risk. If you tell TCS Infosys, I will tell more risk, more return. Government, what is the risk? You are risk to government. Are you understanding? You are a risk to government. Government is not risky to you. You will pay the amount back or not, government is worried. Clear or not? So therefore, that's why always whenever you see forward rate concept, government India bonds only they will take. Do you know why? 1 year, first year, everyone will expect the same rate of return from all the government securities because government is risk free. Government is? Now tell me. What is the 2 years bond concept? Read. This bond gives 10.83% per annum on an average for the first 2 years. Continue. We need the YTM for second year. 10.83 is for 2 years. We want second year. Next, 33 years bond also you read. 10.89%. What is the meaning? This bond gives 10.89% per annum on an average for the first 3 years. Next, we need YTM for third year. Understood the concept, everyone? Shall we continue? Next, see here. Shall we continue, sir, everyone? First one, I told you, forward rate, actual, cumulative, average, everything is what? 9.3. So 1 year bond we need not calculate anything. Are you listening or not, everyone? I will ask a question. Just simple question for you. Tell me. See here. 0, 3 years. I want 1 lakh. Required return 10%. Tell me. How much I need to invest today in order to reach 1 lakh after 3 years at a return of 10%? First tell me, I have a future value already given. How much is the future value? Sir, be in this world, sir. How much? What I need to do today? Invest. Invest such amount of money at 10% so as to reach how much? 1 lakh. After how many years? 3 years. How much I need to invest today? 75,131. Tell me, what is 75,131? Amount to be? Amount to be? At what rate? Every year interest will come. What you need to do with that interest? Reinvest back, such that it will reach 1 lakh after 3 years. This is the motive. Correct or not, everyone? Idea clear? Yes or no? Now tell me. Now we understood the meaning. Do you know what is the meaning behind this? Ade concept. 0, 1, 2, 3. Third year end, I want how much? How much? 1 lakh. I want value here. Correct? Do you know what you are doing? You are discounting one time by 10%. It is becoming second year cash flow. You are discounting one more time by 1.10. It is becoming first year cash flow. First year again you are discounting. It is becoming 0 year cash flow. That's why instead of doing like this, directly we will do 1 by 1.10 whole cube. 3 times you have done. Listening, sir, everyone. So tell me, our discounting is done with the same rate or different rate? Now these will change. That's how bonds valuation will be done in the swap valuation concept in the chapter. Swap valuation, one chapter is there or not? Interest rate swap plus swap valuation techniques are there. Bond valuation method. In that, this is how you will do. Forward rates first you need to calculate. After calculating forward rates, using that forward rates, we need to calculate the swap values. Okay? So before going into all these things, first answer my question, how much value you are receiving after 3 years? We are discounting how many times? Answer? Okay. First year? 10%. Second year? 10%. Third year? 10%. Okay? Now, on an assumption that YTM is not changing every year. But really YTM will be static, will change. So we need to calculate YTM forward rates. Now do you know what we are going to do? Please tell me, sir. I want value for second year. What you have done, please elaborate and explain. I want value for second year. What you are doing, tell me. First you will take how much? 1 lakh into 1 by 1.10. Okay, next 10. You will get the answer for which year? Second year value will get. Correct or not, everyone? Same, sir. This and this you are discounting using same rate or different rate? Same rate. Now this will change. Are you understanding? Always you should come in a descending order. Which order? Descending order. Third becomes a second. Second becomes a first. First becomes 0. Why, sir? I will not follow that. If you don't follow, answer will go wrong. Do you know why? We are bringing future to present. We are bringing 3 to 0, 0 to 1, 1 to 2, you will not go. How you will go? 3 to 2, 2 to 1, 1 to 0. Means you are coming in a ascending and descending. Descending order lone you will go. Are you understanding or not? That's why first discounting will be done by third year forward rate, becoming second year cash flow. Second year you will discount by the second year forward rate, becoming first year cash flow. First year you will discount with first year cash flow. It will become 0 year cash flow. Like that you need to do in a descending order. Where this concept is? Forward rate agreements concept. But since it is related to bonds, I kept in bond valuation chapter directly. Listening, such that student will be comfortable when I come to the forward rate swaps. Understood? Sir, okay. point everyone understood? Shall we do the answer now? Okay, I will not make you to do time waster. Just to try to see the question and answer, that's all. First year bond ki we need to calculate or need not calculate? Loudly? 2 years ki see how beautifully the presentation can be. See the screen. First question. 2 years ki you see. And this bond. Okay? This information. Keep in mind first. Okay, this is the information to be kept in mind. I will remove that later. First see, how much is the face value? Interest. Life. Value. Today I have to buy. At what price I should buy? Very good. I will redeem at what price? It will give me interest at the rate of how much? He is asking us to calculate a YTM forward rate. He is asking us to calculate YTM average rate, YTM forward rate. Forward rate he is asking us to calculate. Can we do it? See that. Don't write. See that, that's all. First, just now I told you, present value you want, what you have to do? Present value you want, what you have to do? First, what you have to do? Discount. Discount by how many years? 2 years bond we are doing, means how many years we need to discount? 2 years. See that. First year I got a cash flow. What I got? A cash flow. Which year? First year I got a cash flow. Okay. Cash flow 1 I will call. Tell me, how much I invested? How much I invested? 98,500. How much is a par value? Interest will be paid on 98,500 or 1 lakh. 1 lakh into how much? So totally what is the first year cash flow? First year cash flow will be discounted at what rate? First year rate. First year rate is how much? 9.3%. Do you remember or not? 9.3%. This is the first year we have done. Up to here everyone understood the value? Answer. Everyone in the class? Everyone in the class, idea clear and everyone? Okay, next, after that. Second year, I will get 1 lakh, 10,000, 1 lakh 10,000. Why 1 lakh 10,000? Principal and interest, 2 years over. Okay, 1 lakh 10,000. Divided by, this is important. 1 lakh 10,000, I said na descending order you should come. But to come in descending order, I don't know what is R2. Second year forward rate, we know na, didn't know na. Therefore, R2 we kept as a blank. R1 we already know. How much is it? 1.093. 1.093. First tell me, what is the future value I am going to receive for this? 98. Now, face value. Not future value, sorry. Face value. How much? I am investing in that. Face value is 1 lakh. I am investing this particular value at 98,500. Okay? First tell me, how much I am going to receive at the end of first year? How much I am going to receive at the end of first year? That will be discounted by how much rate? 9.3. Why we are not discounting by 10%? 10% is a right or wrong? Wrong. What do you mean by 10%? On an average for 2 years, that is the answer. But that's not the right one. Clear everyone? See there. 10,000 divided by 1.093. How much is the value? 9149. Fast. Second one. How much I am receiving at the end of second year? 1,10,000 divided by, tell me, 1,10,000 is the value received at the end of first year or second year? Hello everyone. How many times I need to discount? How to go? 2 times okay. How to go? Directly 2 to 0, na? 2 to 1 for that second year rate. 1 to 0 for that first year rate. But second year rate available or not available? Therefore we will write 1 plus R2. We don't know the rate. And next we will calculate 1.093 already available. If you do all the calculations, we got how much? 12.6. Please tell me what is the meaning of 12.6. It is the rate market expects from a government bond for second year. For which year? Shall I ask you one question now? Okay, tell me. Tell me the answer. YTM I normally calculated. Okay, I normally calculated YTM. How much I got? Everyone? This is for 1 year, 2 years. 9.3 is for second year. First year ki 9.3, 2 years ki 10.83. 10.83 is forward rate, average rate. Do you know what is it? 9.3 plus some x divided by 2 is 10.83. What is it? 9.3 plus some x divided by 2. Do you know how to do this? Take calculator. 10.83 into 2. 10.83 into 2. Okay, minus 9.3. That's all, answer came. Directly like that also you can do, but don't do that in exam. They don't give the marks. They understood or not, everyone? Okay, now, okay. Listen, will you tell the answer for the 3 years bond, 3 years life? Tell me, how to do the 3 years life bond? See here, see the screen. Tell me, how to do the 3 years life? Face value how much? Interest? What is 10.5? Every year coupon will come as 10.5. That is true. Really coupon will come. Next. 3 years maturity. And what is this? Tell me how to do. First, 99,000 is the current price. Correct or not, everyone? 99,000 is the current price of the bond. Present value equal to future value divided by 1 plus R. Correct? We are using same R, different R. First year will be with R1. Second year will be with R1 and R2. Third year with R1, R2, R3. Understood? Tell me how to calculate now. Tell the numbers, that's all, nothing. Basic imagination. First year, how much cash flow you will get? 10,500 divided by 1.093. Next, second year. 10,500 divided by 1.093 into 1.111, something you got. 1.126, 12.6, 1.126. Or really the answer is 1.126 into 1.093, because first second year should be coming to first year should go to 0 year. Listening, everyone? Okay, next plus 1 lakh 10,500 whole divided by 1 plus R3, we don't know. 1.126 into 1.093. Super. Ante, ade forward rate. Are you understanding the concept or not? Once you calculate, you will get one rate or not. That rate we call as what rate? Forward rates. Okay. Forward rates will be used for the swap valuations. See, third year. Same calculation, what you said now. 10,500 divided by this, 10,500 divided by this, 1,10,500 divided by this, 1 plus R3. Simplify everything, you got an answer as how much? Now see, I wrote a summary also below that. See, bond type, 1 year bond. Bond type, 2 years bond. Bond type, 3 years bond. See how beautifully the presentation can help you to understand. These are all YTMs, these are all forward rates. What is a YTM? These are the average rates. These are all forward rates. Everyone understood the concept clearly or not? Okay. So bond type YTM, bond type forward rate. Okay. Market is expecting 9.3 for the first year. Market is expecting forward rate also 9.3 for the first year. Next, second, 2 years. Market is expecting 10.83 for a period of 2 years on an average on bond, 2 years bond. And next, market is expecting for the first year 9.3, second year 12.6, third year 11. These are all averages, these are all accurate and forward rates. For real life transactions, we use YTMs or forward rates. That's all. This is the end of this particular story. Hopefully everyone understood the forward rates concept. Idea clear in everyone? This is for coupon paying bonds ki forward rates. Another question is there just below that. Question number 15. See there. Following is the yield structure of a AAA rated zero coupon debenture. Period 3 months, 6 months, 1 year, 2 year, 3 years and above. Based on expectation theory, calculate implicit 1 year forward rates in year 2 and 3. Another question that was there in forward rates chapter. Whose pen? Read the question. Forward rates chapter and this also will be there. Study material, it is not there. Sir, have you did currency swaps chapter? Currency swaps, did you do before? Listen once. In the limited time available, I will teach all important ones. Okay? All important ones I will explain, no doubt about it. But some chapters I clearly made and kept in the YouTube channel already. Don't leave currency swaps. This attempt he will ask. Last attempt I expected currency swaps should come. 9 problems I explained in currency swaps. How many? 9 study material question, not these study material. This study material, no question is there properly in currency swaps. Currency swaps are 9 different questions I made, taken from old questions, RTPs, everything. Listen to that video. 9 questions I made. Currency swap 3 lectures or 2 lectures I kept in YouTube. I didn't remember exactly number of lectures, but please listen to that, because sir, listen, obvious answer. We are given 5 hours or 6 hours every single day for 5 days. Okay, 25-26 hours it will come. Dedicatedly we will do our duty in that 25-26 hours, but that itself will not cover entire FM na. Are you understanding or not? A subject which can't be covered fully in 270 hours, how can it be covered in 27 hours? So I can explain all important concepts which you need to focus in, but each and every concept you can't expect to complete here na. Swaps concept, you listen to the video, I explain very clearly minute details of how the swaps transaction will happen. Different swaps again. In the normally general swapping is there, interest rate swapping is there, interest with the currency swapping is there, advantages, disadvantages of swapping, arbitrage in swaps, everything I explained in currency swaps. In the YouTube I kept already, last batch I kept. Clear? Interest rate swaps is there, IRRM is there, currency swaps is there. Those all should not be like fast track, 1 minute, 2 minutes, no one can understand. You should put some time, effort some time and do, definitely will understand. Especially this time, please don't leave currency swaps chapter. Understood? Last time they have given interest rate swaps. This time definitely they will give currency swaps. At that time you should not do any mistake in the exam. Clear or not everyone? Different questions I kept in that. All are study material questions. And study material means I mean institute compilation. Either RTP, MTP, somewhere I brought it. Listening? Let's come back to the concept. See there, 15th bit. The following is the yield structure of a AAA rated zero coupon debenture. Period 3 months, 6 months, 1 year, 2 years and 3 years and above. Based on expectation theory, calculate the implicit 1 year forward rates in year 2 and 3. I will ask you one question, tell me. Why he is not asking year 1? Why he is not asking for year 1? Because year 1 ki forward rate, average rate, cumulative rate, any rate will be same. For which year? Therefore, there is no need to calculate for the first year. Are you understanding or not? Okay, done. So therefore, period was given. Expectation theory, calculate the implicit 1 year forward rates in year 2 and year 3. Now I will ask you a question, fatafat, first give the answer. What is the meaning of this 10.5? What is the meaning of this 10.5? Everyone? I will ask a question. What is this bond? Coupon paying or non-coupon paying? Clearly he has given here. Again you are doubting, means what can I do? Tell me. Why not zero coupon bond came? Hey, what risk will not be there? Means? No, interest you need not reinvest. That part fellow has to reinvest. You will not receive interest, that's all. Tell me. Why zero coupon debentures are always referred here? Do you know what is the meaning? Listen carefully. One second. Shall we? What is the meaning of this concept is, why zero coupon debentures are always referred here? The logic is, zero coupon debenture do not have what? Zero coupon debenture will not have dash. Everyone? Interest. Interest is a rate. Interest is an amount. Interest is a rate. One rate can't influence another rate. Zero coupon debenture if you take, on that what will not be there? Coupon will not be there. Only what will be there? Yield will be there. Forward rate is a yield. Are you understanding the point or not? Tell me, I will take 20 rupees from you. I will give you 100 rupees after 10 years, I said. I will take from you 20 rupees today. What I will pay you after 10 years? 100 rupees I will pay you after 10 years. Listening or not? 100 rupees I will pay you after 10 years. This is what I said. I will not pay any interest in the medium period. Now tell me, you have a return or no return? You are not listening, yeah. I took 20 rupees from you today. I said I will pay you 100 rupees after 10 years. Okay? I said that I won't pay any interest. Now tell me, you have a return or no return? Return is there, but that return is only price hike is there, that's all. There is no interest separately. That's called as a yield. Zero coupon bond is a classic example of a yield because interest rates are not there. That's why always forward rates chapter, this is forward rates question. In that chapter, from there only I have borrowed this. So forward rates, whenever you calculate, generally people will calculate using which bonds? Zero coupon bonds, as that real picture will come out. Because zero coupon bond projects the yield rates perfectly. Which rate? Yield rates will be perfectly seen. Do you know, zero coupon bond, there are only three elements. Element number one, life. Element number one, element number two, yield. Element number three, par value. That's all, only three. What factor is not influencing it? Interest rate. Therefore, perfect projection of a forward rates will be given by zero coupon bond, because zero coupon bond will have only yield. Nothing but the yield it will have. Whom? So please put your senses here, listen carefully. Question comes like this in exam. Okay? How to do this question? Forward rates question. Okay? I will show you directly. Let's not waste time in writing. See here. You can do this in three ways. Institute has done in one way. That one way I never understood. I understood at last. Oh, this is the meaning of their formula. There is no such formula anywhere in the world. It is created by ICAI, made in India. Okay? So it is made in India. Atmanirbhar Bharat. That's our formula. Never in any of the international authors' book, I never saw that formula. So that formula ne vichitramaina formula. 1 plus F1 by 1 plus R1 whole square minus 1. How that formula came, it took hours together for me to analyze. But the idea behind that is very clear. See that. Question came on a zero coupon bond. Question came on a zero coupon bond. How to do that? Please see that. Point number one. Bond will be given. Life will be given. Tell me, how many bonds are given in this example? We want 2 year, 2 year and 3 year. To know 2 year, 1 year, 2 year between is relevant. To know 3 year, 2 year, 3 year between forward rate is relevant. Correct or not, everyone? Okay, first I will ask a question. Tell me, what is the par value of this bond? Nothing is given. So assume it to be how much? 1000. Okay, na? Now tell me, please. From here, exactly 5 minutes we will complete this. Last concept, convexity also I will explain. Shall we? Everyone in the class? Firstly, see here. Point number one. Tell me, bond. This particular bond, whatever you are seeing, is a normal bond or zero coupon bond? Interest or no interest? Tell me, 1 year life, how much is the zero coupon rate? How much is the yield rate? This one, what is the rate? What do you mean by 11.25 here? Please explain me. This is the rate in which market is expecting on an average for a period of how many years? We want average, we want exact. We want year 1, 2 years, year 2. That's what we have to calculate now. Okay, like that for the year 3. Okay, now tell me. Normally, if I do, what is the par value we expected? See here. See there. Calculation of current prices of the bond. Calculation of current prices of the bond. This is alternative 1. Year 1, 1 year life. Cash flow is how much? 1000. Why directly 1000? Interest or no interest? How much you will receive? 1000. What is the 10.5%? He has given a 10.5% rate here. Okay, tell me, how much is the 10.5%? 0.905. How much is the value of the bond? 905. Tell me, what is the meaning of 905? Start. How much you are going to invest in this bond today? 905. And receive how much after 1 year? Then your YTM is how much? 10.5. Interest is not there. No other factor is influencing this. Idea clear? Yes or no, everyone? Next stage. Please apply this. Fastly complete. Next. Year 2, not 2 years. Because zero coupon bond, what will not come? Coupon will not come. So directly year 2 you will get your principal back. How much principal? Answer, sir. 1000. What is the average YTM for 2 years? 11.25. Generally we will do like that only. Sir, in the previous duration question, 17% you have taken. How much? What is that 17? I have forward rate. That also average rate. We are expecting 17 throughout the life of the bond. Correct or not? Tell me, here also we are doing that. 11.25% per annum you are taking. Now tell me, 2 years take calculator 1 by 1.1125 whole square. Don't just see the screen. You also try on calculator. How much it is? Perfect. Tallied. 0.808. What is the value? Tell me the meaning of 808. Fast. If you invest 808 rupees today and receive 1000 rupees after 2 years, your YTM will be 11.25% per annum on an average. Understood? Next, last one. What is the next bond? 3 years life. Tell me, how much is the value I am going to receive at the end of 3 years? 12% ke 3 years ke do the PV factor. That's what I have written here. 0.712. How much is the value? Answer. Meaning of 712 now. If you invest 712 rupees today and stay in the market for 3 years and redeem your bond at 1000, you are going to receive a yield of 12% per annum on an average. These are all right values, average values. We want average values, accurate forward rates. Answer, sir. Why we have done like that? Shall I tell you why I have done? I brought entire concept into the format of the previous question. Previous question format, do you remember? Face value, interest rate, maturity, current price. Now you can do. Correct or not? Now tell me, point number 1. First, we brought this into the previous question format now. Right? Tell me, what is the life? Forward rate, actual rate, same or different? Therefore, first year, no need to calculate. Rate will be, what is the rate? 10.5, didn't write there. Okay, no problem. Next, second year. Tell me, I am going to get any interest? I am not going to get any interest? Tell the formula now. I want future, I want the present value after 2 years. What is the present value after 2 years I will receive? What is 808? Value we are spending today. That will be dependent on the future value discounting. Correct or not? Tell me, 808 is for 1 year or 2 years? Everyone? Tell me, first year what is the formula? CF1 divided by 1 plus R1. Next, plus CF2 divided by 1 plus R2 whole square. 1 plus R1 whole square. Adi 1 plus R2 into 1 plus R1. How much I am going to receive after 2 years? Answer. Divided by 1 plus R2 into 1.105. You got an answer. Where is the answer? So, this is the answer. How much you got? 12. What is 12? What is 11.25? What is 12? Now tell the meaning. 11.25 is the average for 2 years. 12% is the rate between 1 and 2 years. Comes to the point, everyone. Now tell the third one. Don't see. Tell the answer. 705 equal to 705 equal to first year, second year, waste of time. Don't do it. Anyway, 0 coupon bond. No coupons in the first 2 years. Directly. CF3. How much is CF3? 1000 divided by 1 plus R3 into 1 plus R2 into 1 plus R1. So tell me, 1000 divided by 1 plus R3 into 1.12 into 1.105. 1 minute. What is the answer? 13.5%. Now did you understand how to do the over forward rates calculation done? This can also be done using one formula. That formula also I kept below. In the book it is there. Later you can see. Okay. So we completed which concept now? Forward rates. So we completed 14 and 15. The most important ones are the forward rates. Let us see one last concept. What is the concept name? Bond convexity. I will take one question. Question number 9. The old steady material question. After that steady material convexity concept is jump. But twist is exam they are asking. Problem is same with risk management also. Risk management chapter 2017 it was introduced. At that time, study material, beautiful questions used to be there. Those all questions are deleted in the new syllabus. Okay, this is a question. Read that. So last question. Please cooperate. We will take a small break after this. Read the question. A 5-year 10% coupon paying bond with a par value of rupees 1000 is having a duration of 4.17 years. Its original life is 5 years. Its yield is 10%. Calculate the modified duration, calculate the volatility, calculate the bond convexity. First I will ask you one question. Duration given or not given? Given. Can you people calculate the modified duration and volatility? Sir, modified duration is a percentage. Volatility is an expression. For example, I got 2%. That is modified duration. Volatility means what? For every 1% change in YTM, bond price inversely changes by 2 times. Like that you have to tell. Will you do? Do half minute time. Calculator you do and tell, nothing more. 4.17 divided by 1.10. 3 point? Volatility of this particular bond. Okay, tell me what is the meaning of this 3.79? Start. For every 1% change in YTM rate, bond price inversely changes by 3.79%. Correct? Now you answer my question. I am not going to discuss anything great here. No rocket science is involved. See here. No. Bond convexity I am not going to explain. See here. Not required at this stage, but I just wanted to show you one concept. In mathematics, there is one concept called as a calculus. In that calculus, I am from a proper maths background, so I am very happy to take FM always. So point is, there is one concept called as a dy by dx. Dy by dx. Okay, derivatives we call it, or derivations we call it. This came from a branch of a mathematics called as a mathematical calculus. Calculus is having a 6 branches totally. One is a scalar algebra, another one is a vector, another one is a calculus in differentiation, second one is the integrals, and the third one is the limits, and fourth one will be the concept of vector algebra. So these are the 6 branches of mathematics dealing with the concept called as derivatives. So idea behind this is very clear. Whenever you calculate the duration, duration equal to weighted average duration. What duration? Weighted average duration. What duration? Weighted average duration. Now you tell me, weighted remove average duration, correct? Average means accurate or inaccurate? Answer. I got 16 one subject, 15 another subject, 14 another subject. Okay, instead of telling like that, I got on an average 50, I said. 50 means all subjects I didn't get 50. In one subject I got 60, one subject I got 40. Now tell me, average will give a accurate result, approximate result. Volatility is calculated on the basis of duration, which is an approximate. Hey, I can't repeat here at this stage. Answer. Volatility is calculated on the basis of a duration, which is approximate. Then automatically volatility answer will be approximate. If volatility answer is approximate, what is approximate? What is approximate? Change on price is approximate. Final answer is also approximate. It is not actual. Now tell me. Change, if you see, actual is here in the graph. Okay, our answer is here. There is a gap between these two or not? This gap we call as a convexity. Are you understanding the point or not? That means the difference between both. Shall I tell you one point why it is like that? There is one concept called as a parabola. Using the thesis only, one person has given this concept called as a Malkiel's theorem. Okay, the name of that concept, convexity, was brought by a person called as a Albert Malkiel. That person has created this concept called as a bond convexity, using the concept in mathematics called as a convexity idea. Okay, dy by dx. Simply to tell, what is a dy by dx concept? Change. Okay, shall I tell you what is the meaning? It's called as a regression. It's called as what? Regression. It's a regression coefficient, dy by dx. Simply to tell, how y is getting influenced by x is a question. How? Y is getting influenced by x. Variable y, how it is getting influenced by variable x, not constant x. Variable x. Originally that was found out to understand the influence in the solar system. Sun, how it influences earth. They wanted to know, old times, I am talking about thousands and thousands of years back. How sun is going to impact earth. Sun is a variable, it changes. Listening or not? In mass it changes, its energy it changes, in force it changes, everything it changes. Earth is getting influenced by that. How much influence it is? To calculate that the rate of impact of sun on earth, moon on earth, they started concepts like derivations. dy by dx. X is a variable, y is a variable. X is a influencing variable, y is a influenced variable. Y is the, yield is the influencing variable, price is the influenced variable here. Who is influencing? Yield. Yield is the influencing variable. Price is the influenced variable. How much influence it is? To calculate that, they calculated the duration concept d by 1 plus y, like that they done. First thing, tell me, volatility is accurate or approximate? Accurate or approximate? Pakka approximate. Okay. Therefore, answer will be approximate. It's not accurate answer. Clear, everyone? See here, I'm not going to show any formula derivation now. Just I wanted to tell you, there is a long calculation. This all calculation lead to this small formula. What is the formula finally? D by 1 plus y. That's not d by, minus d by 1 plus y. That's why we call inverse. Since minus people can't understand, they removed that minus and said inverse you say. Understood the concept or not? Okay. This is the meaning here. So my point is, try to understand. Volatility is what? Minus d by 1 plus y. Minus d by 1 plus y. Please listen, sir. We are assuming that, please listen, if y changes, loudly, if what will change? Bond price will change. Loudly, if y changes, bond price will change. Okay, na? Now tell me, do you know what is the assumption of the entire concept until now? Y changes, bond price changes. What is the meaning behind that? The assumption is bond price will be influenced only by yield change and not by other factors. But in real life world, bond price will change only because of yield rate change, also because of other reasons. Also because of other reasons. Today share market change has come, not just because that RBI has increased yield rates, because other factors also will influence it. Listening or not? But tell me, what is the assumption of this formula? Price of the bond is influenced only because of change in the yield. That is correct or wrong? First tell me. That's wrong. Other than telling wrong, because there are great people here who found that, rather than telling it as a wrong, that's an assumption which may be far away from the reality. Correct or not? So therefore, what is the problem here? They wanted to know exactly what is a change by taking actual prices. By taking actual. You please tell me one answer, last and final. Tell me. 2% volatility, how to interpret? For every 1% change in the yield, bond price changes by 2 times or 2%. That's the meaning, correct? Tell me, YTM increases by 2%, bond price will increase by, bond price will decrease by 4%. 4%. Now, on that only, I have given one explanation, not to tell. Really, I have given a very good explanation of how this concept will work. After a long hard work on understanding how the convexity concept is working. See here now. Just for the sake of understanding, if a question comes in exam, rarely tested but tested. See here. I have taken the question from the facts of the question number 1 only directly. 9th question. See here. Case 1, case 2, case 3, case 4, case 5, case 6 and case number 7. 7 different cases I considered. Everyone put your focus on the screen. 5 minutes we will complete fatafat convexity and close. Shall we? See the screen once. Point number 1. This particular bond, year 1 to 5 and 5th year. What is the bond price? 1000. Because yield is 1000 and the coupon is also 1000. Correct or not, everyone? Now, second case. Yield increased to how much? Loudly, yield increased to how much? Now you should tell YTM increased or decreased? Increased. When YTM increased, bond price should fall. How much it is? 928. Listening? Like that 7 different cases I have taken. 14%, what is the bond price? 14%, what is the bond price? Next, 16%. See, that's a 16%. 803. Next, after that, 8%. Increase. It reduces in the increase. Next, 6%. 1168. 4%. I ask you one question. What are all these prices? Please explain me. Explain me. What are all these prices? Explain me. These are all the prices for variety of YTM changes happening in the market. Correct or not, everyone? Tell me. YTM 10%, what is the value? YTM increase, price decrease. YTM further increase, further decrease. YTM further increase, further decrease. YTM decrease, price increased. This is how the magic is happening in the market. Correct, everyone in the class? Now see the final conclusion. I will ask you one question, tell me. What is the volatility in the given question? 3.63 or something we got. Correct or not? Okay. Now tell me. For 1% change in the yield rate, bond price changes by 2.72% if I have written, or 3.63% if I have written. Listening? For 2% change, how much it grows? We will know or not? That also I have done. Now see here. What is the D? 17. What is the yield? What is the volatility? 3.791. Read. What I have written there below? For every 1% change in YTM, price of the bond always changes by 3.791% is the concept. Correct or not? You please see and tell. Bond price YTM, base YTM became 12%. How much is the change? 2% change. So as per your concept, 3.791 means it should come down by 7.582. Correct or not? Tell me, how much is the value of the bond then? Everyone answer, yeah. What we have done, tell me. Don't sit idle in the class. What we have done? YTM is how much? Base YTM. Base YTM, 10%. It became how much? How much increase? Bond price should fall or rise? Fall by 2 or 2 into 3.791. So bond price should come from 1000 rupees to how much? But it has come to 928. A gap a convexity. Understood the point clearly or not? That means this formula is correct, approximate. Because of the approximate nature, bond prices, what you get are not accurate bond prices. Accuracy level which is missing, we are going to fill the gap using a concept called as convexity. That's what I wanted to explain here. Understood the concept clearly? Yeah. Final touch, fastly, tell me. If bond YTM comes to 14%, what is the change? 4%. Bond price will be how much? 848, but in reality, that is 862. But as per the formula, it is, there is a 20-25 rupees gap is coming in the answers or not? These all gaps are coming because of approximation in the formula. That approximation and accuracy, we are going to fill the gaps using a concept called as bonds convexity. That's how the convexity concept has come. See here. I have drawn a line. A line is, listening everyone? Drawn the line. Do you know what is a line? Line always represents a relation between two variables. Line always represents the, hey, see here, x increase, y increase, x increase, y increase, x increase, y increase. Relation is a straight line like this. Next, x decrease, y decrease, x decrease, y decrease. Relation will be like this. Correct? X increase, y decrease. Like this the line will be. Any relation of two variables can be given in a straight line. If the relation of two people, the relation of two variables is not sustained because another factor is also influencing, it will form a curve. It will not be a straight line. It is a curve. That's why originally bond price and yield is a curve. That's why in the books you will see yield curve. This is called as a yield curve. Yield influences price not in a straight line. Yield influences price in a curvature. We assume it till now as a straight line. The gap of green color is there now here, unfilled green color. A green color we are going to fill using a concept called as convexity. Understood the point clearly or not? So finally the question, how question has to be solved in exam. See here, whenever question comes in examination on convexity, okay, there are totally 3 steps in calculating. I don't want to explain all these concepts and waste your time. Fatafat, I will tell you the steps, literally mug up, do the exam question. Okay, at this time I told you concept, logic of this formula, all these things takes a lot of time just to see what we have to do. Okay, na? Remember the focus, remember the idea and the steps to be followed. First one, what is the step number 1? Year. First one, what is the step 1? Calculation of cumulative discounted cash flows. Please everyone, calculation of cumulative discounted cash flows. I will ask you one question. Up to here, year cash flow PV at rate 10% PVCF. I think up to here you are all comfortable. No need. Correct? Next column very easy. Cumulative time into multiplied. T 1 year into T plus 1. How much? 2. Next. T, how many years? 2. 2 into 2 plus 1. How much? 6. Like this you need to multiply. Last step, now this multiply and write down here. Tell the columns now. Don't see. Year, cash flow, PV at the rate of 10% PVCF. Over. Up to there you also can calculate. Next, T into T plus 1. Next, T into T plus 1 into PVCF. You will get the cumulative discounted cash flows. What you will get, sir? Cumulative discounted cash flows. Now we have to calculate the convexity. See here. Formula for convexity. Start. What is the formula for convexity? Cumulative discounted cash flows. And step number 1 into 1 by price. Price was given. Divided by 1 by YTM square. 19 point. The answer over. This is convexity. Answer is easy. Understanding the, if you do know, you have a clarity. What is this convexity concept all about? Tell the formula for convexity. Cumulative discounted cash flows. Over. Next. Into 1 by price. Into 1 by YTM whole square. That's all. That will give you the formula for. This all concepts will work if convexity is given as a price, yield, all these things are given. Sometimes in the exam question, price will not be given. At that time, there is a different formula for convexity. Let me show also that. You take the photo of this particular formula. Generally, books like they will write, but if there is a chance that they missed out in your book, write down this, because in exam, if they ask, you should be able to write. Take this photo first. This is a duration ke alternative formula. Duration we have done or not? For that, this is an alternative formula. Instead of putting in tables and doing, like this also you can do. There is a derivation for this. This is not a time to learn, but you can directly calculate and do. Which formula? Duration. Yes. Take the photo. 90% this time this question can come. Numbers may change. Okay? See this. Listen carefully. When this question will come in exam, let me explain. Have you taken the photo or not? If you have the book, it will be there. If you don't have, at least see here. Read this content. Sometime the bond's life may not be given in the question, but we may be asked to calculate the approximate convexity. Then convexity percentage is calculated as under. Now you tell me one answer. Tell me. Bond life is given or not given? Given, not given. But in that case also sometimes we may be asked to calculate the convexity. At that time you need to use this formula. Tell me, normally what is the convexity? Step number 1. Cumulative discounted cash flows. What is the columns? That is not given. Step number 1 you can't start. Okay, at that time how to do? This is a formula. Tell me, first one. P plus means 1 above price and a higher price. Next one, lower price. Minus 2 P naught divided by 2 P naught into change in YTM scale. Forget about the logic, everything now. Question if comes, you should be first getting that 4 marks. Okay, this is a formula. Every day before sleeping, you revise this. P plus, like that you do. You are great. You are having skill now. You can remember formula. So This is the thing. Okay. What is P plus? Price if YTM increases. Next. Price if YTM decreases. Two prices will be given. Price present. Listening everyone? Now tell me. Example. I have given one example also. Tell me. P naught 98.722. P minus 98.669. Next P plus 98.782. YTM change 10 basis points, also called as 10 basis points means what? 10 basis points means what? 10 basis points means what? 1% or 0.1%. 0.1% can be written as what? 0.001. Correct? See the answer? First, P plus how much? 98.782. P minus 98.669 minus 2 into 98.722 whole divided by this particular formula. How much we got? 35.46%. This is the convexity. That's it. Everyone understood? All the concepts of bonds is also completed. Take a break and come soon. Sir, are you all confident with the bonds valuation chapter, everyone? So see here. Let us start with a new area called as security analysis. Security analysis. In this, three concepts will be there. One is exponential moving averages. Second one, efficient market hypothesis. And third one will be autocorrelation or a run test concept. Okay. Autocorrelation and run test concept is similar to that of portfolio theories. Therefore, mainly we are going to concentrate on the first two. Last examination question came from exponential moving average. This attempt expected question is efficient market hypothesis. Okay. Run test also can be asked, but run test is very easy. Just a calculation of correlation. Calculation of correlation. Therefore, chance is very less to ask because anyway portfolio theories students will do. So, first two concepts are exclusively dealt only in the chapter called as security analysis. Last attempt question came from exponential moving average. 99.99% that will not come again. Okay. ICAI na? That small 0.00001% chance will be there always. Okay, there will be 0.1% confidence level of risk. So keeping that risk management, value at risk is 0.001%. Normally question will not be repeated again. Okay, so anyway, let us see. Don't do anything, just see the numbers, understand it. 45 minutes we will complete this entire area called as securities analysis. Generally, the area security analysis, every 2 to 3 exams if you take, 2 attempts they are asking out of every 3 or maybe half exactly, 4 attempts to 2 attempts question is there from security analysis, like that they are asking. Okay, let us see the concept. What is the name of the chapter? Security analysis. In this, 2 practical concepts which are very important are exponential moving averages, and second one will be efficient market hypothesis. Okay, let us see. Don't do anything, just observe the numbers, try to understand. Exponential moving average. Let us consider the following data. Day close, these are the various prices of a stock. Okay, it started from day 1. How many days information we have taken? 16-day information we have taken. Settle down fast, everyone. Shall we continue? See the screen again. How many days we have taken? How many days we have taken? 16-day information we have taken. Okay. Exponential moving average. Exponential moving average is a concept where we are trying to predict. We are trying to what? Predict the price of a future share prices on the basis of the past information which has already happened. On the basis of past information which has already happened. See there. Day 1, what is the price? 100. Day 2, 110. Day 3, 120, 150, 200, 90, 50, 60, 150, like that it is. Tell me, there is a constant growth, constant fall, ups and downs. This is the point. Humps and dumps is very, very common in stock markets. Okay. If there is a pattern in something, we can tell whether the prices are rising or prices are falling. When unpatterned flows of cash is coming, we can't predict what will happen to the stock prices. That's why stock markets, there are 2 types of analysis. Number 1, fundamental analysis. Number 2, technical analysis. Listening everyone. So even in the capital markets course I am taking now, stock markets course, There also, first one is a fundamental analysis about the company. Second one is a technical analysis. Listening, when to buy the stock, when not to buy the stock, candlesticks, all these things will be analyzed there. So the main agenda is, this is a technical analysis of a security. That's why name of the chapter is what? Security analysis. Listening? Tell me, in our syllabus, CA syllabus, fundamental analysis is there, technical analysis is there. Both are there. CA internal fundamental analysis, ratios analysis. CA final technical analysis, security analysis. Understood? So about company we will see there, about the markets we will see here. That's why efficient market hypothesis we are going to see. Okay, see the screen now. Start. How many days prices are given? 16 days. Predict the price for the, okay, first tell me. A general notion is, do an average. Do a average. I will ask you a question. See the information there. This document completely is there in the Telegram group. Okay, so no need to write anything. One point also, you need not put the pen on paper. Just listen to what I say. 45 minutes will complete this chapter. Listening? So don't spend a lot of time on this particular chapter. Just understand all the concepts clearly. Problems you can do later. Are you listening? See there. How many days prices are given? Tell me. See the information and tell. Within your reach, when you see, what is the highest price? What is the highest price? What is the lowest price? What is the lowest price? Highest price? I asked you, what you will expect for 17th day? You will tell 300 or you will tell 40? Yeah? You will not tell 340, 150, 200. You will tell a average. You will tell a average. That's why. What is an average? Read. To forecast the future on the basis of the past data, it is not correct to forecast at extremes. Rather, we should expect on averages. The average total of all 16 data will give the forecast price for the day 17. So tell me, X is price here. X is price. Tell me, X 17 equal to summation of X1 to X16, not X1 minus. Summation of X1 to X16 divided by 16. This is called as what average? Static average. This is not what we are seeing now. We are reading which concept? Moving average. This is what average? Static average. See here. All the prices I kept on a graph. Not randomly. All these. How many days? 16 days. So see here. 16 informations are there. Correct or not? The average price came to how much? 126.875. Everyone, 126. Do you know what is the beauty of 126.875? See the screen once. See the screen. This is the one. This line is 126.875. All the points are either above that, all the points are either below that. This is cutting the entire graph exactly into the middle. Actually, I have drawn this graph randomly. Randomly means without taking any scale. Scale means I am talking about the gap between the x-axis and y-axis. We will take now scalar difference we will take. That without taking that randomly I have drawn. If you properly put this on a graph paper and draw, exactly 126.875 will break the entire graph into two parts. That's why we call it average. Average means middle. It's not above, it's not below. It is somewhere in the middle. Are you understanding or not? This average is called as what average? Static average. What average? Static average. Do you know what is the difficulty and mistake with the static average? See here. What is the price here? Just now you saw now. What is the price here? 126.875. That's the price here. Now the point is 126.875 is not near to any of them. It is something middle of all the prices that were taken. Correct or not? People don't use static average. Static averages will be used for overall analysis, not for in-depth analysis of a stock. People don't use static averages. Okay? See here. Please see there. 16-day simple average chart. Like this it will be. 126.875. Understood the point, everyone? Next stage. Now see here. Observation required. See here once. First here, what you observed, this particular stock is highly volatile, less volatile. Everyone? Everyone? When a person see this graph, do you know how they will see? Okay, perception will be different in every person. You are a student, you want 5 marks, so you don't know what is it. Investor, he will see in a different way because he kept money there. Do you know how he will see? Gee, like this he will see. You will see it as a graph, he will see it as a MRI, ECG. Like this, suddenly it will go up, suddenly it's come down, a heart attack. Over a period of 5 years, see there, how many days information this is? How many days? This chart if you show, it's clearly visible, price will reach rock bottom, price will sometimes reach top again, you will fall. This will give a good opinion about stock, bad opinion about a stock. Do you know what is the problem with this graph? This graph will always say the behavior of a stock on the basis of the last price moment. On the basis of the last price moment. For example, from here it started. Listening or not everyone? From here it started. Suddenly it went here. Now what you will see, suddenly share price has raised a lot. Again it will raise, again it will raise. Suddenly it fall. Good stock or bad stock? It's a bad stock because the movement of the stock is making the humps and dumps very frequently during a 16-day time. 16 days time, this is what the company is doing. This will not give a good impression to the risk-averse investor. Risk-averse means those who don't want to take a risk. Something overall okay type of risk if you want, these stocks will scare them. Not because really the stock is bad. The reason is the average diagram is showing like that. Do you get my point or not everyone? I repeat one more time. Sir, I will ask a question. Shall I? See here. Do you know how simple average and static average and moving average will work? Listen carefully. Shall we? There are two persons, A and B. Okay, I know both of them. A, over a period of 5 years I know. B, over a period of 5 years I know. A, very nice person, extremely nice person. B, extremely bad to the core. Two extreme people are there. I know both of them. Example. Now, a person asked me, how A is? Means, one day before, A did some wrong with me. On the basis of behavior done one day before, I will not tell A is bad. Did you understand my point now? Just a second example. B is very bad. Life law first time it is right, just one day before. On that basis, I should not judge that B is good. Now you tell me, when I take immediate previous data and tell the character of a person, how wrong it is, same happens also with the stock. Simple average uses the first type of behavior. On the basis of the latest behavior, you are going to analyze the stock. Are you understanding the point or not everyone? Don't analyze the behavior of a stock on the basis of its immediate recent behavior. Analyze the particular stock on the basis of some number of days behavior. Are you listening or not everyone? I will ask you one question, first answer. What chart you are seeing there? Everyone? Daily price chart. What price chart it is? Daily price chart. Tell me, first day what is the price? Sorry, I will draw like this. Here 100 is. Tell me. 110, 120, 150, 200, 90. Next. 50, 60, 150, 250. Page not sufficient. Next. Again, 60. Next. Again, 60, 40, again down, 100, like that it is going. Are you understanding the point or not? Now see here. See the screen. 100, 110, 120, 150, 200, 90, 50, 60. One second. Tell me, 100, 110, 120, 150, 200, 90, 50, 60, 150, 250, 300, 60, 50, 40, 100, 200. Like this the stock is. Now tell me, I am drawing the chart on the basis of overall behavior over a period of 10 days, 5 days like that, and I am taking immediate behavior. Because of that, this is how it look like. Don't analyze any person on the basis of his immediate previous behavior. It will always give a wrong opinion only. 1,000 good he has done in the past, latest by mistake he has done something. If you are seeing that and judging that he is a very bad person, how wrong it is. Stock analysis also same. Don't judge a stock on the basis of its daily behavior. Take some number of days, analyze the behavior. Understood my point or not? That's how the concept of 5-day, 10-day, 15-day, 20-day moving average concept started. How many days? 5 days, 10 days, 15 days. If you go into screener.in, screener, there is a website. In that website, you will find all the stocks information. Whenever I wanted to buy a stock, now I do daily trading, I do futures and options, I do lot of intraday. Whenever I wanted to do intraday, screener is the only chart available. I put a 15-day moving average. Which moving average? 15-day moving average. Means what I am trying to do, I am not trying to see the behavior of the stock immediate day. I am going to see the behavior of the stock over a period of 15 days. In that over a period of 15 days also chart is like that. Don't go into that stock. Do you understand my point or not? See the screen now. Start. Which moving average, which average we saw now? Simple average, also called as a static average. No one in the world is trading on the basis of static averages. No one will do. Shall we go to the next chart? Okay, very good. Next, very, very important. See here. What is this? 5-day moving average we have taken. What day moving average? 5-day moving average. Okay, now see here. I will ask a question. Day 1, what is the close? 100. Day 2, day 3, day 4, day 5, total all these and divided by 5. Huh? That is a forecast for the next day. That's why 6th day, that is a forecast. Hello, are you listening or not? Some yes or no tell ya, or else how can I understand? Understood or not? Next, tell me. I want 6th day 5-day moving average. You should start from day 2. Start from day 2. Total 110 plus 120 plus 150 plus 200 plus 90 divided by 5. 134. That's a forecast for the next day. Understood everyone? So this is how they will calculate the forecast. Are you understanding? Now I will tell you one thing. We will not plot 100, 110, 120, 150, 200 in the graph. We will plot the moving average prices. Which prices? Moving average will take behavior over 1 day, over 5-day period. Means you are going to see my character by my recent previous behavior, overall behavior. See, this is how it is looking like. Where is this chart? Where is this chart? Did you understand? How bad you are analyzing my character? Stare. If you observe, you are seeing me like a villain. Like that you said. I am not that much dangerous. Are you understanding or not? So, I am this much dangerous. Not this much. Are you understanding the point or not clearly? So, this is called as what average? Moving average. That too, how many days moving? 5 days we are taking a moving average forecast. Are you understanding the prices now? Now tell me, this and this, is there any kind of relation between both of them? One is showing extremity, another one is showing the idea of the moving average is don't analyze the character of a stock on the basis of its very previous day transactions, whatever has happened, give some time to it. Character should be always analyzed on the basis of overall behavior, not on the basis of immediate previous behavior. Stocks I am talking about. So, from this what you have to understand, stock always analysis will be based on static average, moving average. Loudly? Now tell me, you are an investor. You opened a screener website. Screener.in, you entered. You wanted to buy the shares. Okay. Now which average we will see? Moving. Depending on you, whether you select a 5-day or 15-day, depending on your preference. Listening? Okay. This all we have to calculate or not? This all we have to calculate or not? Screener website, all these websites, so they do that. Once you select on 15-day moving average, they will only do that moving average chart for you. But to understand that, first you need to have a clarity or not. This is the thing I will make you learn. Understood what is a moving average concept clearly? Yeah. This is how many day moving average? 5-day moving average. Tell me, this stock is, now see there, average line is there or not there? Not there. Average line is there or not there? There. How much is average line? It is there or not clearly there? Now you answer my question. Average line is there. If you see the static average chart and the daily movement chart, if you see that average actually is moving up and down very extremely, they are moving up and down, correct or not? But in reality, that's not that dangerous stock. Are you understanding or not? Overall 4-5 days, if you see, movement is not so great. Average is here, I am here. Average is here, I am on average. Average is here, I am below average. Like this I am going. I am not such a volatile stock like what you projected. Did you get my point? Understood moving average concept? Which moving average we completed? Which moving average we completed now? 5-day moving average. Okay. First one is what average? Static average. Second one, 5-day moving average. Now exponential moving average. Like that we need to understand. Stage 1 is static. Bad thing about static I told you. 5-day moving average also there is a disadvantage. You know what is the disadvantage of 5-day? 5 days behavior if you take, the immediate 5 days if it is good, it will be projected as good. Correct or not? So that's the problem. Therefore people started analyzing a concept called as a exponential moving average. How it look like, I will show you. First see the screen. Read that. Now the moving average is not as overreactive as normal daily prices, nor as stable as a static average. This 5-day moving average gives a smoothening effect rather than sharp effect like this. Now like this it went. What is done? Smoothening. That's why always last alpha will be called as a smoothening exponent. Study material it will be written. We will mug up smoothening exponent, smoothening exponent. Smoothening exponent, if you didn't hear till now, Atparam Sri Parameswara Arpanamastu. You are the luckiest person on the planet today. Asala smoothening word first time I heard, sir. Lucky person. Super. So there is an alpha component called as a smoothening. Smoothening means that 5-day moving averages like this, chuck, 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 like a sharp bends it is. Exponential moving average mean it as a la 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 la. This la 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 effect is called as a smoothening effect. Everyone understood the concept clearly? Read. Moving average might not be as steep as the actual prices, but it still has a movement. Continue. Who doesn't have a movement? Static average ki movement illa. Like that it is going on. Okay, that is not correct. Moving is correct. Sharp movements are bad. Smoothing movements are good. Much more smoothing movements will come through exponential moving averages. Okay, read. Moving average might not be as steep as the actual prices, but it still has a movement. But one should understand that it is a 5-year moving average or 5-day, anything, any moving average you can take, start, which means the line is not influenced by one observation, but 5 observations on an average. Continue. Hence, 1-day influence of rise and fall will not greatly affect the moving average calculations. Okay. Next comes the king of the ring. Who is that? Exponential moving averages. Okay. Let us see what exponential moving averages wanted to done. Shall we continue? See here. How exponential moving averages are calculated. There is a formula for exponential moving average. There is a formula. That formula we have to apply. Okay. Smoothening exponent will be there. What exponent? Smoothening exponent. Exponent here game changer. Smoothening exponent main thing. See there. Day 1. What is the price? You need not. First question I have taken again. Same prices. We are not doing static average. We are going to do the exponential moving average. Okay, see here. This is a formula. Start. This last exam 8 marks question. Last attempt 8 marks question came. Okay, first question in the paper. A question came from this formula only. Okay, read. What is the formula? Please read. Ft equal to, hello everyone, read. Ft equal to Ft minus 1 plus At minus 1 minus Ft minus 1 into alpha. What is F? Forecast. T, forecast for current period. Ft minus 1, forecast for past period. At minus 1, actual for the past period, means 1 year before. At minus 1 minus Ft minus 1, actually forecast ki some variance has come. A variance we call as what? Error in the last forecast. Alpha is called as what? Smoothening exponent. These all things is the thing you need to know. Okay na? In your notes, don't do anything, copy this formula. You should remember this formula. If at all again a same question comes in exam, you should be able to solve. Why I am asking you to write means a Telegram channel a document is there. If you take printout of document, okay. If you don't take printout, how will you remember the formula? Completed? So completed everyone? Okay. Now, tell me the formula now. Mug up literally. Sir, there is a logic for this formula. I am not going to explain interpretation, derivation. Explanation I will give here in the time available. Tell me, what is Ft? Sir, tell me, all this we are doing for what? All these averages we are doing for marks, sir. All this we are doing for what? Answer. Forecasting. How price might be in the future. That is our agenda of this particular calculation, right or not? So, I am going to forecast for tomorrow. Tomorrow is a T. Tomorrow is a T. What they said is, are you right in your forecast yesterday? Sorry, tomorrow forecast you are doing. Already you have done latest forecast. That you are right? No, I am not right. How much is the error? That's the first, second body of the particular answer. That's why they said At minus 1 minus Ft minus 1. Loudly, what is it? At minus 1 into Ft minus 1. At minus 1 yesterday's actual and yesterday's forecast. How much I forecasted? 150. How much actual? 170. How much is the error? 20. How much is error? 20. Hello, listening everyone. Okay. Now, what is first part? Ft equal to? Very bad. What is Ft? Forecast for the current period. Okay. Don't tell full forms now. Concept you tell me. What is Ft minus 1? Forecast to be made up. Forecast already made up. Already made. Very good. Next. At minus 1. Actual for the previous day. Minus Forecast for the previous day. If both are same, no error. Don't tell zero. Chi. Both are same, answer will become zero only. Both are same means what is not there? Error not there. Not zero. Answer is zero. Everyone know that. Next, after that. Into alpha. What is this alpha? Everyone. Sir, what is this smoothing exponent? Question will arise or not? Simple logic here. There is a formula for smoothing exponent. 2 by n plus 1. See there. What is it? 2 by n plus 1. Loudly everyone. Sir, why 2, sir? I didn't understand logic of 2. Very easy. You are comparing how many days? T minus 1 means 1 day before. T means today. How many days? In 2 days out of total of n plus 1 days. Babu, Chitti. Beyond this, don't ask questions. Yeah, everyone understood logic clearly. Yeah. Tell me, what is 2? We are analyzing 25 days. How many days we are analyzing at any point of time? 2 days. What is that? T minus 1. 2 days. Out of total information of n number of days. Out of. Now tell me. 1 minute. Listen carefully. You are analyzing my character on the basis of how many days? 2 days. Out of the total age of 32 years of mine. How can you directly tell that I am good, I am bad by seeing my behavior in the last 2 years? Do you understand the point or not? In the overall 32, 33 years, whatever I have done, you forgot. What I did in the last 1 minute, you are analyzing the character means how bad it is. You are analyzing how many years in my life. 2 by 32 only. First 5 years, I am a great kid. Do you understand or not? I did not make anyone to feel bad. So, on that basis, if a person tells first 5 years, anyone will do that only. Are you understanding or not? So, the point is try to understand the whole logic behind this. You are analyzing the full life, you are analyzing only a part. T minus 1, how many days? 2 days. Loudly, 2 days only you are analyzing. On the basis of 2 days, out of a 17, 16 days, how can you tell that I am good and I am bad? Therefore, n is the total days. Next, 2 is the days you are analyzing. N is? You are analyzing for 16 days, or you are analyzing for next day after 16. That's why n plus 1 came. N is the information, so plus 1 is the forecast information, 2 is the total days you have taken. That's how alpha came as a 2 by n plus 1. That's how that concept came. Understood or not, everyone? Tell me, what is the formula for alpha? Loudly, how much? 2 by n plus 1. Everyone understood the concept clearly? Tell me the formula now. Total formula. Ft equal to Ft minus 1 plus A t minus 1 minus F t minus 1 whole multiplied by alpha. Alpha means smoothing exponent. What is the formula for smoothing exponent? 2 by n plus 1. Someone asks you tomorrow, what is smoothing exponent? My sir did not tell, don't tell. I tell. Tell me what I said. What do you mean 2 by n plus 1? Forgot, huh? I should analyze your behavior now. Like this chart will go to rock bottom. Again will not come up. Tell me, what is the meaning of 2 by n plus 1? How many days you are analyzing? 2 days. Out of total n days. But forecast is for next day after n number of days. That's why they have taken n plus 1. That's how that formulas have come. Understood the concept clearly? Yeah. Now tell me, can you do the answer now? I will put this on calculator. Taka answers I should get. Tell me, I want forecast for second day. Day 2 I want forecast. Actual 100. Oh, you want how much happened in the last day, na? 100. First day, 100 day. Start. What is the formula? What is the forecast for the last day? See here, forecast for the last day also 100. Say, okay, I have given. Now start. FT minus 1 forecast is 100. Yeah, what is exponential moving average? Some people are not even trying. Sir, please, sir, do it. What is the forecast for the last day? 100. Okay, now what is the forecast for the last day? 100. Okay, now tell me, what is the formula? FT equal to FT minus 1. FT minus 1. Okay, done. Plus AT minus 1. Minus FT minus 1 into alpha. Alpha already I have given, I think. Alpha 0.2. How much I have given? I directly have given. Take it. Don't calculate alpha 2 by n plus n like that. Just take it. How much it is? 0.2. Tell me the answer now. 100 minus 100 is how much? 0. 0 into alpha will be 0. So total price is what is 100? 100 is the actual price of forecast for the day 2. That's why the exponential average you calculated today will become the forecast for the next day. Listening? Next, I want every one of you to calculate FT for day 3. If you could not calculate on calculator, at least use pen and paper. Fatafat do the answer. Yeah. FT minus 1, how much? 100 plus AT minus 1, 1. AT minus 1, how much? 110. Next, minus 100. How much? Into 0.2. 2 rupees. 100 plus 2 rupees, how much? That's how 102 came. Understood what we did? Try at home your calculations. Okay. So, see here. This is how we have to do. See there. F2 equal to what? F1 plus A1 minus F1 into 0.2. 100. Second day 102. The third day 102. Fourth day forecast is 105.6. Like that we have to make the calculation. Listening everyone. This question exactly same question ditto came in exam. Number say change. Concept is same. Closing values of NSE Nifty from 6th to 17th day of a month of January 2020 were as follows. Day 1, day 2, day 3 like that 12 days information given. Okay. Day 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. All the days are trading days. Some holidays are there. Holidays are there. Sensex is also given. And now we are doing for any one particular stock. We are doing for the index. Index ki we are doing. Sensex ki we are doing. These are the values given. Calculate the exponential moving average of Sensex during above period. The previous day exponential moving average of Sensex can be assumed as 15,000. The value of exponent for 31 day EMA is 0.062. I will ask you one question. Tell me, how many days information was given? Answer? 2 by 13. 2 by 13. Don't see my face. Do everyone. 2 by 13. 0.5? See here. See here once. Totally how many days is it? 6th to 17th. 6 to 17 totally. 2 by 12 you calculate. 0.16. Like that some values. He has given the value of that 2 by n plus 1 not for 12 days. He has given for 31 days. Now you tell 2 by 32. That's why they got 0.062. Though they gave question in examination for 12 days, originally the alpha is calculated for 31 days. Alpha calculated for 31 days. Examiner they will tell you, next examiner they don't give this. They will just tell that exponent should be for 31 days. How you should do? 2 by 31 plus 2 means 2 by 32 which is equal to 0.062. Listening? Sir, 31 days they did not tell, sir. Then what to do? Then you do 2 by n plus 1 information given. 2 by 13 you have to do. Understood the point clearly or not everyone? Sir. Depending on how the question comes. Tell me now. Question directly given. Take it directly. Question days given, number not given. Take that days. Question days not given, number also not given. Go by information given. Understood the point clearly or not, everyone? Okay, very good. This is the point, sir. So point number 1, how many days information was given? I will ask you one question, tell me. Calculate the EMA for first 2 days. That's all. We'll go to the next concept. Start. First 2 days you do. So to take the forecast for the 7th day using this information, we require the previous day information or not. That was given as 15,000. Given there in the question. Previous day, what is the number? 15,000. Do the calculation. Yes. Yes. Just for the first 2 days you do. If you do that properly, that's all. Every other thing also you will do. Don't do on calculator. Put the pen on paper. Start doing it. What is a FT minus 1? What is a FT minus 1? Next, what is the AT minus 1? 14,522 minus 15,000. Close the bracket. Into 0.062. Everyone please tell the answer how much you got. So small calculation I ask you, sir. Why you are doing wrong? Tell me how much is the answer? 14,000? Sorry, how many of you got 14,970? See the answer. Perfect. This is the answer. 14,970. Will you do for day 2? Do that. Do for day 2 also. You will get clarity. Tell you. Second day, I'm waiting for your answer. Second day. 14. How many of you got 14,967? Got the answer? See the answer. Perfect. 14,967. Exam, you should do this way. Format. You read the format. What is the first one? Date, actual, calculation, exponential moving average, and the forecast. This is how your presentation, the format should be. Okay? Like this one. This all if you do, 8 marks in exam. But hardly if you practice for 2-3 times, this will not take more than 10 minutes, 5 to 8 minutes to solve. But 8 marks you will definitely get. Correct or not? Do you know the advantage of this? There is no way to ask a question other than like this. That's why this question came 4-5 times in exam. Same question will come, numbers will change. Reason? There is no other way to ask the question. So these are all risk-free questions if you prepare. If you don't prepare, you don't even understand what is going on. Sir, first tell me everyone honestly, how many of you learnt about this particular concept today? Means not about the formula. Formula you might have read. The meaning of what is exponential moving average. What is the purpose of exponential? This is the thing. I know. So the point is, Sir, chapters like derivatives and forex, everyone will do. That's why I upload already 15 hours on YouTube also, only on derivatives and forex. Problem is students are missing the line in chapters like securities analysis, risk management. Are you understanding or not? Securitization theory. These are the areas where we are losing the grip. Tough paper comes in a jump. So therefore, please prepare these chapters very well. Understood the point or not? So everyone understood what is exponential moving average. Final topic for this particular. Next topic for this concept is efficient market hypothesis. This time expected question for the exam. 8 marks, 90% a question will come from efficient market hypothesis. This all notes is there, na? All these notes I prepared for CFA level 3. Because CFA level 3 last once after completion, now they also added thesis paper. Means once after completion of entire CFA, we need to give the thesis paper for getting the charter holder. CFA qualification is different. After that, we need to get the charter. CFA charter holding should be there. To get the CFA charter holder, we need to submit the thesis. How you are getting all these numbers, proofs, side indication, everything. For that I prepared. That's what I am sharing also to the CS students, because our textbook also contains the same problems. Listening or not? That's right. That's the reason. So if you understand in this depth, you can understand any question ICAI asked. Because it will be always one level below CFA only with regard to this paper. Okay? See there. Efficient market hypothesis. First let me explain what is efficient market hypothesis. Anyone have the clarity about efficient market hypothesis? What is an efficient market hypothesis? Any guess? Sorry. What is an efficient market hypothesis? Let me first explain. There are 3 types of markets. Sorry, 2 types of markets. Efficient market, inefficient market. First one, efficient market, inefficient market. Please listen carefully, sir. Important. Tell me, first one? Second one? Which markets are good? Efficient or inefficient? Efficient is good. In never market like inefficiency should be there. Do you know what is inefficiency? Inefficiency means people are predicting the prices. People are, never markets should be predictable. Okay? Never markets should be predictable. Are you understanding the point or not? I will ask a question, sir. You tell me. Fair, unfair, you tell. COVID came. 2020 March. People got affected very badly. Vaccination was given. Correct or not? I said, all persons who is having income range from yearly 1 crore to 5 crore, for them this medicine will work. You are listening me right? All persons whose annual income range from 1 crore to 5 crore, COVID medicine will work on them. Okay? Remaining all people, medicine will not work, I said. Now tell me. Efficient medicine or inefficient? Why? It is giving advantage only to a certain group of people, and they know that when I am in between 1 to 5 crore, COVID medicine will work on him. There is no logic in this. But the point is, I think you can understand what I said. Medicine is efficient or inefficient? Inefficient. You should work on everyone in the same way. Why money is defining the applicability? Are you understanding or not? Why money is affecting its applicability on me? It should not. Same thing. Do you know why I said this example? Range between 1 to 5 crore. There is a logic. Let me explain. I am a chartered accountant. I does my CFA. And I am trading in the last 7 years. I know about markets. To some extent, to be very frank, I know very good about the markets, how they run. When to buy the stock, when to sell the stock, which stock to buy, which stock to sell, candlesticks, patterns, analysis, charts, nonsense, everything. So over a period of last 7 years of what I experienced in the stock market, just I know what stock markets are and how they work. Now the question, for me, I can analyze the stocks and I can buy or sell the stocks and make some gain, correct or not? Sorry. Say for example, another person is there. She is from medicine background. Example, she is not at all from the finance. That's what I want to say. How come she will know all these things? Yes or no? These type of people can predict or cannot predict? Answer. Now, reason I will tell you one thing. Even whether Koushik Mukhesh, Warren Buffett, you take any person who have the stock market knowledge, everyone made loss in their life. Are you understanding? Warren Buffett also will make loss on a daily basis. Some will make profits, some will make losses. Are you understanding or not? If really Warren Buffett daily makes profit, know about his portfolio and invest in that daily. Then everyone should be Warren Buffett. You didn't understand what I said. If really Warren Buffett makes profit every day, what everyone can do? Know the portfolio, what he is holding. Invest in all those stocks. That's all. Everyone is a billionaire then. It's not about making profits. It's all about managing the money in a right way. That's how he's become successful. So the point is the money management is a skill. Here the concept is try to understand. Person having the charting knowledge. Person having the charting knowledge is seeing. I'm sitting before the screener website. I saw candlesticks are going green, 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 growing like anything. Listening, I understood. Prices are moving up. I bought. Immediately came down. Then I will slap myself. Why is that greediness is coming to you? You could wait for another 1-2 hours. Are you understanding? That means a person like me who had 7 years experience is also becoming weak when I see the markets going green color up and up and up. What I will feel, just now I should come, I should buy the share, much more it will grow, I will sell. Immediately it fell down. Means though I know the candlesticks pattern, I am going right or wrong. That's called as efficient markets. Efficient markets should not help analysts, should not help a layman. Efficient markets are those markets where predictability of market is near to impossible. Do you understand the point or not? Answer everyone. Predictability is near to impossibility. Warren Buffett, all these people, including me, who has a knowledge of just 7 years, everyone does only one thing. If we get loss in one share, we will try to get profit in another share. That's all. Nothing great than that we are not doing here. Are you understanding or not? No one, tell me, Warren Buffett can tell her what will be the price after 1 hour? Answer. If I tell that, markets are inefficient because someone is taking a bad advantage of the markets. Are they insider trading? Do you understand the point or not? So markets should be efficient or inefficient? Efficient. What is an inefficient market? Where the predictability will be easy. It's called as a inefficient market. So listen carefully. Point is, predictability if not there, predictability there, like that originally they started doing the analysis called as efficient market hypothesis. What hypothesis? Efficient market hypothesis. Okay. Graphs I will show you later. First let us see this. Inefficient markets you read. Read, yeah, profits are simply by making technical analysis of stock. And if I have knowledge, I will make profits only in the market. No loss for Koushik Mukhesh in life. But really it's happening. I know all the candlesticks. 138 candlesticks I know. All Japanese candlesticks I know, Doji candlesticks I know, Marbozu candles I know, all candles in the market I know, how they pattern. But still I am making losses, you know or not. Bandhan Bank I invested 1 week back, daily crying. It raised, candlestick shown a pattern of rise, I bought, after I am buying, last 1 week full losses it is going. Means, where is my analysis, where is my 7 years knowledge? These are all stories. Stock market, never ever we can predict what will happen. Are you understanding or not? So the point is, read. Profits are made simply by making technical analysis of stock. If technical analysis fails, market becomes inefficient. Sorry, market becomes efficient. So tell me, market should be efficient or inefficient? Loudly? Efficient. Okay? Market should be efficient. Inefficient markets are? Inefficient markets are those markets where people make the profits just by making. Then who is having profits throughout the day, throughout the life? People who are having the knowledge. And the chartered accountants, CFAs will always make profits only. It will be like 1 crore to 5 crore people on them only COVID medicine works mean only a certain group of people is taking the advantage of that. Then medicine is inefficient. Like that, only chartered accountants and CFAs will make profits in market because they know the knowledge. What is this logic? Remaining people should not live in markets. So therefore, markets should be efficient or inefficient. Loudly, everyone. Loudly. Efficient markets. Efficient markets, like again 3 types of efficient markets are there. Weak form of efficiency, semi-strong market efficiency, strong form of efficiency. Weak, semi-strong, strong. 3 things are there. How 3 things will work, logic, everything we will understand. Before going into that, please see here. Another 15 minutes like in the previous concept, if you put your brain, efficient market hypothesis also over. See there. Let us consider a company X Limited. Observe the share price movements in the last days. How good do you know this concept is? Efficient market hypothesis. See there. Tell me. Don't tell the numbers. See the pattern of prices. What is happening to the prices every day? They are going on increasing every day. Correct? Huh? Now tell me. What is the meaning? What is the information the stock is giving you? What is the message this stock is passing to the investors? Prices are increasing. Like that you will buy and sell the stocks. That's why you get the loss. What do you mean by that? Buy at any price, it will grow. You buy here, sell here. Buy here, sell here. Buy here, sell here. Every time profits will come in this share. Wherever you buy. That's the meaning. Do you understand the meaning clearly or not? You buy wherever you want. You will get only profits. This stock will never give the loss. Because there is no steep fall. There is only rise. You buy here, sell here. Buy here, sell here. Buy here, sell here. Means your selling is always higher than buying. You go on making gains only in this stock. Listening or not, everyone? Now tell me. I will ask a question. Tell me. Pattern of prices is predictable or unpredictable? Predictable, unpredictable. Tell me. Day 1 I bought. What will happen? Day 2 it will rise. Day 2 I bought. Day 3 it will rise. Day 25 I bought. Day 26 it will rise. At any point of time you buy, you will get a profit only. Listening or not, everyone? Pattern is understandable or not understandable? Clearly understandable. Change the pattern now. Okay? Prices are changed now. 100, 110, 120, 130, 140, 135, 115, 110, 131, 142, 151, 160, 165, 171, 160. Randomly I have taken some numbers. I plotted on the graph. Tell me. Answer to my question. This particular company stock is predictable or unpredictable? This is also predictable. That's problem. Analyst ki student ki difference, do you know where it comes? Seeing the charting. Do you know what is happening in this stock? See here. One second. There is a rise in the market. Means rise A will be there for continuous next to 4 or 5 days. Like that you should see. Do you know what you are seeing? You are seeing the pattern and telling that unpredictable. No. See the numbers. See the numbers there. What is happening? 100 becoming? 110 becoming? 120 becoming? 130 become? Next it will fall for another 3-4 days. Again it will rise. Once rise, it will rise consistently. Are you seeing the numbers or not, sir? So now tell me, numbers important, graph important, both important. Both are important. That's why always when you see the screener website la charts, first to put the price and then see the charts. Some people will only see the charts and tell good to bad. Some people will see only the numbers and tell good and bad. Analyst should see both. Numbers you should have, charting also should be having. Understood the point or not? Now tell me, 100 to 110, 120, 130, 140, 135, 115, 110, 131, 142, 151, 160, 165, 171, again fall. Means when there is a rise, not answering. When there is a rise, there is a consistent rise for 3-4 days. Then that will be a fall. Until one pattern is created or not. Again, this is not efficient. Understood or not? How share price should be? Unpredictable. What will happen you should not predict. That's called as efficient market. This is inefficient or efficient? Pakka inefficient. No doubt, fully inefficient stock. Now you will answer this. 100, 110, 105, 115, 92, 98, 93, 120, 107 and 119. Answer, everyone. This is predictable or unpredictable? This is also predictable. That's why you see the red line there. Red line. Whenever fall is there will be a rise. Understood the point or not? Whenever rise is there is a fall. But fall is not consistent. Immediately there will be a rise. There is a pattern. See here. Like that notes I have given. See here now. Now I will ask a question. First see 3 examples. From all the above 3 examples predicted as follows. First, X limited straight line. Tell me what you are doing? Buying at a price, selling at a price, profit. Next one. Buy at a lower price, sell at a higher price, profit. Like that we are doing. Correct or not, everyone? This is all the 3 things. In all 3 cases, please read. In all 3 cases, there is a sure way to make profits. Means a analytical time to buy and sell the stocks. We know whenever there is a rise is consistent for some number of days. Buy at that time. Are you understanding or not? Or sell at that time when prices are rising. You take one decision. Decision making will be there. Next. That means a market where profits are dependent on technical analysis of the stocks or technical analysis of the charts and graph will give rise to profit is called as a inefficient market. Because if I know the chart I will make gain means you are giving advantage only to whom? People who are having a knowledge. Normal people, they should not have they should not get the benefit of market. They should also get or not. Therefore markets should always run like efficient or inefficient. This was given by a person called as a Dow Jones. Who? Dow Jones. He has given a concept called as a run test. What he has given? Run test. Okay. What is this run test? Simulation type it is. How it works is the examination question. See here. There are 2 persons are there here. One is a Dow Jones and the one is a Pharma. F-A-M-A, not FEMA. Pharma. F-A-M-A. Economist is there. He and Dow Jones put together gave a thesis on efficient markets and inefficient markets. I will first tell you what is a efficient market. Efficient market la how many will be there? Efficient market la how many types are there again? Very, very popular theory question in exam. 3 types of efficient markets are there. Number 1, weak form of efficiency. Number 2, semi-strong form of efficiency. Number 3, strong form of efficiency. Okay, na? Let us understand one by one by pattern. See here. Tell me. I will ask questions. Answer one by one. Do the problem. Next chapter. Tell me. See the left side to me. Inefficient market. Correct? Tell me. I have a knowledge of technical analysis. I know the candlesticks. I know the charts. I know to view the websites properly. Screener, etc. Okay. Now tell me. If I have a knowledge of doing all these things. Okay. Stocks screening, etc. If I can do. Investment patterns I know. If I have a knowledge of candlesticks, charts, etc. I can make a profit. Such kind of markets are what markets? Why? Advantage is taken only by a certain group of people who are having a knowledge. That's not correct. Okay. Next, number 2. See here. What are the 3 types of efficient markets? Weak form, semi-strong and strong. 3 types are there. What is the first one? Weak form. Do you know what is it? Listen. Fundamental analysis will fail. Technical analysis will fail. Means I know charts, I know patterns, everything. That will not help you to get the profit. You should know ratios analysis properly. Internal analysis. And a company return on capital employed, company return on equity, company return on total assets, turnover to total assets, fixed assets turnover ratio, debtors receivables period. All these internal analysis, if you know, you can make the profit. That means which analysis is working? Fundamental analysis of the company will give you profits. Such kind is also inefficient, but technical analysis is working or not working? Loudly. Everyone. But what is working? Fundamental analysis, if you know, you will make a bonanza profit. Such kind of markets are called as efficient, but weak form of efficiency, because people having knowledge on ratios analysis are gaining the money. People having the knowledge on ratios and financial statements analysis are gaining money out of it. Read now. Weak form of efficiency. Read. Technical analysis fail. Profits are made only by making fundamental analysis of company, like EPS, DPS, sales ratios, etc. Understood the point up to here clearly? See the next part. What is the next part? Semi-strong form of efficiency. Shall we see here? What is semi-strong form? Semi-strong form means technical analysis will fail. Fundamental analysis also will fail. Sir, I have lot of knowledge on charts. Nonsense. I have lot of knowledge on ratios. Another nonsense. Sir, then what to do? You should be a director of the company to know whether your prices will increase or not or decrease or not. We call it as a insider trading. Ethical, unethical, legal, illegal, FM will not see, the law will see. We are dealing with law na FM. So don't talk about ethical and unethical things in the FM. If you are an insider doing insider trading, then only you can make a profit, or else unpredictability is there in the prices of the stocks. Are you understanding or not? That kind is called as what strong market? Semi-strong form of efficiency. So read, technical analysis, fail. Fundamental analysis, fail. Only way to get the profits is insider trading, though fraudulent. Listening or not, everyone? Tell me, what are the two forms of markets? What is the two form? Efficient market, inefficient market. Technical analysis, if you know, you can make bonanza profit, called as efficient, inefficient. Technical analysis will fail. Which market? Which market? Efficient market. In that, how many kinds of efficiency are there? First one, weak form, semi-strong and strong. Weak form means what? Technical analysis fail. Fundamental analysis will give you profit, called as what? Weak form. Next, semi-strong. Technical analysis will fail. Fundamental analysis also fail. The only way to make a bonanza profits is insider trading. Third one, strong form. Next, technical analysis fail. Fundamental analysis fail. Insider trading also fail. Like now, insider trading not allowed by SEBI, so you can't do. Technical analysis, so if you can do, all technical analysts should become billionaires by this day, but they are not. Listening, I know lot of things, ratios, etc. Then all chartered accountants should become billionaires in India. They are not. And then none of these things are working. Demand and supply forces are only affecting the markets, which you can't control, which you don't know. Understood or not, everyone? Read. Only option is buy, hold and wait till it rises, and then to make a market. Information is available to everyone at the same time. COVID medicine will work on everyone in the same way. Because of money constraint, it will work. If you don't have money, it will not work. That concept is not there. Like that, markets are same for everyone. It should behave in the same way. Information should be available to everyone in the same way. That's why SEBI LODR guidelines came. Enna guideline? LODR guideline, Listing Obligation Disclosure Requirements Guideline 2015, amended 2022. That amendments came only because of that. Whenever company tries to declare dividend, it will announce a record date. It will announce which date? Loudly. Record date first we need to give to the stock exchange. Stock exchange will announce to the public. Means information is available to all the people at the same time. Directors are knowing first, later employees, after that internal company people, after that public again, investors first, public general next. Like that, it's not there. Information is available to all the people at the same time. Do you understand the point or not? This is the concept of efficient market hypothesis. Understood the theoretical knowledge of efficient market hypothesis clearly or not? Idea clear and yes or no, everyone? Yes, tell me, how many types of markets are there? Number 1 will be? Number 2 will be? Profits on the basis of technical analysis. Profits on the basis, technical analysis fail. Immediately it will become? Technical analysis fail, immediately it will become efficient. Efficient how many types again? 3 types. Number 1, weak form, semi-strong and strong. Weak form, technical analysis fail, but fundamental analysis will give the bonanza profits. Second, semi-strong, technical analysis fail, fundamental analysis also fail. The only way to make the gains is insider trading. Next, third, strong form of efficiency, technical analysis fail, fundamental analysis fail, insider trading also not possible. Fraudulent country doesn't allow that. Next, the only option is like me, buy, hold, profit come, clap. If doesn't, cry. That's it, over. Maximum what you can do is you can invest in multiple securities to eliminate the risk. That's all. Understood the point clearly or not? These are the 3 types of markets. On this question will be tested. Please see here. Do you know what is the logic of this? Sir, you might have seen this question in the study material. I will show you. Can you please tell me what is the essence of this? No, sir. You give me, I will do. 2-3 formula will be there. I will mug up those formulas. I will go to exam. I will put it in mind. Exam lo question comes na directly. Write down, answer. What is the meaning of this information? Any guess? Shall I tell you what is the meaning? See here. Please see here. I will explain you the concept. First, what is the concept we are starting with now? Theory completed. Now problems we are coming. What is the name of the concept we are doing? Efficient market hypothesis. EMH concept. Efficient market hypothesis. Okay. Let's see. First point number 1. How to understand the efficient market hypothesis? First, if any stock price, any stock price is moving up and down, very rarely, predictability of price becomes very easy. Means we know, if it rises for next to 20 days, about 25th day somewhere it will fall. Once fall, again it will fall for another 20 days, then it will rise. Predictability is easy or difficult? Loudly, easy. So try to understand clearly. Whenever your behavior is consistent, predictability becomes easy. Predictability becomes easy. Even with the people, if our behavior is consistent, means he will be like this only, means people will take a bad advantage because they know how we behave. Are you understanding or not? But if you are like a chameleon, so you are changing yourself according to the situations, very dangerous. No one can predict what we do in the next 1 minute. Do you understand the point or not? Never make people to predict us. What we do next step, they should not understand. Then you become unpredictable, you become efficient. Are you understanding the point or not? We should not be so much predictable. Now Koushik Mukhesh behave like this means, then they will prepare I will become bakra. They will start preparing the biryani for me. Now you try to understand clearly. Logic is very simple. Stocks should never become predictable. Means what? I will tell this way. There is a share. That share price never changes. Static it will be. Now tell me. Static means if it grow, it will grow. If it doesn't grow, it doesn't grow. Raising is consistent, fall is also consistent. Now people can make a predictability about the stock or not. What is the predictability? Tell me. Once it raises for consistently for next to 25-30 days. You need not worry, you can invest and sell in this 20-15 days. Profit guarantee. Easy or difficult? Predictability. Loudly, sir, everyone. Very good. There is a stock. Okay, there is a stock which will change very frequently. Now tell me, predictability is easy or difficult? Again, dead easy. Don't become that much volatile also. People will know next minute he will not do this. Did you understand the point or not? If a stock is not having any movement, dangerous. If the stock is having an extreme movement, rise or fall, rise or fall, rise or fall, rise or fall. Until you are giving another message here. Do you know what is the message you are giving? Whenever I rise, I fall. Whenever I fall, I rise. Again message went. How your behavior should be? One time you should do, next time you should not do the same thing. Next time they will think that you will not do, you will do. Next time they think that you will do, you will not do. ICAI, see, ICAI, most strong form of efficiency. This much we are predicting that this question will come, may not come. We will think like that, ICAI will think that people are thinking like this, I should give differently, they may give the same question. So, when you are unpredictable, that becomes efficient. Classic example, how one person student gave that example, thank you very much. Who is the most strong form of efficiency in the world? ICAI. So, how the question paper will come, no one will know. 1000 years experience person also will not know. 1 year experience person also can't predict. They can do anything. So, when the person is unpredictable, becomes efficient. So, stocks also same. That's why, do you know what does it mean? That's why they will ask you in this question, calculate the number of runs. Number of runs very less, inefficient stock. Number of runs very high, inefficient stock. Number of runs should be average, then it is difficult to predict it. That's why we will see efficient and inefficient using the information given there. So did you understand the question or not, everyone? What we are going to do in this area now? Calculation of number of runs. That's why we call it as a run test. Which test? Run test. Pharma is a person who found it along with a person called as a Dow Jones. Okay? See here. I will explain directly. See the screen. How to understand inefficiency. Start. To conclude that markets are inefficient, the number of runs should be either too high or too low. Let us consider the graphs of ABC. Tell me. X. There is only one run. What is a one run? If you observe the X limited stock, there is a rally. Fatafat. Every day rise. Rally of stock prices raising. Second, there are only 5 runs out of 15 actual prices. 15. So tell me, how many actual prices are there in the first case? Red dots. How many? 5 are there. Okay, directly like this it is going. Next one. Next one. 5 runs are there out of how many actual prices? Just example, how many actual prices? 15 actual prices you take. In that only how many changes happened? 5 times. See, plus, minus. Correct or not? How many times? 5. Out of how many? 15. See here, the point is, first situation only one run, rally. Second time, 15 how many times only it changed? 5. Until 10 times you are unchanged. Next, see the next one. There are 10 runs out of 10 actual prices. And people are knowing every time it will change. Predictability is there again. Rise or fall? Fall or rise? Okay. Read the blue colored dialogues that I have written there. There is only one run. Next, there are only 5 runs out of 15 actual prices. Read. One brown color box I have drawn, one brown color text I have written. Read. Inefficient due to low runs. Next. Inefficient due to high runs. Low is better, high is better, average is better. Loudly. Average is better. Okay. So low should not be there, high should not be there. There should be average. Average is not your simple average. Average is a different average. What is that average? We will see. Before that, read. Conclusion is, market is said to be inefficient if the number of runs are not too high and not too low, but it should be average. Then predictability through technical analysis becomes impossible. Immediately when technical analysis is not possible, what will happen? Market turns efficient. Listening or not, everyone? Note. Read. When we take an average, it is an approximate number. You please tell me. See my face once. Okay? When we take average, like this a line is, average will be in the extreme left eye, extreme right eye, middle eye. Answer? Whenever you take an average, average is an accurate number, approximate. Definite number will change. A change we call as a variance, also called as a standard deviation. Also called as a? Are you listening to me, everyone? Tell me again. Portfolio management you have done. Mean you will calculate. Mean is what? Average. That is simple or weighted average, average. Okay, now tell me, average I said, Guarantee, there is a chance of deviation. That's why whenever you calculate the mean, you also calculate what? Standard deviation, saying that this mean is not guaranteed. Like that here also. That's why in this calculation, mean will come, standard deviation also will come. We listening, everyone? Continue. I will ask you a question here. I will ask you a question. I will not believe you, na? I said average 6%. What do you mean by average 6%? Average 6% means what? Or average rupees 100. What do you mean average rupees 100? Share price will be, on an average, will be at what range? Answer. Standard deviation of 25, I said. What do you mean standard deviation of 25? 100 can go down up to 75. 100 can go up to 125. Everyone tell me. Mean plus standard deviation or mean minus standard deviation? Mean is what? Middle. Mean is what? Middle. Standard deviation what? Movement of the mean. Movement of the mean. Tell me, mean is how much? 100. Standard deviation is how much? 25. What do you mean by 25? This 25 is a minus or plus? Both plus and minus. Mean plus 25, mean minus 25. Tell me, mean is how much? Mean is how much? It can rise and go up to? Next, mean is how much? It can go down up to? From this, what you have to understand, mean has a left movement, a right movement, both side movements are. That's why in efficient market hypothesis, at least from now, stop mugging up the concept. That's why you will have two things. Lowest average, highest average, we calculate two things. Upper limit, lower limit. Did you do before? If you didn't do before, you don't understand what I said. First time if you learn, very good. If you are already done, you will understand much better than anyone else, because lower upper limit, there are two limits they will calculate. One minus standard deviation, one is plus standard deviation. This is the reason why they do. Okay? Sorry, okay. Now, tell me, what average we should take? Simple average, weighted average, average with standard deviation. Average with standard deviation. Tell me, 100 plus 25 is how much? What is 125? Highest movement. 100 minus 725, how much? What is 75? Lowest movement. What is the average movement? 100. Listening? Tell me now. When we take an average, it is an approximate number. Continue. It lacks accuracy and thereby it has standard deviation. Therefore, we will consider two averages. Tell me. Lowest average means what? Average minus standard deviation. Next. Highest average. Average plus standard deviation. Notations used in EMH. Jor se bolo. Start. Number of observations with plus change. How much? N1 we call. That means whenever prices are rising, we will put plus symbol through that. What symbol to that? Plus symbol. Next. Number of observations with minus symbol. Okay, minus symbol means whenever prices are falling, we will put minus. That is N2. See here, example. Start. 100. Please see there, everyone. Concentrate. 100, 110, 120, 90, 80, 65, 92, 95. Okay, na? Tell me. First, 100 to 110. Rise or fall? 110 you should put plus. Next, 110 became rise or fall? Again plus. 120 became minus. 90 became minus. 80 became again minus. Next, 65 became again plus. 92 became again plus. Now, all the sets of plus will be called as a one run. Rally we call it really. In stock market language, people call it as a rally. Two rally means rally for 2 days. Same raise is there for rally. Are you understanding? Ola, once it go for IPO, 4 days there is a rally. Raise it like that. Again fall. LIC stock. Rally for first week. After that, FUT. Downward rally started. Again, upward rally has taken 4 years for LIC to grow up again. So, rally means a consistent raise. Okay, na? See there. Start. There are how many runs? Sir, please answer, sir. There are how many runs? How many days information we have taken? How many days information? 1, 2, 3, 4, 5, 6, 7, 8. How many days? 8 days of information. What is my observation? Average la how many runs have come? 3 run. 3 is very less, very high, average. What is it? That you should not tell whether that 3 is a unpredictable number or predictable number. We have to put in a formula and calculate now. If that is not too high, not too low, not, then we call it as a efficient market. Understood the point clearly? Tell me now. Answer. If runs are too low, conclude the answer. If runs are too high, if runs are average, what is average here? That's what we are going to calculate now. Understood or not? Now tell me, how many runs, how many plus symbols are there? Adi N1. How many minus symbols are there? Adi N2. Okay? How many runs are there? 3 runs. This is run test. Okay? See the answer below. Now we need to know that this 3 runs is average or is above or below the average. How the average is calculated? Just remember the formula. Notations and all, don't question now. This is not a time. Regular class we can see that. Plus see this answer. Tell, what is a mu? 2 into N1 plus N2, sorry, N1 into N2 divided by N1 plus N2 plus 1. Don't ask any question, just calculate the average. Okay, now in my question, how many things I have given here to you? N1 how many came? 4. N2 how many came? 3. Divided by N1 plus N2 plus 1. Can we just put the numbers and calculate an answer or not? Do that. 2n plus N2 N1. First tell me N1 into N2. N1 how many? 4. What is N1? What is N1? Plus symbols. What is N2? Minus symbol. How many plus symbols are there? 4. How many minus symbols are there? 3. Totally N1 into N2, 12. Into 2 is 24. Into 2 is 24. Divided by 7. 24 divided by 7. Plus 1. 4 point? What is it? Average, mean. Okay, that mean is guaranteed has a deviation. The deviation is calculated by this formula. Start calculating it. Put the numbers on the paper. You can't do like that on calculator. Put the numbers on a paper. Two N1 N2 into 2 N1 N2 minus N1 minus N2 whole divided by N1 plus N2 whole square into N1 plus N2 minus 1. Headache is with remembering the formula, I know, but you remember. Logic everyone understood kada? Previously that also not known. Now the burden is only to remember the formula. Sit and write the formula every day, you will remember. Anyone calculate? 1.17, huh? Let me see. First, mean 4.43 got everyone? Mean 4.43. Okay. Next, 1.17 you got as an answer? Okay. Next, tell me, one second please. Mean you got 4.43. Forget about standard deviation as of now. First answer to this. In the given example, mu equal to 2 N1 N2 by N1 plus N2 plus 1. Okay. 2 into 4 into 3, totally 24 divided by 7 plus 1. 4.43 you have got. Correct? Let us round it to 4 for understanding sake. Let us say standard deviation is 3. Standard deviation is 3. Example A. Actually you got 1.17 something. Forget about it. If at all it is 3, how to understand? Lower limit is mu minus 3. How much? 1. Upper limit is mu plus standard deviation. How much? 7. If your number of runs are between 1 and 7, we call it as an inefficient market. Not too low is 1. Too high is 7. Between that is unpredictable number. How many runs we have got in this example? Answer. Our runs are between 1 and 7 or not? Yes. That's it. Are you understanding the point or not, everyone? How to do this answer? Let us see. One study material question is there. If at all question has to come, ditto, they will drop and lift the question. Okay? They will lift here, they will drop in the examination paper. So properly you see. First open the study material, everyone. I copied from study material. You can see the font color. I did not put any additional effort for this problem. Concept effort. Answer is very easy. Now this is a time for you to do this answer. 10 minutes time we should complete. Take the study material out, everyone. First, what is your work number 1? Plus minus you put it correctly. No. 2780 to 2795 is an increase. Two 2800 to 2780 minus or plus like that. Next 2780 to 2795 plus, like that you put the symbols first. After symbols, tell how many pluses are there, how many minus symbols are there, and how many runs are there. This is work number 1. Do it. Done? Everyone done? Firstly tell the answer. How many runs totally you have? How many runs? 8 runs. 1, 2, 3. Okay. 8 runs totally. Next, how many N1s are there? 11. Correct. How many N2s are there? Can you calculate mean formula? 2 N1 N2 whole divided by N1 plus N2. That's all. Do it. Write down there itself. Study material you can solve, sir. Nothing great. Not so great question it is. How much? 10.0? 10.26. Next, do the sigma calculation. Practice 1-2 times. If you do, automatically you will get. Do the sigma calculation. 2n1 n2 into 2n1 n2 minus n1 minus n2 whole divided by n1 plus n2 whole square into n1 plus n2 minus 1. Put the formula, put the numbers, calculate.
How much is answer you got, sir, everyone? What is 2.06? It is a mean, it is a standard deviation. Means the 10.26 is guaranteed or unguaranteed? The 10.26 is a guaranteed number or unguaranteed number? Unguaranteed. That's a mean. It can have a positive deviation or a negative side deviation also it can have. Sir, up to here everyone calculated. 90% problem is over. Still there is some point. See here. See the screen? See here. See what he is asking. You are required to test the weak form of efficient market hypothesis. He is only telling it's a weak form. He is only telling that this is a weak form by applying a run test at 5% and 10% level of significance. 5% and 10% level of significance. Following values can be used. Value of T at 5% is 2.101 at 18 degrees of freedom. Value of T at 10% is 1.74734 at 18 degrees of freedom. Sir, what is this 18 degrees of freedom? What is this 5%, 10%? Listen. Degrees of freedom will be dependent on the following. Before that, check your answers properly. Have you all got this answer, basic information? For that, he will give this. For this, a plus and minus symbol, 2 marks. Okay? Basic information calculation ki 1 mark. Mu calculation ki 1 mark. Standard deviation calculation ki 2 marks. Finally, calculation of degrees of freedom. Degrees of freedom will be calculated as, read, how much? N1 plus N2 minus 1. So totally how much? 18. Therefore, 18 is the degrees of freedom. Means how many days you are considering is the concept here. And how many plus and minus symbols? How many plus and minus symbols? Sir, why minus 1, sir? Question will arise or not? First day is the base day. We will not consider that. Which day? First day is a base day, therefore minus 1. So tell me, how much is the degrees of freedom, everyone? 18. Degrees of freedom, 18. See here once. See the question once. 1 second, sir, you will get confused in exam. Listen to my words. How much is the degrees of freedom given here? Exam question like this, they may not give. Intentionally, they may give 5%, 3.403. At 26 degrees of freedom, like that they will give. If you don't know this formula, at that time what to use you will not know. Did you understand the point? 26 or 18, how you know that 18 is to be selected? Now did you understand? Okay. Sir, what is the degrees of freedom? Degrees of freedom is nothing but standard normal distribution table, a number. Which table? Standard normal distribution table. That we will see in the risk management area. You know how to see the standard normal distribution table? How many of you know the two-tail table? Two-tail standard normal table. One tail, two tail, total tail. How many of you did Black-Scholes model in options? Black-Scholes model. Bro, did you do study material question on Black-Scholes? How do you know two-tail model then? How do you don't know two-tail model? Little bit illa, little bit the little marks will come. Because you have to write right answer in exam. Huh? Not depth. How do you identify a number? If I give a total tail, left tail, right tail I give. Cumulative tables I will give. Or mean table I will give. There are 4 normal distribution tables. How many? 4 normal distribution. Mean normal distribution, left tail, right tail, cumulative. Which table will come in examination? God should know. That's mean. 0.5 is a mean always, which stands on the x, and after that 3 sides right side, 3 sides left side will be there. That's what we are going to learn in the chapter called as a risk management. How to understand the standard normal distribution tables. For that only I have written 10 to 12 pages notes I have written. How to understand the standard normal distribution tables. If they come in exam, you should never do wrong from today. Once you learn the normal distribution tables, how they work. Before going into that, first tell me, what is the formula for DOF? N1 plus N2 minus 1. First day is a base day. They will remove that day. From the second day onwards, they will calculate. Understood? Shall I give you one example? See here. First day you are considering a not... Page not working. 1 minute. Now tell me. First day information you have taken or not taken?
Don't consider that. That's why -1. Understood, everyone? Tell me, what is the answer for DOF? N1 plus N2. One day, first day, you should remove that. Okay? So, therefore, 8 will be positive. Something you said, 8? 8 N1s, sir. 11 N1s, 8 N2s, -1. Okay? How many will be there totally? 18. So 11 plus 8, 19, 19 minus 1, 18 totally. Okay, 18. So 19 days information you have taken 19 days information you have taken 18 days. 18 days what is the chance? What is the chance that your prediction may go wrong? Is called as degrees of freedom. Is called as degrees of freedom. See here. See here, see here. You can't understand this, please see here. Tell me. You are required to test. Read. You are required to test. Test what? Weak form of efficient market hypothesis by applying the run test at 5% level of significance. Do you know what is level of significance? Level of significance means risk level. What level? Risk level. I will ask you a question. Tell me. There is a concept in our syllabus called as a VAR. Value at risk. How many of you have done? Very good, very good, very good. 4 or 5 people. What is a VAR? Anyone? Yes. You did in the past. Very good. Bro, you? What is a VAR? Don't tell full form. Value at risk. Don't know. Maximum possible loss? A confidence level they call that itself is called as a level of significance here. Level of significance represents always a risk level. Which level, sir? Risk level. There is always an element of risk in investment. Okay. Now tell me, in your answer, what is the mean you got? 10.26. That's the average. That is average is guaranteed with deviation. With deviation. Means there is a risk or no risk. What is the chance that? What is the chance that your predictability may go wrong? Predictability may go wrong. That means how much chance is there that your loss will be 5%? How much chance is there that your loss will be 10%? Is a question here. When I invest in the market, what is the probability? What is the probability that my loss will be not more than 5? That my loss will be not more than 10. That's what he is asking. That's a risk level. Where is that only where? Listening everyone? When you come to the where, I will show you how to do. So last and final. Sir, what are the steps you have already done? Please tell me. Mean, standard deviation and degrees of freedom. Degrees of freedom also understood everyone. Finally, upper limit, lower limit. What limit? Upper limit, lower limit. First, calculation of upper limit and lower limit at 5% level of significance. Tell me, what is the formula? Mu minus, 1 second, lower limit means we need to reduce or increase or reduce. Reduce what into what? Standard deviation into T. What is the standard deviation? 2.06. T is the value given for the 18 degrees of freedom at 5% level of significance. Tell me how much it is? 5.93. Upper limit is how much? Mu plus sigma into T. How much it is? 14.59. You tell me, I will listen. What is the lower limit? 5.93. What is the upper limit? How many runs you have got in the question? How many runs you got? 8 is below 5, 8 is above 14, 8 is between 5 and 14. Markets are efficient. That means unpredictability is there. It's not too low, it's not too high. Listening everyone in the class? That's what. See here. First one, 6.6. Second one, 10% level of significance, 6.69, 13.83 we got. 6.69 is the lower, 13.83 is the higher. Our 8 runs is somewhere between 6 and 13. Therefore, the market is efficient. Read the conclusion there. Since number of runs is between upper limit and lower limit, market is efficient and it is a weak form of efficiency. With this, securities analysis is over. Everyone understood the concept clearly? Yeah? Main concepts of securities analysis, what is the main stuff that is required for exam, we have covered. Hopefully everyone confident about it. Done. Next one. This is completed. Let us take one problematic part. Security analysis I covered today. Tomorrow, first 1.5 hour, I will complete risk management area. Let us take one problematic chapter and complete open mutual funds. Let us complete as many chapters as possible. Okay. Please open mutual funds. Small chapter and we can complete it. Okay. Okay. Now, first, this question. This is a question, yeah, small question. If you can do this question on NAV, you need not do any NAV. Do this and happily sleep at home. No NAV question can come worse than this. Let's do this one. Study material are not there. The old RTP question. All nonsense I will keep in my book, because worst case scenario, if paper comes also, you should write it. See there. Let's read the question properly. What is the chapter we started? Mutual funds. Sparrow Holdings is a SEBI registered mutual fund which has made its maiden and first new fund offer on 10th April 2010, rupees 10 face value per unit. Subscription was received for 90 lakh units and underwriting arrangement was also entered into with Affinity Capital Markets Limited that agreed to underwrite the entire NFO of 100 lakh units on a commission of 1.5%. Out of the monies received, 892.5 lakhs was invested in various capital market instruments. Marketing expenses for NFO amounted to 11.25 lakhs. During the financial year ended March 2011, the fund sold securities having cost of 127.25 lakhs, face value 54.36 lakhs for 141.25 lakhs. The fund in turn purchased securities for 130 lakhs. The management expenses of the fund are regulated by SEBI stipulations which state that same shall not exceed 2.25% of the average funds invested during the year. The actual amount spent towards the management expenses was 2.47 lakhs, of which 47,000 was in arrears. The dividends were earned on the investments held amounting to 2.51, on which a sum of 25,000 is yet to be collected. Fund distributed 80% of the realized earnings. Closing market value of the portfolio is rupees 1120.23 lakhs. Calculate NAV. Easy question, do. I'm really mean it. If you do this one, you need not do NAV calculation at all. You can keep all problems as I do this one problem. Enough. All concepts of this particular NAV will be covered here. It's not there in study material. First point number one, what we need to calculate? What closing? No, he has only given closing and NAV 1120.23. Do you know what we have to calculate? Cash balance. Seriously, what you have to calculate? Cash balance. You did not understand the question. Tell me how much amount was raised? How much amount raised? Units, you see there, how much amount raised? Everyone? Illa, total they raised. That's why underwriting was entered. 90 lakhs was subscribed, 10 lakhs was unsubscribed, underwriter agreement was entered, they subscribed the balance. Understood the point? Then what is the point of underwriting? Are you understanding the point or not? See there. See from the beginning, point number 1. I will do it. I will not even do, I will show you directly on the screen. Let's not waste even a single minute for this. First, this question is one of the most simple NAV question. If you understand, very easy. But the advantage of this question is if one question you do, remaining any question of the NAV you can do. So try to understand the point. Point number 1. Take just a calculator. On calculator you can do half the answer. Tell me, how many lakh units were subscribed? 90 lakh. How many are subscribed by underwriters? Totally how much is subscribed? 100 lakhs is subscribed. 100 into what is the unit price? Unit price 10. Means how much amount is received by us? 1000 lakhs. How much lakhs? 1000 lakhs. Why we are writing in lakhs? Answer is given in lakhs. So your presentation also should be in lakhs. Tell me, just to take calculators, do what I asked you, put it on a rough paper, all the numbers in a rough format. If I say inflow, add. If I say outflow, deduct it. That's all. That is your work now. Hello, listening? Tell me, first 1000 lakhs is a inflow na outflow na? Inflow na outflow na? Write down 1000 lakhs. On a paper, write down, just roughly write. I will show you the answer also. Okay, next. After that, one by one, let's come to the steps. How much commission they are charging? How much commission they are charging? 1.5. Who is charging commission? Underwriters are charging. How much commission? Always underwriters will charge commission on the total amount, not on the subscribed portion. Because they take, sir, now 90 subscribed. 90 are not subscribed means they only should subscribe. Therefore, risk is taken on the total lot size. If given in the question clearly that they are underwriting only to that extent, then only you take, or else on the total amount they will take the commission. How much is the commission to underwriters? 15 lakhs. Write down minus 15 lakhs first. Minus 15 lakhs. Okay na? Now, one by one let us write down. Out of monies received, 892.5 lakhs was invested in various capital markets. Now tell me, 892.5 will become inflow na outflow na? Minus 892.5. Next, marketing expenses of NFO amounted to how many lakhs? Marketing expenses is a inflow na outflow na? Write down minus 11.25 lakhs. Next, see the question one by one. During the financial year ended, fund sold securities having a cost of 127.25 for 141.25. I don't want the cost, I just want the sale value. How much value I sold? Inflow na outflow na? Write down plus or minus a? Plus 141.25. Next, fund in turn purchased 130 lakhs worth of securities again. They sold and they bought again. Tell me how much they bought? 130. Minus a plus a? Minus. Okay, well, everyone? Okay, next. Don't read the middle content. Directly come to the last points. Dividend earned on investments held to be, held amounting to how much? 2.51 lakhs. In that, 25,000 is yet to be collected. And collected or not yet collected? We are taking cash account. Cash account la non-cash will not come. So I should take 2.51. I should take 2.51 minus 0.25. Calculate 2.51 minus 0.25. 2 point? Dividend collected means it's an inflow na outflow na? Inflow plus 2.26. Fund distributed 80% of the realized earnings. 80% of the realized earnings. Tell me. Fund received a dividend of how much? I will write here. Tell me. Fund received a dividend of how much? The answer here 2.26. Now you tell me. Fund has, please listen sir. Fund purchased the asset at a cost of how much? 127. Sold at how much? 141.25. There is a capital gain or not? How much capital gain is there? 127.25 I bought, 141.25 I sold. How much is a capital gain? 14. Dividend how much I received? 2 point. Capital gain how much I received? 14. Totally how much? 16 point. Now I will ask a question, tell me. How much dividend I received? How much dividend I received? How much amount of capital gain I made? In this 80% has been distributed. In this 80% has been distributed. Yes, tell the number. 13.008. Minus or plus? Minus. Right on. Minus 13.008. Minus 13.008. If you say you are complete, I will go to the next one. Everyone understood up to here clearly? Yeah. Tell me first, one by one I will ask the question. Tell me, underwriting commission adjusted, money invested 892.5 adjusted, marketing expenses 11.25 adjusted, sale price at 141 adjusted, purchase again at 130 adjusted. Next one, management expenses, that we didn't adjusted. Next, dividends of 2.26 adjusted, again paid 13.008 adjusted. Up to here we have done all this. Next, listen, main adjustment here is, see there, management expenses. Okay, see here, management expenses are regulated by SEBI, which state that it shall not exceed 0.25% of the average of funds invested during the year. Actual amount spent towards the management expenses were 2.47 lakhs, of which 47,000 was in arrears. This is the main adjustment that we need to understand. See the question once. See the question. Shall we? This is 2009 RTP question. Yesterday one very big, first day one very big mergers equations chapter we done. That I told you in the class already. Old RTP 2007-8 RTP question came in latest exam. Like that, any attempt, this will come. No doubt in that. When they plow back the question, they will get the old questions. They will give an exam, because no study material will cover this now. Very old ones. They will plow back and they will give an examination. Gone. So therefore, please be very careful with this question. Please see there one more time, one last time. Tell me. Management expenses, whatever amount we spent is allowed, SEBI regulated. SEBI regulated. You please tell me, how much is the maximum you can spend? 2.5 of what? Average of funds invested during the year, not average funds market value. Average funds investment means cost. Means what? Cost. Okay, na? See that. Average of funds equal to average investment equal to opening investment minus closing investment divided by 2. Please see the question here. Please see the question here. What is the opening investment? 892.5. Okay. Listening everyone. What is this 892.5? Opening investment. Now you tell me. Closing investment, you tell me. Please see the screen. No, wrong. Listen, the market value, again you are telling the same. 892.5 I invested. I have sold investment worth how much? 127 and bought 130 again. Means sold 127.25 investment worth and I bought 130 worth investment again. 895.25. Did you understand the next adjustment clearly? Yeah. Tell me, what is the opening investment? 892.5. What is the closing investment? 895.25. What is the closing investment concept? Opening investment plus new investments and investments cost which is sold. Totally how much it came to? 895.25. We want opening a closing a average. Average. Tell me what is average? 892.5 plus 895.25 divided by 2. 893. into 0.25%. 2.235. So how many lakhs only is allowed? 2.47 is allowed, only 2.235 is allowed. 2.235 allowed. 2.47 is allowed, not allowed? Not allowed. Only how much is allowed? 2.235. In that again, how much is in arrears? 0.47 minus 0.47. (2.235) minus 0.47. 1.765. Okay, write down there. 1.765 minus the management expenses minus 1.765. Now total the cash balance and tell the cash balance clearly to me. 79.987 means 99, correct? 79.99. You please tell me, this is NAV, this is a cash balance. To that we should add the portfolio value. Add 1120.23. Everyone tell me 1000.21. 21 means 22. Correct? This is NAV. Correct? Wrong. Arrears are there, we need to adjust. Tell me. 47,000 arrears payment here and 25,000 arrears of receipt. Where is the dividend? 25,000 is the receivable is there. 47,000 payable is there. What we need to do with the receivable and payable? Adjust. Tell me. Add 0.25, deduct 0.47. How much? 1,200 lakhs. Divided by how many lakh units? 10 rupee face value. Okay, 100 lakh units. So divided by 100. How much is the NAV per unit? 12. See here. Let me show you the answer. NAV equal to how much? 12. See the screen. Perfect. Done. NAV is how much? 12. You see the calculation here. Tell me. First what we have done? One by one tell me. First one. Cash received. Next. Underwriting commission reduced. Next. Investments made. Next. Securities sold. Next. Investments again made after sale. Next. Marketing expenses. Management expenses. Dividend received. Distribution of realized earnings. 79.99. Everyone got that 79.99 or not? Later we adjusted. Market value of the investment, cash, total assets. Dividend receivable, add, management expenses payable, NAV per unit. Understood the point or not, everyone? See here, how to calculate the management expenses allowed. First one, realized earnings, dividend 2.26, capital gain 14, total 16.26. Next, management expenses allowed. Average investment equal to opening investment plus closing investment divided by 2. Closing investment, opening minus investment sold plus investments made. Cost we should calculate. Next, average investment is 893.875. On that, how much is only allowed? 0.25. So actual expenses 2.47. Maximum allowed 2.235. Okay. In the 2.235 again, how much is in arrears? 0.47. Therefore, we will allow only 1.765. Hopefully everyone understood the calculation clearly. Everyone in the class? That's all. The main calculation of NAV have been completed. Everyone understood the logic clearly? Very good. Next. Another NAV problem also let us do in this. You might know about this NAV. So recent questions they are asking date of reverse calculation, they are asking date of NAV. Have you all done that question? You are not even replying when I am asking question. NAV la latest trend la what ICAI is doing is they are not asking NAV values, they are asking the date of investment. Very easy, and nothing will be there. Very easy question only. Than that, better questions are there. I will show them. Okay. Take question number 13. Calculator lo we are going to do this. Not going to do much on anything on paper. Directly on calculator we can do. Take question number 13. It is there also in your study material, I think. Numbers are same. See the numbers. Same numbers, then take. What is the question in the study material? 8. Question number 8 in study material. Okay, question number 8. See there, this concept is called as intraday NAV. Which NAV? Intraday. One day to another day. Okay, one day we will calculate, another day we will calculate, and then intraday trade we will see. See there what will happen. There is a mutual fund. Sir, how mutual fund works? If you understand, 90% of this answer is over. See here. See the question, see me. Whenever you go to mutual fund, you will take money and give to mutual fund company. Mutual fund company will not invest money. It will give you units immediately. What it will give you? Units. What they do with money? None of your business. First point number 1. They don't even have any responsibility to tell to you. If not to me, to whom they will tell? SEBI. That's why mutual funds ki SEBI regulations are there. Okay, so you need not be worried. Performance of mutual fund you worry. Management of a mutual fund, whether they are doing correctly or not, fraud is there, all will be looked after by SEBI. SEBI is the regulator of all mutual fund companies in India. Listening? SEBI, mutual fund invested in a stocks. Those stocks are performing well or not performing well. For that you cry. I will not say no. Whether mutual fund is doing fraudulent activities, correct activities, manipulative practices, insider trading, none of your business, SEBI is there. Listening everyone in the class? Now listen to the main point. Let's come back to the story. Every time whenever you go to the mutual fund, what will happen? Mutual fund will first take money from you. For the money taken at the prevailing last day NAV, they will issue units to you. Because NAV will be calculated every day end. What I said? Total you tell. NAV will be calculated at every day end they will calculate. And today what is the date? 29th of August. Okay, I came to mutual fund. Mutual fund, I wanted to invest, I said. They will tell, yes sir, please come. How much you wanted to? 30 lakhs I want to invest, I said. I gave a check worth 30 lakhs to them. Immediately what they will give me? Units they will give me. What they will give? Units they will give for the 30 lakhs given. Listening everyone. At what rate NAV? I came by 1 o'clock, 1 o'clock in the afternoon. Market closed by 3:30, 3:15, like that it will go. Randomly they are closing now. 3:30 it closed. At the market close, 1 hour after, they will calculate NAV for that day. That means I came before calculating NAV or after calculating? Answer. Therefore, I will take the NAV of the last previous day. Listening or not everyone? So, previous day's NAV we will take. And I will tell, last day NAV is 100. You gave me 30 lakh rupees. 30 lakh divided by 100. 30,000 units I will give you. They will tell me. Are you understanding the point or not? Now tell me what they gave me. What they gave me. How much money I gave. What they are going to do with my 30 lakhs. That we don't know. Okay. In that 30 lakhs, they may invest in stocks. They may hold it as cash. They may use partially in the stocks and partially they may hold in the form of stocks. Anything they can do. Who can do? Mutual fund management can take care. Everyone understood up to here clearly. Yeah. That's what happened in this question. Read the question first. 1 minute time to read the question. Read the question first. Okay, now tell me, this particular mutual fund on 1st February had how many investments? This mutual fund had how many investments on 1st Feb? What are they? L, M, N, P. Can you calculate the NAV for 1st February or not? Calculate. 20,000 into 20, M plus. 30,000 into 312.4, M plus. Like that, 4 M plus you calculate and calculate the MRC. How much you got, sir? 78.84. What is 78.84? NAV on which date? If I come to the mutual fund on 2nd February to buy the units, you will turn my money into units on the basis of what NAV? Read the situation. Read the situation. Don't sit idle. Read the situation. What happened? Mr. A submits a check of 30 lakhs. That's why I said 30 lakhs. A submitted check of 30 lakhs. Okay. Next, fund manager purchased of this company purchases 8,000 shares of M Limited. This is the catch point. Tell me, how much money I have given you? You are fund, I am a customer. Tell me, I gave to you and I gave you how much money? What you have to do me? Issue the shares, issue units. Units on what basis? Previous day NAV. Take calculator. 30 lakhs divided by some 50, what number you said? 70.84. Do that. 38,000. 51.752. 38,050. What is 38,052? Number of shares are units. Units you will give me. I took my units, I went. What you are doing with my money now? Tell me. In that 30 lakhs, whatever I gave you, you bought 8,000 shares of M Limited. You bought 8,000 shares of M Limited at the previous day closure price. Since on the day price they didn't give, they gave closing prices. Take the previous day closing price. 8,000 into 312.4. 24 lakh 99,200. 24 lakh 99,200. You tell me. Take 30 lakhs on calculator. How much money I gave you? 30 lakh. In that you invested only how much? 24 lakh 99,200. Balance is 500,800. 5 lakh 800. 5 lakh 800 is what? Cash. That's the concept. So tell me, second day NAV, if I ask you to calculate, how you will calculate? Tell me. Second day NAV, how you will calculate? 20,000 into 20.5, 38,000 into 360, 20,000 into 383.1, 60,000 into 503.9 plus 5 lakh 8,000 divided by 6 lakh 38,052. Understood or not? Do the calculation first. Eighty-one point 81.47 48 80 82.26 somewhere might have gone wrong. Others also cash you taken? You have taken cash? You have to take cash 5 lakh 800. Tell me how much is NAV? Everyone? 82.26. Okay. Next. Listen. Please listen carefully. Next. So listen. In this mutual funds, the concepts are NAV. First concept is NAV. That we completed now. Okay. Next concept is expenses of mutual fund. Which is it? Expenses of mutual fund. Okay. See my question there in question number 18. See the question. You do one thing. Then 18. Take question number 8. not in study material, on the screen. I don't know in the study material whether this question is there or not. If there, you let me know the number. One year expenses are very good then. Which one? One is like 8 or 9? 8. Okay, see there. Mr. A can earn return of 16% by investing in equity shares on his own. Now he is considering a recently announced equity based mutual fund scheme in which initial expenses are 5.5%. Annual recurring expenses are 1.5%. How much should the mutual fund earn to provide Mr. A return of 16%? Is the question. Read the question first. 2 minutes here, we can complete the answer directly. Please show some effort, we can complete. Okay, well, first see here. So the concept is, listen, read the question, simple concept, listen carefully. If I invest directly in the market, every rupee whatever market gives will come and stand in my pocket. But if you invest in a mutual funds, there is a problem of expenses. When you enter initial expense, every year annual recurring expense, these all will reduce the return of mutual fund, increase the return of mutual fund. Reduce or increase? Tell me. Mutual fund gave 16%, market gave 16%. Whether I invest in stock market, whether I invest in mutual fund, both are same or not? Not same. Your 16% and my 16% will never be same, because my 16% is with no cost, your 16% is having a cost here. So therefore, answer my question. Your 16% is not equal to my 16%. If you want to be indifferent with me, you should get more than 16. Correct or not? How much you should get is a question now. Did you understand what I said? Tell me. If you directly invest in the equity fund, how much return you will get? 16? 16% answer is there. 16% for every 116 rupees. How much you will get? 16 rupees for every 100. Very good. 100 ki 16. In mutual fund, when you go inside with 100, you can invest entire 100. You can invest only lesser than 100. Less than 100, how much only you can invest? 94.5, because how much amount is gone in the form of initial expenses? 5.5. So listening up to here, everyone, tell me now. I repeat one more time. If you invest in mutual fund, how much return you will get? Directly invest in equity market, how much you will get? 16%. Per cent. Cent means how much? 100. Per 100 you will get how many rupees? 16 rupees you will get. I want the same 16 rupees also to come in mutual fund. But not on an investment of 100, on an investment of 94.5. So please tell me. Rupees 16 divided by 94.5 rupees. Loudly. 16 point? Tell me. 16.93 mutual fund versus 16.93 equity fund. Both are same. Correct? Wrong. Still there are other expenses. What are the other expenses? Annual expenses 1.5. Tell me totally now. 18.43. Now you tell me. Mutual fund gave 18.43. Equity gave 16%. Both are equivalent now. That is right. This is the question and answer. So understood the question and answer clearly. Yeah? Tell me. Whenever you go into the mutual fund with 100 rupees, you can invest entire 100 or less than 100. Less than 100. What are deducted? Initial expenses will be deducted. Along with that, what also will be collected? Annual recurring expenses are also will be collected. So that deducted, calculate and then add the recurring expenses and then tell how much return it has to give. I ask you to do 9 Question number 9, 1 minute time. See this, not in the textbook, here. $12.64. Everyone got the answer? 12.64. Everyone, I'll ask, tell the logic. If I invest in market, how much I will get? 10%. And how much I am investing? 100. On that, how much you are getting? In a mutual fund, you will invest 100 or less than 100. How much is eat in the form of the initial expenses? Until you should get the 10 rupees for an investment of 100, you should get the 10 rupees on an investment of 94. Tell me, 10 by 94. That itself is not enough. Again, another expense is also there. What is that? Recurring expense. How much is a recurring expense? Totally? That's all, answer over. That's how you need to calculate. The meaning. Don't mug up the formula. Did I use any formula now? No. That's why I'm telling you how that came. Such that you will ever forget. Easy for you to write the answers in exam as well. Up to here, everyone understood clearly? Yeah? Done. We have completed mutual fund expenses also. Okay. I have one question. This question is there in study material if I am not wrong. Very important. This attempt you can also expect this for 4 marks. Question number 17. I think it is there in study mat. It is there, kada? It is there? It is there. Yes, I remember that it is there in study material. Very good question. Shall we do? Everyone, see the question. ANP plan, a hedged fund, currently has assets of 20 crore. CAX, the manager of the fund, charges a fee of 0.1% of the portfolio asset. In addition to it, he charges an incentive fee of 2%. Incentive will be linked to the gross return each year in excess of the portfolio maximum value since the inception of the fund. Maximum value achieved so far was 21 crore. You are required to calculate the fees payable to CAX if the return on the fund turns out to be 29%, 4.5% and minus 1.8%. Read the question first. Easy and very easy. Just you need to understand the idea behind, that's all. Okay. Now tell me. This question is on mutual fund managers payment. Mutual fund managers payment. Tell me, mutual fund whether performing well or not performing well will be completely dependent on the skill of fund managers. Okay. Good fund managers, fund raise will very well. Bad fund managers, a fund will fall like anything. Sorry. I will give you one example. Yeah. Shall we? I invested in so many mutual funds. Lakhs of rupees I invested. SIP also I invested. Mutual fund recently I invested in HDFC Quant. It's HDFC Quant, SBI Quant. I invested in that. Return, do you know how much it is giving? 27% return. How much? 27 or 25% return it is giving. You can invest in that such that the mutual funds will give a good amount of return. Just for sake of explaining to the students as to how the markets are running. 2 funds are there. See there, it came. I sent screenshot, no worry. Oh, now this time, see, 123 time now. Okay, see here. I just invested only for the sake of, what to say, I wanted to test how mutual funds are working. Through PhonePe I invested. Okay. So when I started investing through PhonePe, it invested 179, it became 233. See, what is the returns that this is giving? How much? 19.36 SBI Cont, SBI Contra. Okay. So see here, this is a situation. And there is another fund, HDFC Small Cap Fund. 49 invested became 58, 69, 16% return. On an average, around 18 to 19% returns they are giving or not? If you put in FD, how much you will get? 6%. That is TDS. This has a TDS. No, growth don't have TDS. If I sell, then the problem will come. Okay. So therefore, my point is, mutual funds are working well or not working well means, yes, they are working well only. Just for the sake of explaining to the students, I invested 1,30,000 to show them the growth. How much the growth is going on in the markets. It went up to 180, 120 invested, 180 it became. Almost 1 year time this all happened. 20% return almost on an average. Summary is very clear. Mutual funds will perform well because managers are well knowledgeable persons and well versed in the markets. They only make the investments in mutual funds. Listening. So once they make investment, we will pay fees. That's what they also said here. What they said is, today mutual funds value is 20 crore. If, next, mutual fund manager charges how much fee? 0.1 of the portfolio. So, that is a fixed fee we should pay. In addition to that, he charges incentive fee of 2%. But when we will pay that incentive? If the gross return each year in excess of portfolio maximum value since inception of the fund, if it become 21 crore. Okay, na? Now take calculators. Very easy. Take calculator. What is the amount we invested? Loudly. Okay. What is the return in the first case? What is the return in the first case? And there is a growth in the mutual fund investment by 29%. Tell the revised value of the portfolio. 20 plus 29%. Tell me how much it is. Tell that number. 25.8. What is this 25.8? It is the value of the portfolio if return happens to be how much? 29%. Now tell me, what is the maximum value achieved so far? Beyond 21, how much is there? 4.80 crores. Correct? On this, I will pay 2% fees, he is saying. Start from the beginning. First one, tell me, everyone take calculators. How much is the total fund value asset today? How much is the return in the first case? My 20 crore portfolio becomes how much? 25.8. 25.8 is how much higher than 21? On that 4.8, I will pay you an incentive fees of how much? Calculate. 9,60,000. Already you are getting a 0.1% of the 20 crore, means 2 lakhs. Means what is the total fees I will pay you? 11,60,000 in the first case. Understood the point, everyone? Second, what is the return in the second case? Take the calculator. Take calculator. 20 crores plus 4.5%. 20.9. Here how much? 21. It is crossing the maximum value or not crossing? Therefore, will pay na, will not pay na? Will pay. Fixed payment of 2 lakhs we will pay. Asal minus 1.8, forget about it. Only fixed payment. That's our answer over. Tell me the 3 answers now. 11.6, 2 lakhs, 2 lakhs. That's the answer. You can see the study material now. Okay? It is there, everyone? Okay, next. Sir, okay, we'll close here for the today's session. Tomorrow's session will continue. Another 1.5 hours like today's session. We will first continue with the mutual funds because some students are waiting there. So, we'll first complete mutual funds balance 1.5 hours because we have 2-3 big problems in mutual funds are there. Mainly one question will be there. Constant ratio plan. Sunidhi, you know how to do that? And not schedule. Normally you know the logic. Tomorrow you will see the logic. Where a level logic will be there. You will never forget in life. So that question we will do. Hey, I didn't complete 1 minute. So tomorrow we will complete the mutual funds first. Once we complete mutual funds, directly, see that we will go to the chapter called as derivative options and futures. And that I will consider last part. Today securities and tomorrow risk management. So thank you very much. Bye bye.